Okay, so hello everyone, good morning. Online students, can you please confirm whether audio and video is fine? If yes, we can immediately get started. Okay, so waiting for confirmation from online. Is audio and video fine? One second. Okay, so fine. Sorry for the delay, since this is the first class, a little bit time have taken to set up the live and all. But tomorrow onwards, we'll start it on time only, don't worry. Okay, so fine. So the subject which we will be starting is nothing but corporate financial reporting. Can anyone tell me what is the paper number for corporate financial reporting? Which paper? Paper number 18. Just a minute. Okay, fine. It is very simple. It is paper number 18, corporate financial reporting. Okay, fine. I think you are already aware of the paper pattern. So we'll quickly check the paper pattern. I think we all know that. Question number 1, what they will ask? In question number 1, what they will ask? Question number 1, you don't know? Okay, we'll open that. Question number 1, like I think same as your inter only, they will ask MCQs. So we will be having 15 MCQs. Okay. Each MCQ is having 2 marks weightage. So total 15 into 2, we will have 30 marks for MCQs. Okay, there is no choice for MCQs. Okay, fine. There is no choice for MCQs. Okay. So first question, MCQs will be there. Total 15 MCQs you have to attempt. There is no choice in MCQs. Next we are having question number 2 to question 8 we are having. So total 7 questions will be there, out of which you have to attempt any 5 questions. Okay. This is very basic pattern. In all subjects they will follow similar pattern only. So it is very easy for you. But specially what we will be doing is, this is a paper analysis of past paper. All the past papers have been compiled here. If you observe, just exclude this December 2025, which is the recent attempt. If you exclude this December 2025, you can check all other attempts. For example, June 25, December 24, June 24, December 23. If you analyze these 4 attempts, okay, you will understand each question we are having subparts. For example, 2A, 2B will be there, 3A, 3B, 4A, 4B. But 5th question and 6th question, there are no subparts. Okay. Similarly, we will have 7A and 7B. Last question, we will have 3 parts basically, 8A, 8B, 8C. Okay. If you just check once again. So 2A, 2B, 3A, 3B, 4A, 4B. 5th and 6th, we don't have any subparts. Whereas if you check question number 8, we will have 3 subparts. Okay. We will slowly analyze the syllabus pattern and everything we will slowly analyze. But I think you guys are basically aware of the fact that this corporate financial reporting contains accounting standards, correct? I think in your inter you are already aware that we are having accounting standards. Okay, can anyone tell me few accounting standards what you have remembered then? Okay, any ASS. I think in group 1 also it is there, group 2 also it is there, correct? Just tell me any ASS what you have remembered. Sorry? Inventories. Oh, very easy standard. What is the standard number? Very good. AS2 we know. Inventories. Okay. Next, any one standard? Revenue recognition. Okay. It is AS7 basically. Okay. We have 2 standards. AS7 is also there and AS9 is also there. Both are from revenue recognition only, if you remember in your old intermediate days. Okay, fine. But whatever standards which we are learning now, they are not accounting standards. They are not normal accounting standards. They are updated version of normal accounting standards, which are popularly called as Ind AS. Okay, sir, why we are learning this Ind AS also, you will understand a little later. But just you have to understand that your syllabus comprises of only Ind AS. Okay, old accounting standards are not there. But you have to remember few differences between those accounting standards and Ind AS. Okay, for the time being you can understand like this. Ind AS is nothing but it is just a polished version of old accounting standards. Okay, if you remember that much for now, it is totally fine. Okay, rest of the things we will slowly understand. But if you keep this December 2025 side, if you analyze all these 4 attempts, June 25, December 24, June 24, December 23, 2A, 2B, 3A, these 3 chapters, they will ask from Indian accounting standards. That is the standard thing which they are following. Okay, 2A, 2B, 3A. These 3 questions they will straight away ask from Ind AS. Just for the time being, exclude this December 25. Just check these last 4 attempts. You will understand all the 3 questions they will ask only from accounting standards, Indian accounting standards only. If you calculate the weightage, each sub question carries 7 marks. Okay, 2A 7, 2B 7, 3A 7, 3B 7, 4A 4B 7 each. 5 and 6 we don't have any subparts, therefore each carries 14 each. Okay, last question if you observe we have 3 questions, therefore 5, 5 and 4. Okay, if any question is having 2 subparts, each carries 7, 7. So if you calculate the weightage, then you will understand that 1, 1, 1. So 3 sevens if you observe, 21 marks they are asking from standards. Okay, so 21 marks they are asking from standards. So we should not ignore these standards, very very important from exam perspective. Okay, fine. So these 4 attempts if you observe, can you identify one common standard which they have been asking in all these 4 attempts? If you understand, what is the common standard? Huh? In all the 4 attempts, first let us check. In all the 4 attempts, what is the common standard? 36 is the common standard, correct? In all attempts they are asking, which means very 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 highest important, highest priority standard is Ind AS 36, there is no doubt. Okay, other than that if you observe, what is the second standard which is asked in many of the attempts? 16 is asked 2 times, 116 is also asked 2 times, correct? Which means this 16 is also important, 116 is also important. If you observe question number 3A, 3A we cannot identify any fixed pattern. correct? Okay, 2 times they have asked Ind AS 115, but other 2 attempts they are asking new questions. According to me, this 3A question can be a little unpredictable, but generally this 2A and 2B, either they have to, this 36 though they have not missed it even in any single attempt. But if you observe 2A question, 2 times they have asked 16 and 2 times they have asked Ind AS 116. Okay, I can just keep the analysis like this for 2A, 2B, 3A. Standards ka questions, very easy questions I can say. But if you observe, this 3A is little unpredictable. But okay, it is not that much impossible, but we can slowly understand each and everything. If you check 3B, they will only ask these 2 concepts are only there. First concept is intrinsic. Okay, let us keep this December 2025 aside. So if you observe, only 2 concepts they will test in 3A. First one, goodwill calculation. Second one, intrinsic value of the shares. Out of these 2 concepts only, they will test 1 concept. That is for sure. Okay, no doubt about it. 3B question, they will only ask either from goodwill or from intrinsic value of shares. Next fixed concept, if you observe, 4A. 4A, if you observe, here also we will have only 2 concepts. First one, financial instruments. Second one, NBFC's provisioning norms. Only these things you have to remember. 4A also, only 2 concepts they will test. Financial instruments, NBFC provisioning norms. That's it. They will not test any other new concept in 4A. That is for sure, we can predict. If you observe 4B, one common question which is never missed in any attempt. Even if you observe December 2025 also, what is the common question in 4B which they are asking? Internal reconstruction. They will never miss any question in this 4B concept, which is internal reconstruction. Always they will ask question from this. Okay. So if you observe 2A, 2B, 3A, 3B, 4A, 4B, I can say that standard type of questions which they will never miss in any attempt, I can say this internal reconstruction is the very first question which they will never miss. If you observe 4A also, financial instruments is the thing which is asked in last 4 attempts out of 5. In another attempt, they have asked NBFC provisioning norm. So this question is also highly predictable question. So then if you observe, my favorite topics, these 2 chapters are question number 5, business combination, only 1 single question. They will ask for 14 marks. This question also they will never miss in any single attempt. This is also Ind AS 103 only, it is missed actually. But 5th question, they will always ask for 14 marks. Business combination, which is covered in Ind AS 103. Next, this is also one common question which will be there in almost all attempts. You will not see any question paper without this question number 5, business combination. Highly important, 14 marker. Next, question number 6, if you observe, another common question in all the attempts. Without this also, you will never see the question paper. This is also nothing but Ind AS 110. Okay, so according to me, as of now, I can predict 3 questions for sure. Business combination I can predict, CFS also I can predict, internal reconstruction also I can predict. Next, if you observe 7A, 7B, 8A, 8B. If you check this 8A and 8B, all the items they are asking only one common thing, which is nothing but government accounting, which is compulsory sure short question. This is completely theoretical chapter. So if you are a student who only likes theory so much, this chapter is for you. Very limited coverage is there, but compulsory questions you will get. 8A, 8B, 5 plus 5, 10 marks you will easily get. MCQs also they will ask from this topic. Okay, so government accounting also 2 5 marks they will definitely ask. Last concept, if you observe, this 8C is also specifically related to this question they will ask either from business combination or consolidation. There is little bit interlinking with these 2 chapters. So they may ask a question either related to business combination or consolidated financial statements. Okay. So this is the thing which you have to understand. 8C also either business combination or consolidated financial statements. Out of these 2 chapters, they will ask any one question. So next, if you observe, okay, we have already seen these last 4 attempts. Now let us check this December 2025 ka analysis. If you observe, the first twist which most of the students have faced in December 2025, even I was also surprised by the institute way of asking the questions. If you observe last 4 attempts, all these 3 questions are never asked in last. If you check Ind AS 12 also they have not asked, 21 also they have not asked, 108 also they have not asked, which means most of the students also and most of the faculties are also surprised by the institute ways of asking the questions. If you observe, these 3 questions carries how many marks? 21 marks. Okay, 21 marks. Suddenly they have asked from new areas. Okay, keep these 21 marks aside. Next, if you observe this 3B, they have followed the same trend. They will either ask from goodwill calculation or intrinsic value of the shares. What is the thing which they have asked in December 25? Intrinsic value they have asked, which means it is predictable only. Fine. 4A, if you observe, this is also predictable area. Financial instruments only they have asked. We have already predicted that either financial instruments or NBFC, out of those 2, any question will come. So they have asked from financial instruments only. So this is also within our prediction only. If you check this 4B, internal reconstruction within our prediction, business combination within our prediction, consolidation within our prediction. This thing 7A, sorry, I forgot to say, I think 7A or 7B. This is also, this 7A topic is related to practical aspect. Only 2 topics they will check, either EVA or MVA or VAS. Only these 2 topics will be there. VAS is nothing but value added statement. If you want, you can write VAS, value added statement. Value added statement. And this EVA is nothing but, I think in your SFM it will be there, EVA and MVA. These are nothing but economic value added. And MVA stands for market value added. Okay, no need to copy, just for understanding I have written, but if you want you can copy, no problem. Okay, so this is a little practical aspect, very predictable question. Only 2 concepts they will test. First one, value added statement. Second one, economic value added or market value added. And they have also asked in from this only predictable area, economic value added and market value added. Fine. This 7B topic is completely theoretical. Standard questions they will ask. Okay, theory, it is little big theory, but this can also we can predict. 7B also. 8A, 8B, 8C from predicted areas only they have asked. 8A, 8B always government accounting only. They have also asked government accounting only. 8C also, if you observe, little bit Ind AS 110 linkage will be there, but that is also not that much impossible kind of a question. Okay, I have already said this number of times. What I will trust is, there are always high chances that if institute wants to trick, they will trick only in these standards. Okay, how many questions you have practiced, they will do little adjustments. There are attempts where they have asked very basic questions in these attempts also. In these 3 questions also, there are many instances wherein institute have asked only basic questions. There are some instances wherein institute have tricked many students in these 3 areas. But to be on a safer side, I can say that whatever the questions, whatever the tough adjustments institute want to ask, they have already asked it in this business combination or this consolidated financial statements, which means they cannot frame any new question out of these 2 areas. Whatever the questions which are there in our material, if you cover those, there is only 0.1% chance that any new question will come from outside. Okay, but again I am saying these 2 questions, whatever tough they have to ask, they have already asked. So on a worst case, they will only repeat those adjustments, which means 14 plus 14, 28 marks are there in your pocket. if you practice these two questions, 28 plus if you observe this also will be there. So 28 plus 4 total 32 marks will be there. 32 marks plus definitely 4 MCQs they will ask. Minimum 4 MCQs they will ask from these two chapters, which means 32 plus 8, 40 marks you will easily get. If you ignore all others also. If you ignore all others also, easily you will get 40 marks. Okay, so getting 40 in CFR, even if you don't want, you will still get 40 marks. Okay, so that is not our objective. So don't settle with only 40 marks in corporate financial reporting. Because I can say that this corporate financial reporting is nothing but a sure shot exemption paper. If you are writing both groups also, this will help in clearing both the groups. Even if you are writing a single group also, there are high chances that it will give you exemption and it will help in clearing the total group also for the sure. Okay, so stay with that mentality only. Second type of students, what they will do is, whoever they are good at theory, they will prepare these theory questions nicely. Theory means this 7 marks you will get, this also 7, this also 7. So 3 7s, 21. 3 7s, 21, and next, see, this is very predictable question. Correct or not? Only internal reconstruction they are asking. 4A also, if you observe, predictable question, which means 21 plus these two questions plus 14. So total 35 marks are there in your pocket. Even if you just check past paper, even if you just check past MCQs also, easily you can able to attempt at least 8 MCQs for sure. Repeated MCQs, there are high chances to be asked in the exam. Of course, some MCQs, like for example 2 to 3 MCQs, they may ask new, but rest of the MCQs, basically they will ask from repeated set only, which means even if you prepare this theory part, even if you prepare this theory plus these two questions plus MCQs alone, and if you check this part also, EVA and MVA, this is also predictable area, another 7 marks will be there, which means minimum again you will get 42 to 45. Whatever strategy you follow, you will aramse get 42 to 45. That's what I'm saying. Even if you don't want, you will still get 40 to 45. That is for sure. If you just keep little bit efforts, easily you will get 80 also in CFR. 80 is also very simple. But you just have to be strategically prepared. Okay. So this is my observation from the recent attempt, which is December 2025. Since they have asked these 3 questions unpredictable, whatever rest of the paper which they have given, that is complete easy paper. Okay, this business combination, very basic question. We will understand. I will definitely explain all these questions also. So whatever the questions which they have covered in December 2025 also, we will cover whenever we are discussing respective chapter. But my point is, basic questions only they have asked, because these 3 questions are new to us. Therefore, they have given rest of the paper very easy. But some students, I know that most of the students will take these 2 choice. So students who have really taken these 2 chapters choice, they have suffered a lot. But even if you watch my revisionaries also, which I have uploaded with respect to these 2 chapters, I have been saying number of times, don't take these 2 chapters choice. Today also I will say the same thing, because these 2 chapters are only the saviors of the last attempt. Not only this, if you observe any of the attempt, the thing is, whatever tough questions they have to ask, already they have asked. They will only repeat those questions. That's it. Okay, unnecessarily most of the students are making complicated themselves only by taking these 2 questions as choice. But you will not do that. I already know that. Okay. So fine, this is the past paper analysis of all the 5 attempts, we can say. This is totally fine. But what we will be doing is, no need for you to write this. I will share this soft copy with you if you need. So don't worry, no need to copy this. Okay, so let us come to chapter wise breakdown of our syllabus. Okay, this you can write somewhere. This is also there in your study material only, your board book only, this is there. But if you want, you can write this thing. Okay, so whatever the paper pattern which I have discussed, the same thing has nicely given, how the institute have broken down the syllabus, that is given here. Okay, so first I will explain, then you can copy. The institute have divided totally into 6 sections they have given. Okay, so first section A is nothing but Indian accounting standards. 2A, 2B, 3A, they will ask only from these Indian accounting standards. Okay, second thing, if you observe, they will ask about valuation of shares, accounting and reporting of financial instruments, and NBFCs. Okay, if you check now, this 3B is nothing but share valuation. In this share valuation only, we will also learn how to do the goodwill valuation also. Okay, so 3A they will ask from share valuation. If you observe 4A, reporting of financial instruments and NBFCs. See, if you check this 4A, there are high chances either financial instruments or NBFCs. So both are categorized into section B. I will give time to copy, don't worry. Section C, if you observe, we are having business combination also and restructuring also. This restructuring is nothing but internal reconstruction. Okay, this restructuring is nothing but internal reconstruction. Section D, if you observe, consolidated financial statements and separate financial statements. Section E, recent developments in financial reporting. Just be familiar with these names. Nothing I have explained till now. If you observe, I have not explained the meaning of financial reporting also. Correct? We are just discussing the paper pattern and we are just aware of whatever the syllabus which is there. Section E, recent developments in financial reporting. This is covered in 7th question basically. This 7A and 7B are from this section 5, which is recent developments in financial reporting. Section F is nothing but government accounting in India. 8A and 8B they will ask from these two areas. Okay, fine. So here if you want, I will write like this also. Indian accounting standards they will ask from 2A, 2B and 3A. Okay, this valuation of shares ka part they will ask in 3B and 4A. This restructuring they will ask in 4B. This business combination they will ask in question number 5. Consolidated financial statements, question number 6. Recent developments they will ask 7A, 7B. Government accounting 8A, 8B. 8C they will ask either from section C or section D. Okay, so please copy this. While copying, just make these names of the chapters familiar with you. Okay, so section A, Indian accounting standards, valuation of shares, accounting, reporting, accounting for business combination, all these topics I will just give 2 to 3 minutes of time. Please copy all these 6 sections along with the names also, and just try to remember, just try to go through what these talk about. Still I have not explained the meaning of corporate financial reporting also. I will explain everything. Just copy this part. If you have already copied, just go through these names just to make yourself familiar with these topics. Right now you have to write the full names of this: consolidated financial statements, separate financial statements, recent developments in financial reporting, government accounting. All these you have to write full names. But once we have started these chapters, I will also discuss the shortcuts also, which you have to write. Okay, if I discuss those shortcuts now only, you will never remember these things. Okay, so that is the reason. Write fully. I will discuss the shortcuts later. Online students also, have you copied this sections F, section A to section F? Have you copied? If yes, then we will move further. So those who have copied, can you calculate and tell me for how many marks our paper will come, including choice? How many marks? 128. Okay, very good. So from these total 128 marks, how many marks we have to get to pass? Only 40 marks. Even in worst case also. Even in worst case, if you just only do selected study also, still you can get 40. Okay, so that's what I am saying. Getting 40, especially in this CFR. Even if you don't want also, still you will get. If you just listen to classes, just do some practice, you will easily get that 40. Okay, but my objective is never to get 40. My objective is minimum you should get 90 plus. Okay, 80 to 90, that should be your objective. There is no doubt about it. While going through the curriculum, you will slowly understand how much easy it is. Unnecessarily, you are only making it complicated. Sir, how we will make complicated? First of all, we won't listen classes. Second, we will listen, just listen. We won't participate, we won't do anything. Third, we will listen, we will respond, but we won't practice. All these three you have to do, then only you will get 90. Easily you will get 90. Okay, accounts is very easy subject. Okay, those things I will explain when you go through the subject. Fine. See, now let us go through detailed breakdown of all these sections along with weightage. Okay, this also no need to write. I will share the soft copy, but just try to listen. What is our total weightage? Tell me. 128. From these 128 marks, how many marks you will get from these specific accounting standards? These specific accounting standards are nothing but these 2A, 2B, 3A is there. Now, complete Ind AS questions only they will ask. Complete standard questions. If you observe, can you calculate and tell me 128 into 25%? Calculators. Open calculators. This is not theory. Online students also have to respond. Otherwise, I will stop the live. I want responses. Many students are there. Are you sleeping or what? Are you there? Please respond online. Online. Okay, so 128 into 25%. How much? 30. Including MCQs also. This is the maximum weightage. Okay, this is the maximum weightage they can ask, including MCQs plus those 3 questions. If you observe, you will get 32. Okay, see, how many standards are there? Just count and tell me. How many specific Indian accounting standards are there? Just count and tell me. 12 Indian accounting standards are there. So, from these 12 accounting standards, they will ask questions from 3 accounting standards, that is for sure. Okay, sir, do we have to study all these 12 accounting standards with equal importance? Answer is no. Okay, this is not donkey work. I think you have understood the word donkey work. Okay, donkey is what we will do. How much weight you have dump, it will carry. Okay, we are not donkeys. So no need for us to give equal importance to all these standards. Okay, of course we will cover all those standards, but whatever the standards which are very, very important from exam perspective, we will cover them in very detail. For example, if you observe this Ind AS 16, 116, 36, 38, 115, okay, all these standards, so we will cover. Sir, but what about other standards? See, if you observe, highly unpredictable standards are there, na? 12, 21, 108. If you observe, those are very, 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 very in-depth standards which we have to understand. But we will not waste our time going in-depth into all those standards. See, in this attempt they have asked. But if you check the last 4 attempts, they have not even touched upon any of these 3 standards. Okay, like this, okay, some chances, some standards are there where we cannot make predictions. So that is the reason why I am saying we have to always do the complete coverage of the syllabus. Okay, sir, but what you are saying, are you saying that we will leave some miscellaneous indices? No. Whatever miscellaneous indices are there, that we will only discuss from exam perspective. Okay, only few questions we will solve. Only few questions we will solve, and whatever the concepts which are important from exam, I will cover those standards also. Okay, we will not leave anything, but whatever highly important, we will cover in depth. But if there are any other standards which are not that much important from exam perspective, we will just only go through important concept and then questions. That's it. Okay, fine. Next, 12 indices are there totally. Okay, fine. Out of these 12 indices, according to me, 6 indices you have to go in depth. 6 indices you have to go in depth. Sir, what are those 6 standards also? I will explain. If you check this Ind AS 16, no choice, we have to go very, very in depth. 116 also we have to go in depth. Next, if you observe, intangibles also, 36, impairment also we have to go in depth. Next, 115 also, very, 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 very important standard. Okay, but see, 102 also is little bit important. Whatever the standards which they have asked in last attempt, if you check Ind AS 12, 21, okay, 108. These are B category standards only according to me. Sir, but in the last attempt they have asked. Yes, only in the last attempt only they have asked. But most of the students, I can say that 90% of the students have failed to study these 3 standards. But all the 3 have come at once only. This will not happen in all attempts. Okay, only 1 attempt out of 5 or some 4 attempts they can ask these type of questions. But okay, we will not leave anything, we will cover, but not that much in depth. But whatever the other standards which are there now, Ind AS 8, I can categorize this as C category. Ind AS 8, 23 also little bit C category I can say, and this Ind AS 113 also I can say C category. This kind of category analysis also I will provide later. But first what I am trying to explain is, out of this 12 indices, out of this 12 indices what are there? We will only cover, in depth we will cover few indices. Okay, in depth means, how many indices we will cover is basically some 6 indices we will definitely cover in depth. Other than 6, whatever other standards which are there, we will just study only those things which are important from exam perspective. Okay, and we will devote more time to solve the questions. Okay, fine. Next thing, section B, if you observe, this is, I have taken only from your study material only, so no need to copy, just listen what I am saying. Section B, if you observe, we have 3 aspects. First one is valuation of shares, accounting of financial instruments, and third one NBFC's provisioning norms, accounting and reporting. Section C, accounting for business combinations and restructuring. See, this is the weightage which is also given by the institute only, but there is no hard and fast rule that always they have to follow this. No, it is not like that, because these are professional exams going on. We cannot select only few things and I can predict only this. No, it may not happen always in all the exams. Okay, sometimes we can predict, but This weightage, even though this is given by the institute only, there are high chances that institute only will follow this or not. Okay, but little bit deviations. For example, out of this 15, they may give 18% or they may give 12%. Like this, here and there, they will make the adjustments. Okay, so section C, this I have just given the detailed breakthrough of all the concepts which are there in business combination. This no need for you to remember. Okay, this we will cover whenever we will move to respective standard. But this section C weightage, how much they will cover? 20% of the total weightage. Total weightage means 128 you have to calculate. 128 into 20%, how much it is? 128 into 20, 25 approximately. Similarly, consolidation also 20%. How much? 25, huh? So 25. Recent trends 10%, government accounting 10%. Okay, so that's it. So today we will not discuss more. We have just observed the paper pattern. Okay, if you observe, see here I have only discussed descriptive part. Sir, what about MCQs? MCQs, if I just explain here and there, it may not make a meaningful analysis. Okay, so somewhere they will ask Ind AS, somewhere they will ask government accounting, but trend we can identify. That trend also, even if I say now only, you will not understand anything. So that is the reason why I have discussed only descriptive part here. Okay, so how many questions we will have? Question 2 to question 8. 2A, 2B, 3A, they will ask from Ind AS only, specific Ind AS only they will ask. So according to me, little bit trickier part is these questions only. I am not saying these are impossible, no. Little bit trickier, that's it. Okay, if you observe 3B, same kind of question they will ask. Either they will ask goodwill calculation or they will ask intrinsic value of the shares, that's it. 4A, only financial instruments or NBFCs. We can easily predict this. 4B, there is nothing, no attempt they have missed this internal reconstruction. Always they have asked this concept. 5 also, business combination, always they have asked. 6 also, consolidated financial statements, always they have asked. Okay, so 7A, 7B, if you observe, recent trends in financial reporting topic they have covered. Okay, so EVA and MVA. And this also a little bit theoretical part. And if you observe this last 8 question, 8A, 8B, 8C. Okay, so 8A and 8B they have asked about government accounting, and last 8C little bit interconnection between Ind AS, business combination or consolidated financial statements. Okay, so that's it. We have not discussed anything much. We have just analyzed the paper pattern. If you want, I will share this soft copy in the group. But what you just have to check is this, go through the chapter breakdown once again. This is already there in your institute workbook. Okay, just download the workbook for the timing, or no problem, I can share this also as soft copy. Okay, just go through whatever I have written. And your work for today is basically you just have to remember these standards names. That's it. These standards names are little bit fancy. If you just observe the names, accounting policies, accounting estimates, errors, leases, effects of changes in foreign exchange rates, impairment of assets, share-based payments, operating segments, revenue from contracts with customers. Just don't worry about the meaning because you don't know anything. Just these names are little bit fancy. So just go through these names and try to remember the Ind AS names. That's it. Okay, fine. Just remember the Ind AS names and then just go through the section wise pattern and all. Okay, so that's it for today. Till now, I have not explained what is the meaning of corporate financial reporting. We don't even know the name of the subject also. Okay, all those things will be continued in the next class. So tomorrow I will explain why we are having 2 standards, because in our inter we have studied accounting standards, but suddenly in final why we have to study something which is called as Ind AS. Okay, so all those reasons and all, what is the reason for the introduction of Ind AS, and do we have to know both AS also and Ind AS also in practical life? Okay, and all these things we will continue in the next class. Okay, but so today what you have to do is just go through this section, standard names and standard numbers. Okay, so just you have to remember that thing. So on balance things we will continue in next class. అర్థం కాల Okay, so listen. Good morning. In last class, we have just understood the paper pattern. We have analyzed almost last 5 attempts and we have tried to predict the trend. Okay, so we'll just quickly see what all the things which we have covered in last class and we will start further. Okay, so if you observe, we understood that first question we will be having MCQs. So 15 MCQs will be there. No choice in those MCQs, that we have understood. And then if you observe question number 2 to question 8, okay, so total 7 questions are there, out of which we have to write any 5 questions. Okay, and then we have understood this 2A, 2B, 3A, they will ask from which topic they will ask? They will ask from specific Indian accounting standards. Okay, this 3B part we have understood, either intrinsic valuation of shares or goodwill. Out of these 2 topics, they may ask 1 question. If you check this 4A also, only 2 aspects they will test, either financial instruments or NBFC provisioning norms, out of which almost in 4 out of last 5 attempts they have tested only financial instruments concept. But if you check 4B, the thing which they are testing is basically internal reconstruction. And if you observe this question 5 and 6, not even a single attempt they have skipped. Even if you observe this 4B, 5 and 6, all these 3, okay, all these 3, even in any one of the attempt also they have not skipped any question. And then if you observe this 7A and 7B, it is about, we have understood that this 7B, 8A and 8B, all those 3 are basically government accounting also theoretical portion. Okay, so last concept if you observe, it is also, we have interlink between this business combination and consolidated financial statements also. So this is the thing which we have covered in last class, and I asked you to remember these section names in last class. Okay, so let's once again quickly go through this. I have not explained all the things in this standard, but I just ask you to remember the content. I mean, what is the name of the standard and what is the standard number? Okay, so let's quickly check this and then we'll move to the introduction part as to what is the meaning of corporate financial reporting and why we are having 2 set of accounting standards and all we will discuss slowly. Okay, so just a minute. Okay, so check this. So the first standard which is there in our syllabus is nothing but Ind AS 8. So here what they will say is, if there is any accounting policy, if there is any accounting estimate, and if there is any prior period error, you have identified that one error is there in previous years or even in current year also. So how to rectify that will be explained in this Ind AS 8. Okay, so details I am not going, I am just explaining the basic thing only. Details we will have when we discuss the respective standard. Okay, so check this. Income taxes, it is covered in Ind AS 12. Okay, so have you ever heard the name which is called as deferred tax? Anyone? What is the meaning of deferred tax? Tell me. There is no right or wrong. You can just respond. Very good. Super. So I think you guys have already know that as per accounts, the treatment will be different. As per books of accounts and as per income tax, the treatment will be different. If you observe, the very fundamental difference is depreciation. If you observe, we all know that depreciation as per accounts is different and as per income tax is different. If you remember, we will follow block-wise depreciation in income tax. Block-wise depreciation, and we have to follow only WDV method of depreciation. SLM is allowed, but only for few entities only SLM is allowed. So for most of the entities, what you have to choose income tax, depreciation, that is also block-wise only we have to choose. Okay, so more details we will go later, but currently what you have to understand is, because of the differences between accounts and income tax, there is a difference in your tax liability. So there may be chances that you have to pay more tax in the future, or there are chances where we have to pay less tax in the future. In both these cases, whatever the difference which you are getting, that is because of one item which is called as deferred tax. Okay, so how to do the accounting and all we will understand when we discuss this respective standard. And next, if you observe this PPE, what is the full form of PPE? PPE is nothing but property, plant and equipment. I think this we already have one accounting standard in your inter level also. Okay, so same to same, almost 90% of the standard ka content is copy paste. But this time we will try to understand in a more logical manner. So this PP is also very easy standard, and we have understood this is an A category standard because high chances that question have to come from this area. Okay, so next if you observe leases. Okay, I think this leases also we have similar standard in your inter level. So can you tell me how many types of leases are there? Very good. So we have operating lease and financial lease. So similar kind of standard, but as per Ind AS, this is very comprehensive standard. So whatever you have studied at inter level, at that point of time, whatever you have studied is correct. But when it comes to this Ind AS, it is very comprehensive standard. And according to me, at CA final level, if you observe, this Ind AS 116 and this Ind AS 115. Very comprehensive standards. But our institute CMA is not asking that much next level questions, but in future they will definitely ask. Okay, so we should not take any choice in this. We will try to cover the maximum portion of these standards, which is Ind AS 116, Ind AS 115. These are very important because these are recently drafted standards. Recently as in these are drafted some 4 to 5 years ago. Okay, so very latest standards, this 116 and 115, so highly important from exam perspective. Next, if you observe, this effects of changes in foreign exchange rates. Assume you have purchased any goods from foreign currency. Assume you have purchased any goods from foreign person. So obviously you have to pay in foreign currency only. On the date of purchase, it is the foreign currency, the exchange rate may be different. On the date of payment also exchange rate will be different. So how to do the exchange loss and gain, what is the accounting treatment and all will be explained in this standard, which is Ind AS 21. So similarly, if you observe this borrowing cost also, I think this standard is also there at your inter level, borrowing cost. So if you remember, qualifying asset will be there. So whatever the borrowing cost which is related to that qualifying asset should be capitalized and all we have learned in inter level. But no problem, even if you don't know anything, I will try to explain from the very basics itself. I will assume that you don't know anything only. So from on that aspect only we will continue. So this one Ind AS 36, I think this is complete new standard to you. You have not heard this term called impairment earlier, correct or not? Have you heard anyone? No. Okay, so impairment is very important standard. We have to learn in depth with respect to this part. Intangible assets 38, I think this also is there at your inter level, intangible assets. Okay. Another new standard, share based payments. This is also very important standard which is covered in Ind AS 102. Ind AS 102. Okay. So next also these two segments are also, I think these two standards are also completely new to you. అయితే విండోస్ ఓపెన్ చేస్తారా ఆఫ్లోనే ఓపెన్ చేయండి. ఓకే, సో దిస్ 108 and 113 and the last standard is nothing but revenue from contact with customers, Ind AS 115. Okay, so fine. These topics I will cover only while we'll discuss the respective topic, but basic overall view I can give. Section B, if you observe, we have basically three aspects: how to do the valuation of shares, what is the meaning of financial instruments. This is also very comprehensive standard. Basically this will be covered in Ind AS 109. Okay, so this also we have to understand in depth. There is no choice in this also. And NBFCs accounting. NBFCs is very simple. If you remember in your inter you have something which is called as banking companies. Okay, so have you remembered the word NPA? NPA, what is the full form of NPA? Non-performing asset. Okay, so how to do the provisioning for that? If you remember, there are specific percentages, some 0.4%, 0.25%, 1%, okay, 100% if it is a doubtful asset, if it is a loss asset, like this some percentages will be there. Even the similar type of percentages also will be there in this chapter also, which is NBFC. Okay, so this is also fine. These are very, very in-depth, which we have to understand. So these are my favorite chapters, this section C and section D. Consolidated financial statements and business combinations. I have been saying from the starting itself, these two chapters, whatever tougher questions they have to ask, they have already asked it in the past. So same repeated questions only they are going to give in your exam also. Okay, so you have to understand these topics also very nicely. We will cover them. These two are theoretical topics. In this, one practical question will become, if you observe, I have already explained in the last class that here they are going to cover EVA and MVA. Okay, what is the full form of EVA? Economic value added. And what is the full form of MVA? Market value added. Okay, so these two, one practical question will be there, others theory question. This government accounting is completely theoretical portion. Okay, so fine. We have stopped here in the last class. So now what we'll be doing is, let us start with the subject. What exactly is the meaning of corporate financial reporting? Okay. Online students also have to tell me what exactly is the meaning of corporate financial reporting. I'll give 1 minute of time. So whatever you feel, what is the meaning of corporate financial reporting? Please mention in the chat box. What exactly is the meaning of financial reporting? We have to understand. There is no right or wrong. So whatever you know, try to tell. What is the meaning of financial reporting? If you understand this, only then you will understand why we have to study this subject. Okay, fine. So just 1 minute, go through this and you have to tell me. You also, what is the meaning of financial reporting? Just what you know. Why we have to learn this subject, financial reporting? Hmm. Very good, very good. Some student is saying how the financial statement should be prepared and all will be understood through financial reporting. Okay, very good. Next, any other answer? Okay, online students, some students have replied that in order to understand the company's financial position, we have to study this financial reporting. Okay, that is also correct. That is also correct. Any other answers, online students? 7 students are there, but only 1 student is replying. If you don't reply, I will take out all your names. Okay, so listen, corporate financial reporting is nothing but, it is very simple. So whatever financial results of the company, what you have got, communicating the financial results. Financial result is nothing but whether the company is having profit or loss. This also we have to explain. And what exactly are the assets and liabilities of the company. So this is called a statement of financial position. And according to that, we also have to communicate what is the exact status of the entity, whether the company is having profits or whether the company is having losses and all also you have to understand. Because assume you are an investor who is having some 1,000 crores of surplus funds. You don't know where to invest. Okay, you have some list of companies Assume you have some list of 100 companies which are there. You just only know the names of these companies. Can you invest in any of the companies just based on those names? Answer is no, correct? You have to dig into details. Details as in you have to understand whether the company is making profits or losses. On this aspect also you will inquire and you will make a meaningful decision. Next, what is the liquidity of the company? What exactly is the, see, while giving share capital or while investing, you will ensure what is the liquidity status of the company, which means how many loans are there for the company. If I invest in the company, will the company be able to repay me or not? All these things you will check. On what basis you will check all these things? Definitely on the basis of financial statements. Correct? Definitely on the basis of financial statements only you will understand whether a company is performing good or bad. Whether if you invest, whether I will be able to get my money back or not. So all these things will be understood only through these financial statements. Now, since we have used the word financial statements, you have to tell me what is the meaning of financial statements. What is the meaning of financial statements? Very good. Tell me. Online students also. How many financial statements are there? How many components of financial statements are there? Please respond fastly. How many types of financial statements are there? How many components basically? I think you all know how to prepare financial statements. In your inter, I think balance sheet will be there. Profit and loss account will be there. Next, what will be there? Cash flow statement also will be there. What is the last component? Most of the people will ignore, but we have something which is also called as notes to accounts also. This is also an integral part of the financial statements. Okay. So most of the students are saying, okay, correct answer only. So the first important thing is balance sheet that you have to understand. Second important thing is profit and loss. Third is cash flow statement, and last, notes to accounts. Okay. So all these are nothing but integral components of the financial statements. Very good. Very good. All the students are responding, which means it is correct. Okay. So then what you have to write is you can start writing along with me. Okay. Online students also start writing along with me. So first let us understand what is the meaning of financial reporting. Let us write that. Financial reporting is nothing but communicating the financial position of an organization through entities financial statements. Through financial statements, whatever the financial position which is there, we have to communicate. Sir, communication should be made to whom? To all its stakeholders. To all its stakeholders. Stakeholders including shareholders also will be covered. Management also will be covered. Creditors also will be covered. And even the government is also covered. Debtors are also covered. Everyone will be called as stakeholder only. If he has any relation with the company, any financial relation if he is having, he will be called as a stakeholder only. Okay, see, this is the meaning of financial reporting. If you observe, so whatever the financial position of an organization which is there, we have to communicate that financial position through entities' financial statements. I am not saying orally my profit is 1 crore rupees. I cannot say orally. I have to present in the form of financial statements. To whom I have to present? To all the stakeholders I have to present. Okay. For shareholders, it is very important because they are the only persons who are investing in the company. Correct. So shareholders definitely have to go through this financial position. So why financial statements are important for management, why it is important for creditors, and why it is important for government? If you observe, whether the management have to plan for expansion, if the company is earning more and more and more profits, then the company may choose to go for expansion. If the company is making continuous losses, then it may follow retrenchment kind of a strategy. If any one product is continuously giving losses, so what we have to do as a management, we have to discontinue that product. Correct or not? If we discontinue that product, probably we will move into a better position. Similarly, if you are a creditor, you will understand whether to supply more goods to that person on credit or not by looking at the ratios. If you look at the liquidity ratio, if the liquidity ratio of the company is good, then probably I am ready to supply the goods on credit. Okay, see, the company has a history of not making the payments, for example, assume the due date is 30th June. The company has the history of delaying these payments by 6 months. Always it will make delays only. So am I interested to supply the goods on credit to the company? Answer is no. Correct? Simple things. Because of some ratios and all, it is important even for the creditors also. And not only these persons, if you observe the government, for government also financial statements are important because you all know that income taxes on the basis of profit only, but we have to do some adjustments and we have to calculate the income as per Income Tax Act. Okay, but what is the basis for that also? Financial statements only. Okay, so for all these entities, communicating the financial position is very, very important. So that is the reason why we have to learn this financial reporting. Okay, next thing. So next point you have to keep rules for preparation of financial statements. Rules for preparation of financial statements. Rules for preparation of financial statements. Okay. So now you have to tell me, are there any standard rules, standard formats for preparing financial statements, or you can prepare whatever you want? Is it like that, or there are standard rules or standard formats you have to follow? Schedule 3 is there, correct? Okay, so there are few rules based on which only you have to prepare financial statements, correct? So you cannot just prepare, okay, I will just like sales, some 10 lakh rupees, okay, minus purchases, some 5 lakh rupees, like this as and wish I cannot prepare financial statements. There is certain format which you have to follow. Now my second question is it mandatory to follow those rules or it is optional for the company? Which means whether if it wants, it have to follow, or whether it is mandatory that you have to always have to follow these rules and all. Always. Who said that it is mandatory? Who said that? Companies? Okay. Are you specific with whatever the rules which are there? Okay. So fine. So you already have yes, online students are also responding. We have to follow as per schedule 3. Okay. So it is totally fine. Now you have to understand most important thing that, write along with me, MCA notified the following 2 rules for the preparation of financial statements. For the preparation of financial statements. Okay. So you always have to remember, we are totally having two rules. First rule what you have to understand is companies accounting standard rules, companies accounting standards rules, comma 2006. Companies accounting standards rules 2006. Okay, these are amended to companies accounting standards rules 2021. Companies accounting standards rules, earlier we are having 2006 rules, but these are amended to companies accounting standards rules 2021. Here they will mention, if you are a company, you have to definitely prepare your financial statements on the basis of accounting standards only. Okay, so here also you have to write one thing, that see, you have to understand another thing also, that as of now, practically speaking, you have to understand that for few companies Ind AS are applicable. There are some another companies for which AS is applicable. If you are a partnership firm, then for you also, most of the partnership firms AS are only applicable. Okay, but for which companies Ind AS is applicable, for which companies AS is applicable, we will discuss a little later. But as of now, you have to understand, practically speaking, AS is also followed, Ind AS is also followed. Okay, if you do articles, in articles you may understand that for most of the entities, if anyone is engaged in preparation of financial statements and all, you will find that most of the cases you will find this AS companies only, because big listed companies and big unlisted companies also, whose net worth is very huge, whose turnovers are very huge, only for those companies only Ind AS is applicable. Okay, so currently you can remember like this: if the company is a listed company, or if the company is a big company, for that Ind AS is applicable. So what exactly is the meaning of big company, that we will understand a little later. Okay, but practically speaking, both standards are applicable. Okay, so here we can write companies accounting standards rules 2021 for small companies which follows AS, for these companies we have to follow accounting standards only because of these rules. These rules are saying that if you want to prepare financial statements, you have to definitely follow this accounting standards. And the format is given in division 1. This is also important. Division 1 of schedule 3. Division 1 of schedule 3 to the Companies Act. Division 1 of schedule 3 to the Companies Act 2013. Okay, for small companies which follows AS, you have to prepare financial statements only on the basis of division 1 schedule 3 to the Companies Act 2013. Okay, but another thing is, we also have to remember another set of rules also, which are nothing but companies Ind AS rules. Companies Ind AS rules. These are given in 2015 These are given in 2015. We can remember like this. These are applicable for listed companies. These are applicable for listed companies and large companies. Listed companies and large companies which follows Ind AS. Which follows Ind AS. Okay. Because of these rules, companies Ind AS rules 2015, if you are a listed company or if you are a large company, you have to follow Ind AS. Okay, sir, where they have given the format to prepare the financial statements if I want to follow Ind AS. See, here division 1 of schedule 3 is saying you have to prepare financial statements only when accounting standards are applicable. But for Ind AS, they have to prescribe the different format because both the formats are going to change. I will open the schedule 3 also. I will compare whatever the earlier format which you have learned at the time of your CMA Inter. Okay. And I will compare that with whatever the new format which we have to learn at CMA Final. So do we have to remember both? Answer is no. Only whatever is applicable for Ind AS you have to remember this. But in order to understand and remember what is applicable for Ind AS, definitely you have to just go through this old balance sheet format. Okay, have anyone remembered the old balance sheet format? This I know where it will start. Okay, I will ask, you have to tell, don't worry, but first let us complete this part and then we will move. So check this, sir, where the format is given in division 2 of schedule 3. Division 2 of schedule 3 to the Companies Act 2013. Division 2 of schedule 3 to the Companies Act 2013. Okay. So check this. Till now we have not understood much. We have understood very little part only. So let's quickly go back and refer what we have written. First, we have understood the meaning of financial reporting. Financial reporting is nothing but communicating the financial position of an organization through financial statements to its stakeholders. Okay, stakeholders means who are covered in the stakeholders? Shareholders are covered, management is covered, creditors and government also is covered. Rules for preparation of financial statements. MCA have notified 2 rules. Because of these 2 rules only we are learning accounting standards. Okay, because these rules have mandated companies to follow accounting standards. That is the reason why we are learning accounting standards. Otherwise, if these are optional, no companies will follow accounting standards. Correct or not? They have to employ either a CA or CMA to prepare their financial statements. Correct? That much cost why they will incur if it is optional. Since this is mandatory only, every company have to follow these rules. Okay. If you are a AS compliant company, you have to prepare financial statements on the basis of format which is given in Division 1 of Schedule 3 to the Companies Act 2013. But if you are a company for which Ind AS is applicable, you have to prepare financial statements as per Division 2 of the Schedule 3 to the Companies Act 2013. Okay. Just to highlight these 2 parts. If you are a listed company and large company, for you Division 2 of Schedule 3 is applicable. If you are a normal company for which AS is applicable, then for you Division 1 of Schedule 3 will be applicable. Okay. Try to bring different colored pens, highlighters, just to give some life to whatever book you are writing. Okay. Later we have to refer that number of times. Okay. So rules also we have understood. I will open Schedule 3 also. But before that, let us write another point, which is third point. Sir, what is the meaning of financial statements? Meaning of financial statements. Meaning of financial statements. First, let us understand division 1 of schedule 3. What is the meaning of financial statements? And we also have to understand division 2 of schedule 3 also, what is the meaning of financial statements. Okay. Division 1, which means whatever you have already known earlier, which means division 1 is already applicable for AS compliant companies. Division 2 is applicable for Ind AS compliant companies. In division A, sir, what are the things which are there? What are the components which are there? You guys have already know that. The first thing, balance sheet will be there. First thing, balance sheet will be there. Second thing, statement of profit and loss. This also will be there. Statement of profit and loss. Third one, cash flow statement. Cash flow statement, which is called as CFS shortly. Cash flow statement, and last one, notes to accounts. Very good. Notes to accounts. These 4 components are nothing but financial statements of AS compliant company. Okay, if you are a company for which accounting standards are applicable, there is no doubt that you have to prepare all these 4 components of financial statements. Next, sir, what about division 2 of schedule 3? Now I am big company. Assume I am a listed company. For me, Ind AS are applicable. So you should not follow division 1 format. Now what you have to follow? You have to follow division 2's format. Okay, so quickly write what are the components of financial statements as per division 2. First one is balance sheet is common. Balance sheet is common. Statement of profit and loss is also common. Statement of profit and loss is also common, and third one is little bit new to you, which is nothing but statement of changes in equity. Statement of changes in equity. Fourth, fifth are common. Cash flow statement. Last, notes to accounts. Last one, notes to accounts. Okay. We will understand, sir, what exactly is the format for balance sheet which you have to follow. Because in certain chapters, for example, if you observe business combination and CFS. See, this CFS is different, consolidated financial statements. This CFS is cash flow statement. In these 2 chapters, they will ask you to prepare the balance sheet. That balance sheet should be prepared based on division 2 of schedule 3. In order to prepare balance sheet as per division 2 of schedule 3, we have to know the format. How we have to start? What is the first line item which will be sitting in balance sheet? That we have to understand. Similarly, statement of profit and loss also we have to understand. This also is completely revamped when it comes to old accounting standards profit and loss format. Okay, so this also we have to definitely understand, and this is completely new. Statement of changes in equity. This is not there in earlier accounting standards. So this also we have to learn. And last 2 are little bit same only, cash flow statement and notes to accounts. Okay, fine. So now what we have to do is, what I will be doing is I will be opening. Okay, first you have to tell me whatever the balance sheet format which we have studied earlier. What is the balance sheet? Whatever the balance sheet format which we have studied at your CMA Inter, you have to tell me what is the first item which we have to write. What is the first item? liabilities we have to write up. Okay, so just tell me what we have to write. First, liabilities. First, capital. So since it is a company, we will have something called as share capital, correct? Okay, next. Very good. Reserves and surplus also will be there. Next. Equity portion is completed. Shareholders funds are done. Next, what we have to write? You are saying very generally, but there is a little format which we have to follow. Okay, so next, what is that? If you observe, long-term liabilities will be there. First, non-current liabilities will be there. In that non-current liabilities, we will be having grouping. Trade payables will come. Okay, long-term liabilities will come. Loans will come. Next, if you remember, deferred tax liability also will be coming. All these items will be coming. This, what we have understood, is there basically at your accounting standards, which means at your CMA inter level. So that format first let me open. No need to copy this. This whatever the format which we have learned in inter, I will just make you go through, because you have to remember few things. Only if you understand that, only if you remember that, then only you will exactly understood what exactly are the new things which we have to remember in this new format which we are going to learn. Okay. In order to make that very clear, let us quickly come to schedule 3. Okay. First read this part. Schedule 3 division 1. Just read this part. Okay. First read this part. If you observe, this is nothing but schedule 3. This is schedule 3 of Companies Act only. Division 1. Division 1, where they will say is, these are nothing but financial statements for a company whose financial statements are required to comply with the company's accounting standards rules 2006. These rules only are amended. Okay, that point we have already written. But what I wanted to say is, if you open schedule 3 of the Companies Act, and if you open this division 1, then we will understand whatever the format which they have given, that is only for those companies which are required to comply accounting standards. Okay. There if you go, part 1 will talks about balance sheet. Part 1 will talks about balance sheet. If you observe, the first line item which will be there is nothing but equity and liabilities. Equity and liabilities. What is the first? In that also, first we have to write the shareholders funds. First we have to write shareholders funds. I think you already know that we have 2 different types of shareholders. First one, equity shareholders. Second one, preference shareholders. Both capitals, equity shareholders funds also will come in shareholders funds only. Preference shareholders funds also will be coming in shareholders funds only. So in this shareholders funds also, what is the first line item which we have to write? Share capital. Second we will write reserves and surplus. Second we will write reserves and surplus. I am not going into in-depth. I will just explain here and there. Just explain the terms so that we will compare this with our Ind AS balance sheet. There I will explain everything, because you have to remember this thing only. Okay, but just for comparison, you have to also know this thing. Okay, so if you observe this money received against the share warrants, we will not write anything in this column. Just for format completion only, they have given this part. Okay, in our exams also, in our inter also, I think we have not written anything in this format. Okay, so second one, if you observe, share application money pending allotment. Okay, assume you have just paid some application money, but still the company is not allotting shares to you. If the company have already allotted share to you, then that application money will be transferred to capital account. But since still the shares are not allotting, therefore they have to keep it, they have to disclose that in a separate line item which is called as share application money pending allotment. If you observe, after paying, within 60 days the company have to allot the shares to you. Okay, so during that intermittent period, the thing is still you are not the shareholder, therefore that money should not be appearing in share capital. So that is the reason why they will show in a separate line item, which is called as share application money pending allotment. Next, if you observe, just go through these items. Just go through these items. We will have something which is called as non-current liabilities. First one, long-term borrowings. Okay, deferred tax liabilities. Other long-term liabilities, long-term provisions. That's it. Only 4 items in non-current liabilities. Long-term borrowings, deferred tax liabilities, other long-term liabilities, long-term provisions. Just don't by heart anything. Next, if you observe, current liabilities, short-term borrowings will be there. Trade payables will be there. Here they will say total outstanding dues of micro and small enterprises. Here, total outstanding dues other than micro and small enterprises. They just want you to disclose separately how much amount is due to micro, small, medium enterprises. Other than micro, small enterprises, whatever the amount which is due. That bifurcation you have to show in your balance sheet. This they have mentioned. Next, other current liabilities, short-term provisions. That's it. Liability side of your old AS format is completed. Okay, the only thing which I want you to remember and observe is, here we have shareholders funds. In this, we will write both equity shareholders also and preference shareholders also. Is this point clear? Yes. Next, if we move to asset side. If we move to asset side is also a little bit bigger than liability side, but let us quickly check. Non-current assets, first we have to write. In that non-current assets, the first item will be PPE. In PPE, again we have to start bifurcation like tangible, intangible, capital work in progress. I will explain what is the meaning of capital work in progress also. Intangible assets under development. Next we have something which is called as non-current investments, deferred tax assets, long-term loans and advances, other non-current assets. Okay, just go through this format, that's it. No need to by heart anything. I will tell what we have to remember. Next, current assets will be there. Current assets may what we have to write: investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. Then we will get the total of the assets. Okay, fine. Now, it is very clear that balance sheet of those companies for which accounting standards are applicable, it will be starting from equity and liabilities portion. First we have to write liabilities, then after completion of these liabilities, next thing we will start with assets. Correct? This is the normal format which we have to study in our old intermediate days. But now the format is completely changed. Now the format is completely changed. First let us understand the balance sheet and then we will move to the P&L account. First read this part. Division 2. Division 2, Division 2, Division 2. It is applicable for which persons? Okay, first read, then I will explain. Read this part. If you read, you will understand. Division 2 of Schedule 3 talks about the format for which, if you are a company whose financials are prepared in accordance with Indian accounting standard rules, then for you Division 2 is applicable. Okay. Division 2 also, if you observe part 1 of the balance sheet, if you observe part 1 of the balance sheet will be starting with which item? Assets. Okay. AS wala balance sheet, what is the first item which we will start? Will we start with liabilities or will we start with assets? AS1. AS1 we will start with liabilities. But here in AS we have to start with assets. This is the first change which we have to understand. Okay. Assets, I will go into all these a little later. But once these assets are completed, come to equity portion. Okay. See, once these assets are completed, we have to come to equity portion. Equity portion, what they have did is, just a moment. Okay. We'll come to the equity, but before that, quickly check this assets part. Non-current assets, what is the first item which is there? Property, plant and equipment. Okay, second item which is there is nothing but capital work in progress. New line items are there. New line items are there. Next one, we are having investment property. This is completely new, which is not there in earlier format. Correct or not? Investment property is not there. Next, goodwill is there. Other intangible assets are there. Intangible assets under development. This is also completely, sorry, this is also fine. Next new thing is biological assets other than bearer plants. This is also not at all there in your old accounting standards. Okay, so highlight this thing, write this somewhere, biological assets. Right, I will ask one question, then you have to answer. Biological assets you have to write. Online students also you have to write somewhere the word biological assets. Next one, financial assets. Write the word financial asset also. Financial asset, biological assets. Next, investment property. Highlight these three things. Investment property, biological assets. Next, what is the next one? Financial asset. Okay. What you have to do is, one second, investment property, biological assets, next one, financial assets. You just have to do some research and you have to go through and identify and tell me what is the meaning of these three items along with few examples. Okay. You have to do some hard work. Just understand the meanings and then I want some examples also. Online students also have to do this. Examples plus meaning you have to do. Okay. So the next thing is you definitely have to by heart this format, because as I have said that you have to prepare balance sheet as per division 2 schedule 3. In order to do that, you have to definitely remember this balance sheet. Okay, but no problem. I will teach some shortcuts to remember this balance sheet so that you will easily understand. That we will discuss in next class. Okay. So in this class, what we have understood is we have not understood much. Sorry, we have not discussed much. We just have understood the meaning of financial reporting. Whatever the rules are there which are needed for the preparation of financial statements, we have understood. For some companies, accounting standards are applicable, and we have understood, sir, for some small companies only AS is applicable. But if I'm a listed company, or if I'm a huge company, if I'm a listed company, or if I'm a large company, for me what are applicable? Ind AS are applicable. If I'm an AS compliant company, I have to follow division 1 of schedule 3. If I am an Ind AS compliant company, I have to follow division 2 of schedule 3. This we have understood, and after that, what is the meaning of financial statements also we have understood. Okay. In division 1, we have only 4 components. What are those 4 components? Balance sheet will be there, statement of profit and loss, cash flow statement, and last notes to accounts. But if you observe Ind AS, Ind AS compliant companies, all those 4 will be there. But in addition to that, we are having something new which is called as statement of changes in equity. This also I have not touched upon. Okay, so in next classes, coming classes, what we will be doing is we will be understanding the format of this balance sheet as per division 2 schedule 3. We will also understand profit and loss account format also. We will also have a little bit understanding of this statement of changes in equity also. So these 3 will be covered in depth. But before that, in next class, what we will be starting is, sir, why we are having 2 sets of standards? Because AS is also there, Ind AS is also there. The government, for some companies only, the government have not completely removed these AS. Okay, still these AS are also applicable. Sir, if there are already AS which is there, what is the exact reason of again introducing a new set of standards which are Ind AS? Okay, so those reasons will be discussed in next class. Okay, along with these reasons, I will also explain you. This balance sheet ka format also will be completed in tomorrow's class. Okay. So this balance sheets format and this also will be completed in tomorrow's class. But we have to do this thing: investment property, biological assets and financial assets. We have to find out the meanings of these three along with few examples. At least 3 examples I want for each asset. For each item I want 3 examples. Okay. So on that note, let's conclude today's class and we will continue in next class. Okay. Good morning. In last class, what we have studied? We have just gone very little content only we have gone through. First, we have understood the meaning of financial reporting. And then we have understood there are few rules which are essential for the purpose of preparation of financial statements. And then we have understood what exactly is the meaning of financial statements also. And we have just started upon the format for balance sheet. So let's quickly check what we have discussed in last class and then we will continue. Okay. But before that, if you just go through these standard names so that it is easy for you to remember this. So let's once again go through the names of the standards and then we will start. So check. Ind AS 8 talks about if there is any accounting policy changes and if there is any change in accounting estimates and prior period errors, that is covered in Ind AS 8. So income taxes are covered in Ind AS 12. The same goes with PPE, so Ind AS 16. Okay, so like this, if you just revise all these names of standards along with standards numbers, just 5 minutes if you spend, easily you can remember. So no need to by heart. After completion of standards, you can easily remember. So next, if you observe, we have understood the meaning of financial reporting. So meaning of financial reporting as in, it is nothing but we have to communicate the financial position of an organization through the entity's financial statements, not only just shareholders, but to other stakeholders also, including management, creditors, government, etc. Okay. And then we have understood there are few rules which are essential for the purpose of preparation of financial statements. How many rules are there basically? 2 rules are there. First one is what? Companies accounting standards rules. Earlier they are released in 2006, but now they are amended to Companies Accounting Standards Rules 2021. Okay. In India, as of now, for some companies, accounting standards are applicable, which means whatever you have studied at your CMA inter level, whatever accounting standards which you have studied, those are applicable for few companies. You can remember like this. For small companies, ASC is applicable. In today's class, we will understand what exactly are the companies for which these accounting standards are applicable. But if you are a company for which accounting standards are applicable, you have to prepare financial statements as per the format which is given in Division 1 of Schedule 3 to the Companies Act 2013. Since MCQs are there, these are little points where we have to focus. Okay, they may ask in MCQ also. If you are an AS compliant company, you have to check the format which is given in Division 1 of Schedule 3 to the Companies Act 2013. But Another set of rules which are nothing but companies Ind AS rules 2015. Because of these rules only, if you are a listed company and large company for which Ind AS are applicable, then you have to follow the format which is given in Division 2 of Schedule 3 to the Companies Act 2013. Okay. Then we understood. Meaning of financial statements also we have understood. Earlier, whatever the accounting standards which you have studied, we have 4 components of financial statements. This we have already know that. Correct? What is the first component which is there? Balance sheet is there. Second one, statement of profit and loss. And third one, cash flow statement. Last, we are having notes to accounts. Same, all these 4 components are there even in Ind AS also, but the formats are different. But the formats are slightly changed. In the last class, we have understood balance sheet, old balance sheet will start with something which is called as shareholders funds. Correct? But new balance sheet starts with non-current assets, it is starting. Correct? Total format have been changed. We will slowly understand and try to remember whatever the format which is given in this division 2 of schedule 3. Again, I am saying this is not required for your exam perspective, but we have to understand. What exactly is the difference we have to understand. So next, the statement of profit and loss is same to same. Cash flow statement is also same. Notes to account is also same. Of course, with different format is little bit changed, but this statement is exactly same as what we have studied in the previous standards. But one new thing which is not there in previous accounting standards is nothing but statement of changes in equity. This is the new thing which we have to study. I did not explain all these things. We will slowly cover all these things in detail in today's class. But before that, you just have to understand something which is called as, okay. Next, keep the heading, history of accounting standards. History of global accounting standards. History of global accounting standards. See, if you observe the institute material or if you open that, it contains many details which are not essential. So what we will be doing is, this is a little bit dry topic also, like why exactly these accounting standards are introduced. What is the purpose? Earlier we are having accounting standards and now why Ind AS are introduced, and all these things are explained in this history. But first let us understand how exactly these global accounting standards are emerged, and then what India have did is most of the things it have copy pasted from the global accounting standards with some differences, of course. Okay, even in the accounting standards also it have did the same thing. So first let us understand what exactly or how exactly these global accounting standards are developed. So the first landmark here what you have to remember is, first you can write, then I will slowly explain along with you. Okay, so write the, sorry, IFRS, దానికంటే ముందు ఇంటర్నేషనల్ అకౌంటింగ్ స్టాండర్డ్స్ అవన్నీ ఉండేవి. సో ఫస్ట్ ఆ హిస్టరీ చూద్దాం. సో ఫస్ట్ ఇయర్ 1973 you have to remember, first landmark year in accounting. So in 1973 what is happened is, we have something which is called as IASC. IASC. The full form of IASC is nothing but International Accounting Standards Committee. International Accounting Standards Committee. It was formed by many countries. It was formed by many countries like US, UK, Australia, Germany, etc. Okay, see, way back in 1970s only, what all these countries have decided is, let us all assemble together and let us all issue a common set of standards which are applicable in all the countries. Okay, sir, why we should have common accounting standards in all the countries is, even in this 1970s or even in this 1970s only, many of the rich people are there who have lots of surplus. They are having a huge surplus amount. Now they have option to invest in different companies. For example, one investor want to invest in UK, another investor want to invest in US, Australia or Germany, etc. like this. So what is the purpose of having uniform accounting standards is, if I am a shareholder or if I am an investor, I should have the data of how exactly the companies are performing, correct? I have to check the balance sheet, I have to check the profit and loss account of all the companies which are located in different countries. But the thing is, if each of the country prepares its financial statements according to their accounting standards, it is very hard for the investor to make comparisons, correct or not? So in order to avoid this, what they have decided is, okay, let us all form together one committee which is called as IASC, and the purpose of IASC is what? It will issue one uniform standards which are applicable in all the countries, so that uniformity is maintained. Okay, so what they have did is, next let us write the objective also. Objective of their meeting is to issue common accounting standards across the world. Common accounting standards across the world. So next you have to remember, IASC board they have formed. IASC board. This board, what it have did is, it is only issued accounting standards. So this is nothing but standard setter of IASC. This IASC board only have issued uniform standards which are international. And you have to write one last point with respect to this, which is nothing but IAS are issued by IASC. IAS is nothing but International Accounting Standards. International Accounting Standards. Okay, so if you understand, it is very self-explanatory. You just have to remember these things because these things are little bit new to you. So what you have to remember is, just remember this year 1973. What have did is, most of the countries have formed together and they have formed one committee which is called as IASC. The purpose of IASC is very simple, to issue common standards all across the countries. Okay, so that is the reason why they have issued something which is called as International Accounting Standards. Right now we are not understanding with Indian accounting standards ka treatment. First let us understand how global accounting standards are emerged. Then we will understand how India have copy pasted those global accounting standards. Okay, so this 1973 is done. After that, what have happened is, another landmark year which we have to remember is 1989. Okay, in 1989 also, just write this IOSCO. IOSCO. The full form is International Organization of Securities Commission. International Organization of Securities Commission. See, in India we have something which is called as SEBI, correct? Like how India is having SEBI, international countries are having this organization which is called as IOSCO. The objective is same. Like how India is having SEBI, international countries have this organization which is called as IOSCO, International Organization of Securities Commission. We can write that point also. It is corresponding body for SEBI. Corresponding body of SEBI in India. Okay. Now what have happened is, it have started, it notified in order to encourage cross-border transactions Okay, what have happened is, around this 1989s, most of the investors are decided to issue, issue shares, or if they want any finance, they are ready to raise the funds from different countries. Like this, cross-border transactions have become very, very common. So whatever the existing standards which are there, already we have these standards, but these are not sufficient exactly to meet the requirements in this 1989. So what they have suggested is, okay, we are not saying we don't have accounting standards, we are having, but these are not sufficient. So what we have to do is, we have to improve the existing standards. Okay, so the objective of this IOSCO is, it have decided we should have few cross-border transactions are happening. So what we have to do is, we have to improve whatever the existing standards which are there. Okay, so the objective of this thing is what? It have proposed that international standards should be improved. Internationally accepted standards should be improved. Okay. So first what I have did in 1973, this committee is formed. Many countries have assembled together and they have decided to issue one common set of accounting standards across the world. And they have started issuing which standards? International accounting standards. And then what have happened? Again in 1989 also they have met. And this time another organization is also joined, which is nothing but International Organization of Securities Commission. So what is the role of this Securities Commission? It is nothing but corresponding body of SEBI in India. If any listed entities are there, how exactly we have to do those regulatory requirements and all will be explained by this IOSCO. Now what it is saying, okay, nowadays these cross-border transactions are very, very huge. These are undertaking in very, very huge volumes also, and figures are also increased. So what we have to do is, whatever the existing standards which are there, they are not sufficient. So we want truly global standards. We want more improvements in whatever the existing standards which are there. And then we have another set of standards which are called as IFRS. Okay, earlier we are having international accounting standards, but then again this body have proposed, we want improvements in whatever the existing standards which are there. And hence what they have did is, we can write another landmark year also, which is 2001. Sir, here what have happened is, we have something which is called as IASB. IASB, it replaced IASC. It replaced IASC. From then, it had started issuing IFRS. It had started issuing IFRS. Okay, they have improved earlier international accounting standards to make them truly global. To make them truly global. Okay. So from 2001 onwards, what have happened is, we have another body which is called as IASB. Earlier international accounting standards are issued by which body? It is IASC board is there. Okay, but now what have happened? Okay, IASB, another new body has formed and it have replaced existing IASC, and it have started issuing completely new set of standards which are called as IFRS. The full form of IFRS is International Financial Reporting Standards. Okay, so now what have happened is, this IASB have not completely deleted all international accounting standards. Some international accounting standards, if that doesn't need any change, they have retained the old standards only. But wherein new changes are required, they have started issuing new set of standards. Which means what? As of today, we have both sets of standards. IAS is also there, IFRS is also there. On one same matter, both standards are not there. If they have felt that, okay, if there is any standard which doesn't need any modification, they have retained the old standard only. Old standard means what? They have retained is IAS only. But if they felt like if they need any modification, they have modified and they have issued a new set of standard which is IFRS. Okay, this point we will write later. Now what have happened is, all global entities have started accepting IFRS. Have started accepting IFRS. From then, two sets of widely accepted AS have been emerged. Okay, first one, IFRS, followed by non-US clients. IFRS followed by non-US clients. Okay, and then what have happened is, US is there. US will never accept to all those things which are accepted by most of the countries. They always wanted to show their own superiority. They always wanted to show their own dominance. So in this also what have happened? Okay, you all other countries have, you can follow IFRS, but we US will not follow IFRS. They have issued their own standards which are called as US GAAP. Okay, US GAAP is also there. There are no much changes which are there between IFRS and US GAAP. Most of the things are pretty similar, but in order to show their superiority, US have not agreed to accept this IFRS. So what they have did is they have started issuing their own standards which are called as US GAAP. US GAAP followed by US clients. US GAAP followed by US clients. Okay, just for 1 minute, go through what we have written. Just to make these names little bit familiar, IASC, International Accounting Standards, IOSCO, what exactly this IFRS are issued by this IASB. Just go through for 1 minute and then we will continue. రావచ్చు జనరల్గా ఛాన్సెస్ తక్కువ, బట్ కొన్ని డ్రై ఎంసీక్యూస్ ఇవ్వాలి అంటే ఇలాంటివి పిక్ చేసుకోవచ్చు. Just for 1 minute, go through this, then we will continue. Okay, so we can add just one more last point. So this US GAAP are issued by one body which is called as FASB, Financial Accounting Standards Board. FASB will issues US GAAP. Okay, Financial Accounting Standards Board. Financial Accounting Standard Board issues US GAAP. So next point. Next point, keep the heading why India need global accounting standards. Why India need global accounting standards. Okay, see. First we have understood, sir, how exactly these global accounting standards are emerged and why these IAS are there and how these IAS are changed into later IFRS and all we have understood. India is also there. In India also, if you remember, we have AS which are there already. We are having these accounting standards, correct? But India also, whatever the accounting standards which we are having earlier, if we still continue those accounting standards, it is very difficult for us to compete with global countries. Correct or not? So that is the reason there is a need. India have to move towards the global accounting standards. Okay. So let us try to list out some 4 to 5 points through which we will understand why there is a shift in India from accounting standards to Ind ASs, and then we will totally correlate that with Indian environment. So now write the first point. In India, cross-border transactions have started. Cross-border transactions are started. In India only, many billionaires and many millionaires are there. So what they are doing is, they are having too much of surplus funds. They want to invest in different countries. Indian financial statements are prepared according to AS. If these international accounting standards are not there in India, Indian companies will prepare financial statements with the old ASs. And if I want to make any comparison with foreign companies, they will prepare financial statements according to their own ASs. Correct? It will not make any use. It will not make any use. So what they are saying is, since these cross-border transactions are increasing, India should not settle with its old accounting standards. It should shift to something which is called as global accounting standards. This is the first thing. Second point we can write, flow of international capital. Flow of international capital. Okay, see, if I am an Indian company, if I want to raise funds, there are multiple options which are available. First option is what? I can raise equity share capital. Second option is I can raise preference share capital. Third option, I can raise debentures. Or if I want, I can just go to bank and I can get some loan. Correct? Now what have happened is, Indian companies are also there. They are expanding so much that even if they have raised the capital only in India, that is still become insufficient. Which means what? They want capital from other countries' investors also. That much Indian companies have already grown. If you want capital from other companies' investors, obviously other company investors have to understand your financial statements. Correct? If your financial statements are prepared according to accounting standards of India, how come they understand your financial statements? So that is also not possible if India is not moved towards global accounting standards. So if international capital's flow should be very easy, obviously your financial statements also should be increased. Your level of financial statements also should meet the global accounting standards. So that is the reason India have to definitely shift to something which is called as global accounting standards. Okay, just write the third point also. Difficulty in comparing financial statements of different countries. Different countries. Okay, this is self-explanatory point. If you want to compare financial statements of different countries, obviously everything have to follow uniform accounting standards, correct? If India follows India's accounting standards and other countries follows their own standards, it is very hard to compete. It is very hard to compare. So that is the reason, in order to remove this difficulty in comparing the financial statements, we should have a common accounting standards. And the last point you can write, complex financial instruments. Complex financial instruments. Okay. So if any of you have taken SFM classes already, you can understand these terms which are called as derivatives. Okay, interest rate risk management, call options, put options, like this some instruments are there. Old accounting standards never know these words. They don't know the meaning of derivative only. If they don't know the meaning of derivative, how they will give the accounting treatment for derivative? That is not possible. Nowadays, most of the companies are using these financial instruments in their financial statements. If they don't know these names, what accounting treatment they will prescribe? Correct or not? So since many of the companies have started using these financial instruments, our standards should also provide the accounting treatment for all these items. It is not possible with the old accounting standards. So that is the reason why we have to issue new set of standards which are global accounting standards. Okay, this fifth point is also fine. Why India need global accounting standards? In India, cross-border transactions are increased. International capital should be freely flow to the country, and it should remove the difficulty in comparing financial statements of different countries. And last point, many complex financial instruments are there whose accounting is not given in old accounting standards. So that is the reason we have to move to global accounting standards. Next point, sixth point, Indian scenario. Now we will move to India. Indian scenario. Prior to the introduction of Ind AS. Ind AS. Okay, now try to understand. Sir, here what have happened is, in India also we have set up one body which is called as Accounting Standards Board, ASB. Its objective is to issue accounting standards. ASB's objective is to issue various accounting standards. Okay. Next, in inter level you have studied few ASS, correct? Can anyone know how many ASS are there in practice? How many ASS are there? Any idea? Later you can cross check, but now you can write this point that as of now we have totally 27 ASS. 27 ASS we are having as of now. Old ASS these are. Okay, 27 ASS in number we are having. ASS we are having. In India also, let us try to understand with the help of timelines. Okay, so let us start the first important timelines. Only two timelines will be there. So let us first start with 1977. 1977 only. ICAI formed this ASB. ICAI have formed this ASB. Sir, what this ASB observed is, it observed international accounting standards. It observed the international accounting standards and prepared own accounting standards. It observed international accounting standards and prepared own accounting standards according to the economic conditions of India. Economic conditions of India. Okay, this ASB have not formed new set of ASS. Whatever international accounting standards are already there, it have taken the idea from those international accounting standards. Of course, here and there few adjustments it have made according to the economic conditions of India. And it have started issuing its own accounting standards. So then what have happened is you have to understand one thing, that these standards are recommendatory in nature. These are not mandatory, these are only recommendatory. These standards are only recommendatory in nature. Okay. These standards are only recommendatory in nature. We can write the next timeline, which is 2006. These points are mostly self-explanatory, so that's why I'm not explaining much. So 2006, if you observe, one summit which is called as G20 summit. Okay, G20 summit. In this G20 summit, India said that India committed that it will follow international accounting standards. India said that it will follow international accounting standards. India committed that it will follow international accounting standards. But in 2006 only it have committed that it will follow international accounting standards, but actual implementation started from 2015. Actual implementation have started from 2015. In this year only they said that we will follow international accounting standards, but it is not that much easy that we can follow those standards from that year itself. It have just committed in 2006, but actual implementation is started from 2015 onwards. Okay. Next we can write one important point, that we have already written this point above, but in order to provide an interlinking, let us write once again. Companies accounting standards rules 2006. Companies accounting standards rules 2006 mandated all companies to follow AS. Till then these standards are only recommendatory. Okay, but suddenly these rules are saying, okay, from now onwards, if you are a company, you have to definitely follow accounting standards. Next, we have understood another set of rules also, which are companies Ind AS rules. Companies Ind AS rules 2015. Companies Ind AS rules 2015 mandated all companies, mandated few companies, we can write few companies in brackets, listed or big companies, to follow Ind AS. follow Ind AS. To follow Ind AS. Okay, fine. Next. We can write one more point, which is seventh. Adoption versus convergence. Convergence of global accounting standards. Global accounting standards. See, if you are one country, if you want to follow these global accounting standards, they have given two options. First option is what? If you want, you can directly adopt global accounting standards. Sir, adoption means what? Adoption means complete copy paste. No changes, just whatever the content which is there in the global accounting standards, just copy paste that content. That is called as adoption. Convergence means what? You can take an idea of the global accounting standards, but we will make few changes which are suitable for our environment. Okay, we can either adopt the global accounting standards, or we can either adopt the convergence. We can either converge the global accounting standards. This you have to remember. Okay, so let us write that point. Any country can become IFRS compliant in two ways. First one, adoption. Adoption means exact copy paste. Exact copy paste of IFRS. Second thing is nothing but convergence process. Convergence means few adjustments, depending on economic conditions. Without changing the core idea of IFRS. Core idea have to be same. Without changing the core idea of IFRS. Okay, fine. Next we can write the last point, which is India has followed converged model of IFRS. India have not directly copy pasted. They have designed a new word for that copy paste. Okay, they have designed, India have followed converged model of IFRS. Converged model of IFRS with few carve-ins and carve-outs. With few carve-ins and carve-outs according to the economic conditions. According to the Indian environment, we can write. According to the Indian environment. Okay. According to the Indian environment. Carve-ins and carve-outs are nothing but something is specifically mentioned in the IFRS. Some point is there, for example, some point is specifically mentioned in the IFRS, but that thing India don't want to follow. Can it do so? Answer is yes. There are some other thing which is specifically there in which is specifically there in Indian environment, but it is absent in global accounting standards. Sir, can it do this point also? Yes, it can do this also. Some disclosure is there that is there in global accounting standards, but India don't want to do that. Like this also they can design our own accounting standard, or there is another point which is not there in global accounting standards, but India want to add that point. Like this also they can do. So addition or deletion of any item which is not there in global accounting standard is nothing but carve in and carve out. Okay, further discussion is there later, but as of now you can understand like this. If any new point is there in accounting standard, but it may not be there in India, it may not be there in international standard, or there may be one point which is there in international standard that may not be there in Indian standard. Like this also they can do, which means what? There is no need of directly copy pasting. With few modifications, we can follow converged model of IFRS to make them suitable for Indian environment. Okay, fine. One last point. This is a little bit dry. I know that, but we can't do anything. One last point. Numbering of Ind AS. Numbering of Ind AS. Numbering of Ind AS. What you have to do is just look at this. Just look at these numbers. Okay. Ind AS 8, 12, 16. Suddenly 116 is there. Correct? 21, 23, 36, 38. Suddenly 102, 108, 113, 115. Which means, sir, are we having, do we have totally 116 Ind ASs? Answer is no. Okay. See, what I have explained is, in practice, if you look at global accounting standards, see, currently we are having these international accounting standards also, and another set of standards is also there. What are those another set of standards? IFRS is also there. Correct? So what India have did is, first we can write, then I will explain the point. India have retained the numbers. India have retained the numberings used by IASC in the preparation of international accounting standards. For example, we have something which is called as IAS 1. IAS 1, what they will say is presentation of financial statements. Just write, this is not there in our syllabus, but just to understand how these numberings are made. Presentation of financial statements. And then we have given the number Ind AS 1. Same content, presentation of financial statements. Presentation of financial statements. Which means what? Ind AS 3, for example, IAS 3, if it is there, India have given the same number which is Ind AS 3. If it is IAS 7, India have given the same number which is Ind AS 7. If it is IAS 36, India have given the same number, which is Ind AS 36. But suddenly what have happened, they have issued a new set of standards, IFRS also. Correct? IAS is also there, IFRS is also there. For example, if IFRS 1 is also there, we are having IAS 1 also, IFRS 1 is also there, correct? In order to remove the confusion, what India have did is, if it is IFRS, it have started issuing the series with 100. If it is IFRS 1, what is the number which we have given? We have given Ind AS 101. If it is IFRS 2, India have given Ind AS 102. If it is IFRS 3, India have given Ind AS 103. Just to give a unique number, if it is IFRS, India have issued with a series of 100. But if it is International Accounting Standard, if it is IAS only, India have not changed it. India have just directly copy pasted that number. But if it is IFRS, India have issued the standards from the series of 100, just to make it separate. Okay. If it is 100 series, if it is there, for example, if you look at here only, this Ind AS 116 is there now. This is nothing but IFRS 16. This is nothing but IFRS 16. Similarly, if you observe this Ind AS 102, it is nothing but IFRS 2. If you check this Ind AS 108, it is IFRS 8. Similarly, Ind AS 113, 13, 115, 15. Sir, but what about this Ind AS 21? It is IAS 21, International Accounting Standard. Sir, what about IAS 23? Sorry, Ind AS 23, IAS 23. Like this we have to remember. Okay. So the last point, if you observe, but when it comes to IFRS, India have issued new series starting after 100. Starting after 100. Example we can write for that also. IFRS 1. IFRS 1, first time adoption of IFRS. First time adoption of IFRS. Second standard IFRS, sorry, Ind AS 101. Ind AS 101. This is also nothing but first time adoption of Ind AS. First time adoption of Ind AS. First time adoption of Ind AS. Okay. If you observe, see, these two are not there in your syllabus. These two are also not there in your syllabus. But just I have given an example. See, if you observe, only these standards are there in our syllabus. How many standards are there? I think 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 12 standards are there in your syllabus. Okay. Only those we have to remember. But just to understand whether it is IAS or IFRS, I have given this example. Okay. If it is IFRS, Ind AS number will start after 100. But if it is IAS, India have used the same series of the old international accounting standards which are there. Okay. Let us write the last point also, that currently there are 23 IASs and 16 IFRS. 16 IFRS in total, in total. Okay, you can write beside this IAS that we have 1 to 41 standards. Earlier they have issued 41 standards, but some are deleted. Okay, but some are deleted. So finally we are having 23 Ind ASs. Some of them are deleted. Some of them are deleted. Okay. You cannot understand like this. Sir, if it is 23 IASs, it is not that the last international accounting standard is 23rd. It is not like that. That's what I'm saying. Totally they have issued 41, but most of the standards are deleted. So in total we are having 23 IASs. Okay. So just go through all the content for another 2 minutes. What we have written, and then we can conclude with only one part, which is applicability of Ind AS. But before that, just go through all the points. Another 5 minutes it will take. But just go through what all the things which we have written. From tomorrow onwards, we will discuss the balance sheet format. That is interesting. This is little dry theoretical topic. So that's why it may be little bore, but we can't do anything. This is very important to understand the background. Okay, just go through. Okay, fine. We will start applicability part in next class only. But before that, I think I have asked you to find out 3 items in last class, correct? What are those 3 items? Sorry? Biological assets. Next? Very good. Investment property. Last? Financial assets. Have you tried? Tell me what is the meaning of biological assets? Sorry? Living things. Okay. Humans. So animals and plants are biologicals. Okay. And we could assets na if they give the business. Okay. Any example where animals and plants will give business? Okay. Very good. Okay. Next, investment property. Investment property. An example? Land and building given for. Very good. Which is generated the rental revenue. Last one, financial asset. Equity. Yeah. Cash. Sorry. receivables. Okay. Okay, fine. So these things also we will cover in next class. So next class what we'll be doing is this applicability, some 6 to 7 points are there. We will complete in next 20 minutes in the next class, and then we will start with balance sheet ka format. Okay. After balance sheet P&L. Tarvata Ind AS. Yes, after P&L, because OCI is there, which is completely new to you. Other comprehensive income that is not there in old accounting standards. So we have to understand that, then only we can move to AS, Ind AS. Okay. So 2 more basics classes are needed. After that, we will start with Ind AS. Okay. Chapter. Okay. So that's it for today. We'll continue in next class. Oh, తెలియదు మరి. Okay, listen. In last class, we have just understood, we have revised what we have covered in last class, and then we have started with this history of global accounting standards. And we have exactly understood why these Ind AS have evolved and how it have evolved also we have understood. Earlier what are their accounting standards are there, but how they have changed into Ind AS. All that transition also we have studied in last class. So let's quickly check that part, and then we'll complete applicability of Ind AS, and also we will try to complete balance sheet format also in today's class only. Okay. Then in next class we will discuss about profit and loss account. So if you observe, only main points let us revise. See, we have understood that there are few rules for the preparation of financial statements. So these rules are notified by MCA only. The first rules which we have understood is Companies Accounting Standards Rules 2006. And these are amended to Companies Accounting Standards 2021. Because of this only, there are some small companies for which AS is applicable. And we have also understood whatever at your CMA inter level we have studied the balance sheet format and all, that is given in Division 1 of Schedule 3 to the Companies Act 2013. And then we have understood there are few companies for which Ind AS rules 2015 are applicable. As of now we have understood for few listed, for all listed companies and for large companies, Ind AS is applicable. For you, if Ind AS is applicable, you have to prepare financial statements as per Division 2 of Schedule 3 to the Companies Act 2013. What exactly is the format and all, let us discuss in today's class only, this Division 2 of Schedule 3's format. Next, we have understood the meaning of financial statements. In your earlier accounting standards days, these 4 are nothing but components of financial statements. First one is balance sheet. Second, statement of profit and loss. Third one, cash flow statement, and last, notes to accounts. Okay. Even in Ind AS also, in this Division 2 of Schedule 3 also, all these 4 items are still there, but presentation requirements have changed. Along with these 4 items, one new item which is there, which is called as statement of changes in equity. Okay. We have not understood what is the format and what is the statement of changes in equity also. Still we have not covered. We will cover that slowly. Okay, so next we have understood a few landmark years. In 1973, IASC is formed and it have started introducing something which is called as International Accounting Standards. Okay, as time passes, in 1989, another body which is IOSCO, which is a corresponding body of SEBI in India, in order to encourage the cross-border transactions, what it have suggested is whatever existing standards which are there, those are not sufficient. We have to improve the existing standards, or we have to create some new set of standards also. This is the kind of suggestion which is given by this IOSCO. So next what have happened is, in 2001, another body which is formed, IASB, it replaced IASC, and it have started issuing IFRS. And then we have understood, as of now, both are there. For some matters, we are following old international accounting standards only, and for some matters, we are following IFRS. Okay, so next, this part also we have understood. And here, why India need global accounting standards, this part we have already covered. And this part is important. Indian scenario prior to the introduction of Ind AS. Okay, before introduction of Ind AS, in India also we have different standards which are issued by Accounting Standards Board. Currently, as of now also, these standards are still there, but these are applicable only for few companies. So we have understood, as of now, totally 27 ASS are only there. Okay. Next, here we have understood how these standards are formed by ICMAI and all we have covered. And finally, the main part is this part. Adoption versus convergence of global accounting standards. Whatever India have did is, whatever IFRS standards are there and IAS also, on those matters, according to the political conditions of India, it have made few changes. So it have not directly copy pasted the content. What they are saying is India has followed convergent model of IFRS. Okay, according to Indian environment, we have introduced some new points also which are not there in IFRS. We have deleted some points also which are there in IFRS, which means few changes are there. So according to the Indian environment and all, we have made few changes. And next we have also understood the numbering of Ind AS also we have covered, correct? In Ind AS, we have some standards which are starting from 1 series also, and some standards which are starting from 100 series also we are having. And we have understood if any Ind AS is starting with this 100 series, it is nothing but IFRS, correct? If it is starting with 1 series, 1, 2, 3 or something like that, it is an international accounting standard. And we have discussed few examples also. For example, you have to tell me, assume this IFRS 2 is there. IFRS 2 is there. What is the corresponding standard as per Ind AS? You have to tell me. Is it Ind AS 2 or Ind AS 102? Ind AS 102. That's it. Because if it is IFRS, series will start after 100. Okay, that is the thing. And next we have understood this part also. Currently 23 IASs are there. Actually 1 to 41 in IASs they have issued, but some standards are deleted. If you count the number of standards, we will find out 23 IAS are there and 16 IFRS are there. All those standards are not applicable for our exam. We have already seen what all the those 12 standards are there now. So those 12 standards only are applicable for our exam. Okay. So now let us write which standards, what are the companies for which this Ind AS is applicable. Let us quickly write. Okay. So start writing applicability of Ind AS. Okay, so check this applicability of Ind AS. If you observe, all listed companies in brackets already listed or in the process of listing already listed or in the process of listing, any of its security in any exchange. Okay. So first applicability, what they'll say is, if you are already a listed company, for you, no choice, Ind AS are already applicable. Okay. Second company is what? You want to list, you have just decided to list, some procedural formalities are still not complete. So because of which you are not listed as of now. But your intention is what? To immediately get listed. So if any approvals are pending, etc., even in that case also, even if you are in the process of listing also, for you also Ind AS is applicable. Another thing you have to understand, most of the students will think that only companies have to list equity shares only in their exchange. Okay, it is only not required. Few companies can list their debentures also in stock exchange. Few companies can list their preference shares also in stock exchange. It is not only equity share have to be listed. Okay, whether your preference share is listed, then also for you Ind AS are definitely applicable. If your equity share is listed in stock exchange, in that case also Ind AS is applicable. Or even if your preference share is listed in stock exchange also, in that case also Ind AS is applicable. You just have to remember only one thing, all listed companies, whether it is already listed or in the process of listing, for you Ind AS are going to be applicable. Okay, second point. Unlisted companies whose net worth is greater than or equal to 250 crores 250 crores as on 31st March of the last financial year. Unlisted companies whose net worth is more than or equal to 31st March of the last financial year. Okay. Now you have to tell me what is the meaning of this net worth. I think you have already know this term called net worth in your inter days. Okay. Tell me what is the meaning of net worth. Online students also have to tell. Equity preference shares. Okay, wait. Few answers I am getting. First student is saying long-term debt plus preference shares. That's it. Long-term debt plus equity also. Next, preference also. You are saying same. Okay. Next. Very good. Total assets minus outside liabilities. Okay. So for online students, any answers? Okay. So check this. Net worth is nothing but what exactly is the worth of the company, we have to say. If you look at any balance sheet, if you observe, if you take only the total of all the assets, and if you are thinking that only this is the worth of the company, you are wrong. Correct? Because there are few liabilities also which are associated to that company. So what you have to do is, there are basically two approaches. There are two approaches to find out this net worth. Okay. First approach is, you can just calculate like this also. Take the total assets minus, you have to deduct only outside liabilities. Okay, you have to deduct only outside liabilities. Or second approach is also there. It is nothing but equity share capital plus other equity. Equity share capital, or you can just like this also, shareholders funds. Here I did not written preference share capital. Just be little patient, you will understand why I have not written here. Okay, preference share capital should not be included here. Why? You will slowly understand. Okay, so as of now you have to think like that. We have totally two approaches to calculate this net worth. First approach is what we have to take total of all assets minus outside liabilities you have to deduct. Outside liabilities means other than owners. Other than owners. For example, even if you have long-term debt also, you have to deduct that. Any creditors, any bank loan, all those things have to be deducted. Okay, this is one approach wherein you can get the net worth. Second approach is what, like this also we can calculate equity share capital plus other equity. Okay, for example, let us take one balance sheet just to find out what is the net worth. Simple balance sheet only let us take, no need to copy, just. So we have fixed assets, some 100 lakh. Next, current assets 65. In liabilities, if you observe, share capital 80, other equity 20, bank loan 15, and last creditors. What should be the balancing figure? Balancing figure. This. 50, 50. Okay. Now, using this information, you have to tell me what is the net worth of this entity. 100, correct. We have two approaches. First one, if you take total assets minus outside liabilities, you have to take the total of all assets, which means 165 you will get. Minus this bank loan and creditors, both we have to subtract. Okay, which means 65 you will get 100. Second way is also there. Second way is what? Just to take these figures, share capital plus other equity. If you just add these two items, you will still get 100, which means you can calculate in any of the two methods. Okay, fine. No need to copy this. In many situations, we will calculate this net worth going further. Okay, so here what they are saying, if you are an unlisted company also, you have to check your net worth. Remember, this is not turnover. Net worth, if it is more than 250 crores, which means it is very big companies only. Turnover can be more than 250 crores for most of the companies, but if you calculate the real net worth, for what companies it is more than 250 crores, we have to check on 31st March of the last financial year. Okay, for example, you are checking whether Ind AS are applicable or not for the financial year 25-26. You are checking the applicability for which financial year? 25-26, which means you will calculate net worth as on 31st March 2025. Last day of the previous financial year we have to calculate. If it is more than 250 crores, then from financial year 25-26 onwards for you, Ind AS are going to be applicable. Okay. You just have to calculate the net worth as on 31st March of the last financial year. Okay, fine. Previous year last day చూసుకో. ఇది కనుక 250 crores exceed అయితే current year నుంచి Ind AS అప్లై అవుతాయి. Okay. Third point. REIT and INVIT notified by SEBI. REIT and INVIT notified by SEBI. Okay, see. This REIT and INVIT will be there in your DT syllabus, taxation of various entities chapter. So, okay, so these two topics are there. You can just remember the full forms for this. REIT is nothing but Real Estate Investment Trust. Real Estate Investment Trust. Okay, and INVIT stands for Infrastructure Investment Trust. Infrastructure Investment Trust. Okay, just remember that much. Other details you will know in direct access only. So if you are an REIT and INVIT, and if you are notified by SEBI, for you also Ind AS are applicable, no choice. Okay. First, what we have understood, it is applicable for all listed companies, whether you are already listed or in the process of listing any of your security in any exchange. Okay. Second part, what we have covered, if you are an unlisted company whose net worth is more than 250 crore, more than or equal to 250 crores as on 31st March of the last financial year. Third point, what they have said, if you are an REIT and INVIT notified by SEBI, for you also Ind AS are going to be applicable. One last entity. One last point, central government has power to apply Ind AS on any body corporate Ind AS on any body corporate. Okay, which means what? In future, if central government wants any particular body corporate, for you, I want to apply Ind AS, then it can do so. The power is there with central government. Okay, fine. Just remember these 4 points. So all listed companies, unlisted, whose net worth is more than 250, REIT and INVIT, central government has power to apply Ind AS on any body corporate. Okay, one last one. This is important. You can keep a star. See, if Ind AS applies to any one entity, it should be applicable to all group companies. It should be applicable to all group companies. Okay, so check this. All group companies means parent, subsidiary, associate, or joint venture. Okay, this is a little bit important, so highlight this. Okay, so here what they will say is, if Ind AS is applicable to any one entity based on this criteria, then if you are a part of its group, for all companies, whether you are not covered under these points or not, it is not relevant. If you are part of that group of any one company for which any of this point applies, for all other group companies also Ind AS are applicable. Okay, let's take one short example. I think most of the students have already understood, but just for completion. Okay, see, A Limited is there. Assume A Limited is a listed company. Okay, A Limited is an unlisted company. Its net worth is 300 crores. Net worth is 300 crore on the last date of previous financial year. Which means what? From current year onwards, for A Limited, Ind AS is applicable. Assume there is one entity, P Limited, which is holding 80% shares of A Limited. This P Limited is not a listed company. This P Limited's net worth is not exceeding 250 crores. This P Limited is not an REIT. This P Limited is not any body corporate which is notified by central government. Which means what? For P Limited, normally speaking, Ind AS should not be applicable. But what they are saying, you are a parent company of one entity for which Ind AS are applicable. Therefore, what they are saying, for you also, Ind AS are going to be applicable. Sir, but I am not a listed company. Still, since you are part of a group entity for which Ind AS are applicable, for you also Ind AS is applicable. Second, what they will say, this A Limited is there. This A Limited is holding 80% shares in S Limited. S Limited is also not a listed company. Its net worth is also not more than 250 crores. It is also not an REIT or INVIT. For this also, there is no choice. Ind AS are applicable. Next example. This A Limited is there. This is investing 30%. 30%. See here, this S Limited will become subsidiary of A Limited. P Limited will become parent company of A Limited. Now what have happened? A Limited have invested some AS Limited, 30% it have invested. Now this AS Limited will call as associate of A Limited. Correct? In this case also, this AS Limited is also, sir, I am not a listed company. My net worth is not more than 250 crores. I am not an REIT, but still for you also no choice. Ind AS are going to be applicable. Okay, whether you are holding company of any company for which Ind AS are applicable, whether you are subsidiary of any company for which Ind AS are applicable, whether you are associate of any company for which Ind AS is applicable, for all you also there is no choice, Ind AS are going to be applicable. One last point what they will say, joint venture also they will say. Joint venture means what? Without any shareholding because of some agreement. This more details we will study in our chapter which is Ind AS 110 consolidation chapter. We will exactly understand what is the meaning of this joint venture. But for the time being you can remember like this, rather than having shareholding, what I have did is I have entered into an agreement that I will be having joint control over one entity. Okay, that kind of arrangement will be called as joint ventures. So ultimately what you have to remember, if Ind AS is applies to any entity, it should be applicable to all group companies, whether you are a parent, subsidiary, associate or joint venture. Okay, fine. Next part. Okay, last part what we'll do is 10th point, applicability of AS also. Let us try to write here only applicability of AS. This is not there in your syllabus, but just to make things clear, because here we have studied for which companies Ind AS are applicable. Let us just make it complete by studying for which companies AS is also applicable. Okay. First point, for companies other than which follow Ind AS. Other than which follow Ind AS. Okay. If you are a company, you have only two options. Either you have to follow Ind AS or you have to follow AS. There is no choice. You cannot say that I don't follow Ind AS also, I don't follow AS also. Like that. Like that you cannot say. Check this applicability. If this is satisfied, you have to follow Ind AS. Otherwise, AS you have to follow. No choice. Okay, fine. Second part, non-companies, for example, partnership firms, sole proprietors, these people. Non-companies. Okay, now you have to tell me. For companies we have understood, because of companies accounting standards rules, we have identified that for companies accounting standards are mandatory. But if you are a non-corporate, if you are a partnership firm, do we have to follow accounting standards because of those company standards rules? Answer is no, because those rules are applicable for companies only, correct? So if you are a partnership firm, who will tell you whether you have to follow AS or not? What is the governing body which will say you have to follow AS? Any idea? ICAI will say. Okay, ICAI will prescribe. If you are, for example, if you are a partnership firm, they will say some limits. If your limits have crossed this, then you have to follow few ASs. Like this, company standards rules will not guide because you are not a company. Okay, therefore for you, whether you have to follow any accounting standard or not, that will be explained by ICAI. Okay, just write that point. ICAI requires the application of accounting standards other than companies. Okay, last part. Banking and insurance companies, this is a little bit important. Banking and insurance companies. Okay. If you are a banking company or insurance company also, remember, as of today, for these Ind AS are not applicable. Okay. Still in India, these banks and insurance companies are still following accounting standards only. Okay. Government wants these banks also and insurance companies also to follow Ind AS. But as of now, these banks are not ready to follow Ind AS. Sir, what is the reason? Because if you follow Ind AS, too many disclosures we have to do. While starting Ind AS, slowly we will understand the level of disclosures and all. If for you Ind AS are applicable, even if it is a very small transaction also, still we have to show too many disclosures. Okay, because of which cost will be too higher, compliance requirements will be too higher, and not only that, banks cannot do any frauds. Okay, most of the frauds will be identified if they do proper disclosures. So that is the reason why the government want these companies also to follow Ind AS. But as of now, these are not ready. In future, they will definitely be dragged into the ambit of Ind AS. But as of today, for banking and insurance companies, Ind AS are not applicable. Okay. Also, you have to remember one thing also. We have understood from 2015 onwards, Ind AS are started to be applicable. But what they have did is, they have not asked all these companies to start Ind AS at a once. They have given some phase wise. Okay, first phase, if your turnover is more than, if your net worth is more than 500 crores, like this they have started. Later they have decreased this limit. Okay, phase wise they have started applicability. But for you, there is no need for you to remember all those phase wise applicability and all. If you check in your board book, they will say like this: phase 1 applicability, phase 2 applicability, and phase 3 applicability. Like this they will say. No need to remember all those limits, just remember this limit's more than sufficient. Okay, the last point what you have to remember is, if you are a banking company and insurance company, for you only AS are applicable. Ind AS are not applicable. Okay, fine. So next what we have to do is, just a small thing. Okay, we can just write this summary part. Okay, so here what they will say is non-applicability of Ind AS. Okay, above we have studied applicability of Ind AS. Just for understanding, we have to check this non-applicability of Ind AS. Okay, so check this. First what they will say, banking and insurance company. If you are a banking and insurance company, it is clear that for you Ind AS are not applicable, therefore all AS will be applicable. Second what they will say, if you are a company, if you are a company entity, they will say that if you are covered in Ind AS part, if you are covered in listed, if you are a listed company or net worth is more than 250 crores, then don't come here. Other companies you have to check whether you are a SMC or non-SMC. This I think this is there in your CMA inter syllabus, for which entities accounting standards are applicable, for which entities accounting standards are not applicable. Okay, for you in final level this is not relevant, but just to make it complete we have discussed here. Sir, SMC means small and medium company. Non-SMC means it is not a small and medium company. Okay. what they will say is, if you are in SMC, only limited AS are applicable. Because you are small, what they are saying is just, there is no need for you to follow all ASs, just to follow limited ASs. Sir, what AS we have to follow also is not there in your syllabus. Just remember, if it is an SMC, limited AS are applicable. If it is a non-SMC, all AS are applicable. If it is non-SMC, which means what, you are big only, but not listed. You are not that much big. Okay, you are normally big, therefore for you, they will say in AS, there is no choice for you, you have to follow all ASs. Okay, and then last what they will say, this is little bit, I have to touch. Non-company entity. I am a partnership firm. If you are a partnership firm, for you, whether accounting standard is applicable or not will be decided by ICAI. What ICAI will say, it have divided the categories into level 1 entity, level 2 entity, level 3 entity, level 4 entity. This is also not there in your syllabus. Okay, but just to make it complete. If you are a partnership firm, you have to check whether you are a level 1 or level 2 or level 3 or level 4. Sir, how we can check? Based on the criteria which they have given. They will say turnover limits, paid up capital limits, like this they will say. Okay, capital limits, like this they will say. On that we have to check. If you are a level 1 entity, which means you are higher partnership firm, or you are a higher entity, then for you all A's are applicable. But if you are level 2, level 3 or level 4, for you limited ASs are going to be applicable. Okay, sir, what is the meaning of level 1 entity? Not there in your syllabus. But just remember, if you are a non-corporate entity, you have to check. If you are a level 1, all AS are applicable. Level 2, few in AS. Level 3, more relaxation. Level 4, very, very more relaxation. Okay, just remember this and try to copy this. Non-applicability of end AS. Okay. Whatever I have discussed, just focus on that points only. Whatever they are relevant for our syllabus, we have already covered that part. Okay, these are not required for you, whether it is SMC or non-SMC. How to identify? Those criteria are not there in your syllabus. Okay, this will be there at your inter level. I think in inter also, I think these are not there. I don't know. You only have to tell me. Okay, but this though anyways not required, 100%. But just to check, level 1, level 2, level 3, level 4. Okay. So check this. Here what I have said, only banking and insurance companies are covered. Okay, which means now you have to tell me for NBFCs, if they satisfy this criteria, Are Ind AS applicable for those NBFCs or still ASs are only applicable for NBFC? Whether Ind AS or AS? AS or Ind AS? No, Ind AS. NBFCs are different, banking companies are different. Okay. Banking companies are not brought into Ind AS, but if you are an NBFC, you have to check these criteria. Okay. If it is satisfied, then we have to follow Ind AS only for NBFCs. Okay. Fine. Next. Keep the heading. Let us quickly start with balance sheet format. Division 2 of Schedule 3 to the Companies Act. (2013). Let's write 11th point. Division 2 of Schedule 3 to the Companies Act 2013. Just write that is applicable for Ind AS compliant companies. Ind AS compliant companies. Okay. Just write somewhere Division 1 of Schedule 3. Division 1 of Schedule 3. Tell me for which companies it is applicable. Division 1. Very good. Division 1 of Schedule 3 is applicable for AS compliant companies. AS compliant companies. Last we have Division 3. Division 3 of Schedule 3. This is applicable for NBFCs. Applicable for NBFCs. Just remember, they may ask any MCQ. Division 1 AS, Division 2 Ind AS, Division 3 NBFCs. Okay. If you are done, let us start with balance sheet. Okay. Okay. So see, this is part 1 of the balance sheet. I mean part 1 of Schedule 3 Division 2 to the Ind AS 2013, which means it is applicable for Ind AS. Okay. I have also opened previously AS wala balance sheet. If you remember, it will start from liabilities part, share capital, shareholders funds. It will start like that. Okay. But here if you observe, if you check Ind AS balance sheet, what is the first item which will start, whether it will start with assets or whether it will start with liabilities? It will start with assets. Also remember, particulars, notes, we have to discuss all these items in a separate note items if required. Then we have to state figures at the end of the current reporting period, which means assume you are preparing your financial statements for the financial year 25-26. Here, which figures we have to write on 31st March 2026 figures we have to write? Beside that, just beside that, we have to also give figures as at the end of the previous reporting period, which means what? 31st March 25. Comparative figures also you have to give. This you have already known in previous financials. I mean AS format also, the same thing will be there. Okay, we have to give the current year figures also. Along with that, we have to give the prior period figures also. Okay. So then what we will do is, first our balance sheet will start with assets. First our balance sheet will start with assets. In that also we only have two assets. First one non-current assets, second one current assets. Okay, non-current assets, current assets. We have to remember this format. Okay, so do we have to remember this? Answer is yes, because as I have said that going forward in business combination chapter and in consolidated financial statements chapter, okay, so check this. In this business combination and this consolidated financials chapter also, we have to prepare the balance sheet. Okay, so in order to prepare the balance sheet, at that time, I won't discuss this schedule once again. I won't discuss this balance sheet once again. Okay, so what we have to do is just to stick to what I am saying. You will easily remember all line items in the sequence only you will remember. Okay, just don't worry. First check this non-current assets. What is the first item which is there? Property, plant and equipment. Okay, I will explain each and every item. Don't worry. First, let us try to remember this. Then we will go into each line item, because understanding is also important. At the same time, remembering is also important. This is little bit challenging in a subject like accounts, because even if you understand everything, you have to prepare in the same format as it is. Otherwise, you will not get marks. Okay, so in order to cover that, we will also try to remember the formats also. Okay, you don't have to do anything new. Just stick to what I am saying. Okay. Just remember like this. First one is property, plant and equipment. Second one is capital work in progress. I will explain everything, but just first let us try to remember. Third one is what? Investment property. Okay, just remember like this. In your balance sheet, three tangible assets are there. Correct? Property, plant and equipment is also tangible item. Capital work in progress is also tangible item. Investment property is also tangible item. I will explain the meaning of investment property also, don't worry. Okay, just forget what I have written here. Next part. Goodwill is there. Other intangibles are there. And the third one is intangible assets under development. Okay, so check this. Three intangibles also we are having. Next, what we are having is one biological asset we have one biological asset. Next, we are having one financial asset. In financial assets, we have categories. So 1, 2, 3, 4, which means 4 financial assets we have. And then we are having something which is called as deferred tax asset. Last, we are having other non-current assets. Okay, last we are having other non-current assets. So total 6 categories of non-current assets you have to remember. First we have to remember tangibles, intangibles, biological, financial, next deferred tax asset, last one other non-current assets. Okay, see this is 5th item. Last 6th one other non-current assets. Financial assets is 4th only, and luckily we have 4 financial assets. 3rd one biological, 2, 3 intangibles and 1, 3 tangibles. Okay, just remember like this only. So first we have tangibles, intangibles, next biological, financial assets, deferred tax asset, and last we are having other non-current assets. Okay, we have to practice like this only, then only we will get, otherwise you will not remember this format. Okay, just after going home, just to do whatever I am doing like this. 3 tangibles are there. Next we have 3 intangibles. 1 biological asset we have, and 4 financial assets. Next, deferred tax asset, 1 non-current asset, other non-current assets. Now let us break up. Now let us enter into the breakdown of tangible items. What is the first tangible item which is there in the balance sheet? PP. Second one, capital work in progress. Sir, what is the meaning of capital work in progress? Just hold on, I will explain. First remember, then I will go into each point. Third item is what? Investment property. Third item, investment property. If you check 3 intangibles, what is the first intangible which is there? Goodwill is there. Second one, other intangibles are also there, and intangibles under development is also there. other intangibles is there, and last intangibles under development. This intangibles under development and capital work in progress are little bit similar. Okay, but we will understand. Biological asset also, we only have one biological asset. Financial assets, yes, here we have categories. First check what are there. First, investments are there. Trade receivables are there. Loans, others. Okay, simple. First one, investments, trade receivables, loans and others. Let us write these points. In financial assets, the first item we are having is investments. Next, trade receivables are there. Loans, others. Deferred tax asset, we only have one thing. Last, other non-current assets are there, which are not falling in any of these categories, will automatically come in this other non-current asset. Okay, just tell me once again. First we have 3 tangibles, 3 intangibles. Next, 1 biological asset, 4 financial asset, deferred tax asset, other non-current assets. Now you have to tell me, sir, what are the tangibles which are there? How many tangibles? 3 tangibles are there. First one, PPE. Second, capital work in progress. Third one, investment property. Only these 3 tangibles will be there. Second, what are there? 3 intangibles will be there. What is the first one? Goodwill. Second, other intangibles. Third one, intangibles under development. Here what we have? Biological asset we are having. Biological assets. Next, financial assets also we have 4. First, investment, trade receivables, loans, others. Deferred tax only one item, other non-current assets also. In this, any asset which is not falling into all this will come in other non-current assets. Okay, first properly try to fix this format in your mind. Then we will look into all those items one by one we will check. Okay, so 3 tangibles are there, 3 intangibles, 1 biological, 4 financial assets are there, 1 deferred tax asset, and last we are having other non-current assets. Okay, try to understand. See, currently we are getting an overview of what we are going to learn in the syllabus of this CFR. Okay, at this point of time you may not get complete understanding, but basic understanding is what I am expecting from you. After completion of this chapter, I expect basic points you have to remember. Complete understanding you will not get only by seeing this balance sheet format, because here they have given what? Property, plant and equipment. Sir, but what is the amount which I have to write here? What are the disclosures which I have to do here? Will be clearly explained in separate standard, which is called as Ind AS 16. In our syllabus we are going to learn Ind AS 16. Okay. Investment property also separate standard is there, which is covered in Ind AS 40, not there in your syllabus. Okay, Ind AS 40, which is not there in your syllabus, but we will understand what is the meaning of investment property. But accounting and all we will not do, just we will understand the meaning of investment property. Next, goodwill. For goodwill we have very in-depth discussion. Okay, so intangible asset Ind AS 38 is also explains little bit about this goodwill, and most importantly Ind AS 103 business combinations we will understand more about goodwill. Okay, here they have just given the word goodwill. We don't know how to do the accounting, how exactly we have to calculate the goodwill and all. We will not understand here. We have another separate chapter, valuation of goodwill. Okay, this goodwill will be understood in these 3 chapters. Intangible assets under development is also, it is not a separate standard. If you check this other intangibles now, these are covered in Ind AS 38. All other intangibles, for example, know-how, patents, copyrights, all these things are examples of intangibles. Sir, how to do the accounting and all will be explained in this Ind AS 38. Next, biological assets. If you observe, sir, biological assets, for this also separate standard is there, which is Ind AS 41. This is also not there in our syllabus. 41 is also not there. Okay, 40 is also not there, 41 is also not there. Financial assets, very comprehensive standard, Ind AS 109. This is there in our syllabus. Okay, later you can write all this, just first listen. I'll give time, then you can copy. Ind AS 109, very comprehensive standard. What is the meaning of financial assets we will cover. Next, deferred tax asset, they have said, this is also there in our syllabus. This is covered in Ind AS 12. Okay, starting first class, I have asked you to remember few Ind AS names along with the standard numbers, correct? Then we will find out deferred tax asset. Income taxes, we have a standard which is called as Ind AS 12. Okay, other non-current assets, there is no separate standard. If something which is not covered under any of the above, then it should be categorized as other non-current assets. Okay, fine. These are the standards where we will cover all these items in detail. Okay, again, we have to remember the format. First, we have 3 tangibles, 3 intangibles, 4 financial assets, 1 deferred tax asset, 1 non-current asset, other non-current assets. Tell me what are the 3 tangibles which are covered. First one, PP is there. Next, capital work in progress. Third one, investment property. When it comes to intangibles, what are the items which are there? First one, goodwill is there. Second, intangibles under development. And third, other intangibles. Next, biological assets we are having. Next, financial assets. Financial assets, we have 4 financial assets. What is the first one? Investments are there. Trade receivables, loans, others. Okay. You will remember only in this order also. Like this also, you can remember. You can just practice like this. If you just practice like this, you can aramse remember that. Don't worry. And last, we are having deferred tax asset. We will cover in Ind AS 12. And here, other non-current assets. Okay. These are the, shortly speaking, this is the format which we have to remember. So 3 tangibles, 3 intangibles, 1 biological, 4 financial, 1 deferred tax, and 1 other non-current asset. Here just I have listed the standard numbers. So let us try to correlate whatever the items which we have written with the standard number. Okay, first, PP is given in Ind AS 16. Investment property is given in Ind AS 40, but not there in your syllabus. Ind AS 40, not there in your syllabus. Goodwill, Ind AS 103 they will explain. 38 also they will explain, and we have separate chapter which is valuation of goodwill. Okay. Intangibles, other intangibles we are having Ind AS 38. Biological assets we are having a standard which is called as Ind AS 41. I have not explained you what is the meaning of biological asset and what is the meaning of financial asset. Those we will see shortly. Financial assets, if you observe, we have 4 financial assets. All these are covered in detail in another standard which is Ind AS 109. Next, deferred tax asset, it is covered in Ind AS 12. Other non-current assets, there is no specific standard. Okay. Fine. Let us check each and every item from the starting itself. First one is what they are saying, property, plant and equipment. The meaning of this property, plant and equipment itself will take 10 minutes to explain. But we will not explain right now because anyways, after completion of this basics, the first standard we will start is this in AS 16 only. Okay, at that time we will exactly understand what is the meaning of this property, plant and equipment. But just now for an example, assume I am an entity, I have purchased one machinery. The objective of me purchasing that machinery is to use such machine in the production of goods. It will become my PPE. Okay. Or I have decided to purchase one building. The objective of me to purchase that building is to use the building for administrative purposes. Then also it will become my PPE. Okay. I have purchased this camera which I have to use for recording purposes, which means I have to provide services. In order to provide services, I have to purchase one asset. So this also will become my PPE. In-depth definition we will see afterwards while we discuss respective chapter. Okay. Second one, capital work in progress. Sir, what is the meaning of capital work in progress? For example, I have decided to construct own building which I have to use for administrative purpose. If the building is complete, if the building is ready to use, that will be treated as a PPE. But till the time the building is ready to use, it should not be called as PPE. It will be called as capital work in progress. So once the building's construction is completed, from capital work in progress, it will be transferred to property, plant and equipment. But till then, it should not be called as PPE. It will be called as capital work in progress. Okay. So third, if you observe investment property. So investment property, there is a little interlink between this property, plant and equipment and this investment property. Assume I have one building. If I want to use that building for office purposes, it will be called as PPE, which means for administration purposes, it is a head office. All my employees will sit in that office and they will work from that. It will become PPE. but it will become investment property if my objective is to earn rental income from that property. Okay, my objective is to earn rental income from that property. And second, what they will say is capital appreciation. If my objective is to earn capital appreciation, sir, what is the meaning of capital appreciation? As and when the price of building increases, I will sell the building. I will not use the building in my business. Either I will give as rent to others, or I will sell the property whenever the prices of building increases. If my objective is that, earlier speaking, in your AS standards, this investment property is not there. Okay, if you check old balance sheet format, check this. Tangibles, intangibles, capital work in progress, intangible assets under development, non-current investments, deferred tax. Okay, you have to identify and tell me what are the assets which are not there in your AS but there in Ind AS. Just look at this and tell me what are the items which are not there in AS but which are there in Ind AS. Tell me. Very good. Biological assets are not there. Next one. Just remember 3 tangibles, 3 intangibles, 4 financial assets. Check in the balance sheet whether they are there or not. Old balance sheet. Check here. Financial assets are there or not there? Okay, directly they are not there, correct? Financial assets is very comprehensive thing, but that much detail it is not there in your old accounting standard days. Okay, so financial assets to some extent they are there, but not completely. Next one. Just now we are discussing something. Investment property is also not a separate line item in your accounting standards. Sir, where in earlier accounting standards we have to disclose this investment property, this will be disclosed in PPE, tangible assets only we will disclose. But now Ind AS have provided a separate line item only for those investment properties. Okay, because we have to separately disclose those items which we are holding only for the purpose of earning rental income. Okay, that is not there in our syllabus, so we will not go much into that. Ind AS 40 is also done. Next, goodwill. Goodwill are basically 2 types. More discussion we will learn after going into the standard. But for now, we can remember like this. Self-generated goodwill will be there. Second one, purchased goodwill also will be there. Self-generated goodwill and purchased goodwill. These 2 types of goodwill will be there. Sir, what is the meaning of self-generated goodwill? Assume I have started some business some 20 years back. Since I am doing the business for the past 20 years, I have an advantage over my competitors, correct? I exactly know what the customers in my area want. So I can customize and I can customize my business processes according to the needs of the customer. This kind of goodwill will be called as self-generated goodwill. Another type of goodwill is also there. Sir, what is that another type of goodwill? That is called as purchased goodwill. Sir, what is the meaning of purchased goodwill? Let us try to understand. Okay, assume you have decided to purchase one entity which is P Limited. You have opened the balance sheet of P Limited and then you have identified total of assets is 1 crore. Total of assets is 1 crore and obviously total of liabilities also will be 1 crore. Okay, in that capital is there, capital 80 lakhs and some bank loan is there. Bank loan 20 lakhs, just assume. It is having one assets also like building is there 60 lakh and inventory, cash. These items if you take the total we got 40 lakhs. Now I have decided to purchase this total B Limited. I don't want to purchase this building separately, inventory separately, cash separately. No, I want to purchase this entire B Limited as a business. I want to purchase this entire business of B Limited. Now what we will see is we have to check the net assets of this B Limited. Net assets are nothing but net worth. Whatever net worth we have calculated, same net worth, another name is nothing but net assets. If I want to purchase B Limited, I will check what is the value of B Limited. What is the value of B Limited? If you are saying the value of B Limited as 1 crore, it is wrong because we have ignored liabilities. Which means what? We have to also consider the liabilities also, which means total assets minus outside liabilities. If you do, you will get net worth. Same net worth will be also called as net assets. Okay. I have calculated, and the value of the total business is 80 lakh. Okay, this is the value which I have got. But this B limited person is asking me to pay 1 crore rupees. Okay, let us assume 1 crore 50 lakh. B limited is asking me to pay 1 crore 50 lakh rupees. But what is the net worth of the company? Net worth of the company is nothing but 80 lakh only. But he is not enough. He is not satisfied. If I pay him 80 lakhs only, then he will say, get out, I don't want to sell you. You have to pay how much to acquire that company? 1 crore 50 lakh you have to pay. But you will say, sir, only the net assets of the company are 80 lakh only, but some invisible asset value is there. That invisible asset value is nothing but goodwill. Which means what? Net worth of the business is only 80 lakhs. But since you are paying 150 lakhs, differential amount 70 lakh is called as purchased goodwill. This is also called as goodwill only, but this you will calculate at the time of purchase. Therefore, it will be called as purchased goodwill. This purchased goodwill accounting you will understand in Ind AS 103, because same example what I have discussed, this kind of examples only we will solve in business combination chapter. We will acquire another entity, we have to calculate the net worth of the company, and we have to find out goodwill. This kind of goodwill will be called as purchased goodwill. Second type of goodwill is what? Self-generated goodwill. Self-generated goodwill means I only doing my business, I don't want to sell to any person. But if I prepare my financials, in my financials also, I will say that some goodwill will be there. Correct? That is called as self-generated goodwill. Just remember this much. How to do accounting of self-generated goodwill, we will study later in intangibles. How to do accounting of purchased goodwill, we will learn in Ind AS 103. Okay, just remember goodwill is of two types. Purchased goodwill also will be there. Self-generated goodwill also will be there. Next, if you observe other intangible assets. Other intangible assets. For example, in COVID time, I have developed one vaccine and I have patent which is registered in my name. That will become my intangible. That will become my intangible. Many examples you can say for this intangibles. Copyrights, trademarks, know-how, technical knowledge, all this will become intangibles. If the intangible is complete, it will be categorized in this other intangibles. Sir, if the intangible is not yet complete, it is still under development phase only, then it will be categorized here. Sir, what is the meaning of development phase only? Assume I am in the process of preparing COVID vaccine, still I have not completed. If I have completed, I will register patent in my name and it will become my intangible. But in the process, it is not yet finalized, it is not yet completed. So till then it will be categorized here, which is intangible assets under development. Okay. We have completed 3 tangible parts also we have done, 3 intangibles also we have completed. Next item, what is there? Biological assets. This is a little bit important because this line item also is not there in earlier accounting standards. Okay, we will try to discuss this biological assets part and then we will stop, because this financial assets also is a pretty big discussion which will be completed in the next class. But let us complete this biological assets. Okay, try to understand. Biological assets. They are saying other than bearer plant. Here only they will say that biological assets other than bearer plants. Okay. So first of all, we have to understand the meaning of biological assets. Second, we also have to understand the meaning of bearer plant also. Okay. Let us take an example. One tree is there. Okay. Assume one mango tree is there. Okay. Few mangoes are there. Now you have to tell me. Assume this is summer season. Okay. Once the mangoes are fully grown, will you take only these mangoes or will you cut the entire tree? Will you take only mangoes and you will sell? Again mangoes will be grown. Will you do like this or will you cut the entire tree and next time you will plant entire mango plant afresh? No, correct? Okay. We will only take whatever required mangoes we want and then we will leave the plant as it is. In next season again it will give me new set of mangoes. Correct or not? If you observe, This mango tree is called as a bearer plant. First of all, the meaning of these biological assets are nothing but living plants and animals. Living plants and animals are these also assets? Yes, these are also treated as assets. This is not said by me, this is being said in Ind AS only. Sir, why they are treated as assets? This is the example. See, this is what this mango tree. I will not cut the entire mango plant. Just I will take the mangoes and I will leave as it is. In the next season, again it is going to produce new mangoes. If you observe the definition of PP, if you compare this with machinery, with that machine I will be using to produce some goods. Once the goods are produced, I will not sell the machinery, I will not purchase the new machinery once again, correct? I will keep the machine as it is. Next time also I will try to produce some goods from the same machine. If you compare that with this mango tree, it is also a bit same, correct? New mangoes will be grown, you will take these mangoes and again mangoes will be grown to this plant, which means what? It is also a definition of a asset only. It is also similar to PP. It is also similar to PP. And this mango tree is an example of bearer plant. If, first of all, it is a biological asset only because it is a living plant. If it is a biological asset and if it is a bearer plant, it is PP. It is similar to PP. Therefore, what they are saying is more clarity you will get when we discuss this in days 16. But now only try to understand. First of all, if it is a biological asset, we have to check whether it is a bearer plant or not. If it is a bearer plant, it is very similar to PPE. Correct or not? If it is similar to PPE, just include in Ind AS 16 only because it is similar to PPE. But some biological assets other than bearer plant, whatever we have. Sir, other than bearer plants means what? For example, if you observe sugarcane, once the sugarcane is grown, you will not only take the sugarcane, you will entirely cut the plant, which means what? It is not a bearer plant. It is not similar to PP. More discussion I will do again while we discuss in days 16. Okay, if you observe cows and buffaloes, sir, are they also assets? Yes, they are also assets. If you look at Amul balance sheet, if you look, only figure which they will have, I mean huge amount of figure is in biological assets. Sir, are they bearer plants? No, they are not bearer plants. For them, separate standard is there. If you are other than bearer plants, example buffaloes, cows, goat, all livestock, these are not PPE. Sir, why these are not PPE? Because if you observe PPE, we have to do depreciation. Okay, we have to do carrying amount recognition, derecognition, and all those things we have to do. Similar things we cannot do for this buffaloes or cows. Entire nature itself is different. Therefore, what they have did is, if you are a biological asset but not a bearer plant, for you, separate standard they have designed. Sir, what is that separate standard? That separate standard is Ind AS 41, which is not there in your syllabus. But this is there. If you are a bearer plant, for example, if you are a mango tree, or even if you are an apple tree also for that matter, apple orchards, etc. All these things are bearer plants. Sir, first of all, are they biological assets? 100% yes. Again, you have to check, are they bearer plant or not a bearer plant? If it is a bearer plant, for you what is applicable? Ind AS 16 is applicable. But if I am not a bearer plant, then only we have to disclose here. Biological asset other than bearer plant, Ind AS 41. Sir, but what if it is a bearer plant? For you, Ind AS 16 is only applicable. Sir, will you say this point again? Again I will say while we discuss Ind AS 16. At that time also same definition I will use. Bearer plant discussion, then I will explain you. Okay. To conclude today's class, I just want you to go home and practice the format of non-current assets. Okay. So what you have to do is, these three tangibles we have written somewhere, correct? Okay, no problem, we can remember. So 3 tangibles are there, 3 intangibles, 1 biological, 4 financial assets. This financial assets is a little big thing, so we will cover that in tomorrow's class. Tomorrow's only we will complete this other current assets also. Current assets is very simple. Only thing challenging is this other non-current assets. Once this non-current assets are completed, same to same points, ditto points will be there in current assets, and liabilities part is very, very simple. Liabilities, nothing is there, very, very shortcut. We only have to cover something which is called as a statement of profit and loss in detail. In statement of profit and loss, we have one item which is called as other comprehensive income, which is total new point to you. So there we have to pay more attention. Okay. So as of today, what we have completed is, we have completed the applicability of Ind AS. Where is it? We have completed the applicability of Ind AS portion, we have completed. Applicability of AS also we have covered. For banking companies, what are applicable, all those things also we have covered. Balance sheet format we have not completed still. Okay. I will make you to write the balance sheet format. This is the format which we have to write. In the next class, I will ask you to copy. Okay. So this format is there. Name of the company, format, all these things we can copy in next class. But just try to remember what we have discussed in this non-current assets section. Okay. So fine. That's it for today. We'll continue in next class. Okay. Good morning. In last class, what we have covered? We have completed this applicability of Ind AS portion, and then we have quickly moved to balance sheet format. And what we have tried to complete, we have tried to complete this non-current assets, but it is not fully completed. Okay. Only we have completed tangibles, intangibles, and biological assets we have completed. So let's quickly check what we have covered, and then we'll move to the balance part. Okay. Fine. Let's start from this applicability part. Okay, see. First of all, we have understood Ind AS is applicable to all the companies which are already listed or any companies which are in the process of listing. Okay, it is not only equity shares where you have to list, any other security, for example, either debentures or preference shares or any security for that matter in any exchange, either NSE or BSE, in any exchange if it is listed for you, Ind AS are mandatorily applicable. That is the first part. Second point, what they will say, even if you are an unlisted company, you have to check your net worth. It should be more than 250 crore as on 31st March of last financial year, we have to check. If on last financial year 31st March your net worth is more than 250 crore, then from current year onwards Ind AS will be applicable. Okay. Then we have also understood the meaning of net worth also. This net worth we will try to calculate in number of times in different chapters. So currently we have to remember net worth is nothing but total assets minus outside liabilities. Outside liabilities we have to take. Okay, fine. Next, if you are an REIT or INVIT also, and if you are notified by SEBI, for you also Ind AS are applicable. We have not discussed much into this because further details you will understand in direct access, but we have just understood the full forms of this. REIT is nothing but real estate investment trust. InvIT is nothing but infrastructure investment trust. That's it. That is more than sufficient. Next, any other body corporate, if the central government wants to notify, it can do, is what we have understood. And finally, this is the most important part which you have to remember. If for any one entity, Ind AS is applicable for all group entities, which means its holding company. It may not be an listed company. It may not satisfy this criteria, but still, if it is a part of the group, then for that also, Ind AS is going to be applicable. So what is the meaning of group? We have understood associate, subsidiary or joint venture or even holding company also. You can add this point also. Holding or parent company is also covered under group. You can add that point. Okay, so parent company or holding company is also applicable. You can add the word parent company here. Okay, so next. Next, we have understood for which companies AS is applicable. AS also, we have understood for companies only two options are there. Either you follow Ind AS or AS. No other choice. You cannot say that I don't want to follow any AS. Okay, either you have to follow Ind AS or AS. That's it. If you are a non-company, ICAI will prescribe what accounting standards are applicable for you. Assume you are a partnership firm or you are a sole proprietorship for you. ICAI will prescribe few standards which should be applicable. And the most important we have understood, for banking and insurance company as of today, Ind AS are not applicable. Government wants these companies also to follow Ind AS, but as of now, accounting standards are only applicable for these companies is what you have to remember. Okay, next part. Next. If it is a company entity, it will be further classified into SMC or non-SMC. Just remember this. No need to identify what is the criteria for SMC and what is the criteria for non-SMC. It is not applicable. Just remember and it is fine. If it is a non-company, level 1, level 2, level 3, level 4 entities, this should be there in your inter syllabus. But okay, it is not there in your final, so don't worry. And then we have started with division 2 of schedule 3 balance sheet format. Correct? First, you have to have this much clarity. Division 1 is applicable for AS entities. Division 2 is applicable for Ind AS entities. And Division 3 is applicable for NBFCs. We have also understood one point for NBFCs, Ind AS are applicable. Okay? If it is a listed company, mandatorily. If it is unlisted, you have to check net worth. That criteria will remain same. Okay? For banking, they are still under AS only. Okay? Fine. Next, we have started with the amended division 2 of the schedule 3. This you have to write. This we have not written. So first we will complete other part also and then we will start. So check this. Let's quickly practice the balance sheet format once again and then we will move further. Okay. We have understood. Ind AS balance sheet will start with assets. This is the first difference you have to remember. Whereas AS balance sheet will start with liabilities, shareholders, funds. In assets also, first you are having non-current assets. In non-current assets, we have totally 3 tangibles, 3 intangibles. Next one, 3 tangibles, 3 intangibles. Biological asset, 1 biological, other than bearer plant. Next one. Very good. How many financial assets? 4 financial assets. Next. 1 deferred tax, very good. Last, other non-current assets. 3 tangibles, what are the 3 tangibles which we are having? PPE will be there. Capital work in progress, investment, property. Just try to remember in the same order, okay? Because anyways later you will forget that for sure, but at least for now, try to remember the order. Okay, intangibles. What is the first intangible? Goodwill is there. Other intangibles and intangibles under development. 1 biological asset, that also other than bearer plant. Because in last class I have explained bearer plant is also nothing but PPE. Just remember mango tree as an example of bearer plant. It is similar to PPE. Therefore, it is also covered under PPE. Okay, again in Ind AS 16 also I will explain the meaning of bearer plant. But in order to remember the balance sheet format, just understand. If it is a bearer plant, it will come in PPE. But if it is other than bearer plant, for example, cows, buffaloes, etc., then it will come under this line, biological asset other than bearer plant. 4 financial assets. What are the 4 financial assets which are there? I think investments is the first one. Investments is there. Trade receivables is there. Loans we are having and others. Okay, we have stopped here, I think. So we have to understand from financial asset. Fine. Deferred tax asset is also there, and then finally other non-current assets. Okay, fine. So from now, let us quickly understood the meaning of this financial asset. I will make you write this format, but once after completing all the items, then you can copy that part. But first let us try to remember. Financial assets. Now the whole discussion will be about financial assets. You have to tell me what is the meaning of financial asset. Okay, you have not learned the standard, so whatever you know, just let me know, that's it. We will check the correct answer. What is the meaning of financial asset? Or any examples you can give. Meaning I will say, you have to give any examples. Any example, financial asset. No, plant and machinery is not a financial asset. Okay. No, that is also investment property. Separate asset is already there. Okay. First we'll see the definition, then we will understand. Financial asset is nothing but, this you don't know, but fine. Examples you can relate. Contractual asset, contractual right to receive the cash. Financial asset is nothing but, in your balance sheet, if there is any line item, if you are having any contractual right to receive the cash, that will be called as financial asset. Let us take examples and you will understand. For example, in my balance sheet, assume there is something which is called as debtor. Debtor balance of 1 lakh rupees I am having in my balance sheet. Do I have right to receive the cash from that person? Yes. If that person doesn't pay, then I can sue him in the court of law. Correct? Then I can sue him. So this debtor is nothing but a contractual right to receive the cash. Therefore, this debtor will become my financial asset. Let us take few examples, then only we'll understand. Because this is very comprehensive standard. Complete clarity you will get in Ind AS 109 only. But just for understanding the balance sheet format, let us learn few things. Okay? Debtor is fine. Next, if you observe, assume you have given a loan to your friend. For example, 10 lakh rupees. This will appear as asset in your balance sheet. Correct? In future, do you have contractual right to receive the cash or not? In future, will that person pay or not? Friends usually will not pay. But for example purpose, do you have a right to receive the cash or not? Answer is yes. If you have the right to receive the cash in future, then it is called as financial asset. Then it is called as financial asset. Next example also, just try to remember the examples because we will anyways have in-depth standard later. I have invested in Jio Limited. I have made an investment in equity shares of Jio Limited. In future, if I want, I will get the dividend income also. Or if I sell this item, I will obviously receive, capital appreciation I will receive. Which means, in future, if I sell these items, I have a contractual right to receive the cash. No need to sell. If I just hold this asset, I will obviously receive dividend. Correct or not? If the company declares, I will obviously receive something which is called as dividend. Which means what? Financial asset is nothing but any contractual right to receive the cash. PP is not your financial asset because just if you keep that PP like that without doing any production and all, you will not receive any cash flows. Correct? But debtor, it is totally fine. You have already made the sale. You have already entered into a contract. So that person have to definitely pay you. Otherwise, you can sue that person in the court of law. Which means what? Debtor, loans, investments, everything will be called as financial asset. Even cash is also a financial asset. Sir, why this cash will be treated as financial asset? That you will understand in Ind AS 109. Okay. Fine. So this debtor, loan to friend, investment in equity, all these items will be treated as financial assets. So check this part. PPE, capital work in progress, investment property we have completed. Capital work in progress is nothing but till the property is totally ready, until till in the completion stage, during the completion stage, whatever the asset which you are constructing, that will be classified as capital work in progress. Once it is completed, then balance in this will be transferred to PPE. So till that time, asset should be remained in capital work in progress stage only. Investment property also we have completed. Investment property is nothing but assume I am having one building. I am not using that for my office purposes. I am not using that for production of goods or rendering of services. My objective is what? To give that building on rent, to earn rental income. Okay, this is what you have to remember, but this is also not there in your syllabus. Okay, but just we have understood the meaning. Goodwill, fine, detailed discussion is there. Other intangibles, we have a separate standard in days 38. Intangibles under development also, same, in that only we will cover. Biological assets other than bearer plants. Again I am saying biological asset, if it is a bearer plant, it should be categorized in PPE. Further discussion we will again do in days 16. Okay, just now we are having an overall picture of what are the items which are there in the balance sheet. Further complete details you will get in respective chapters only. Next comes financial asset. Sir, financial asset meaning you just try to remember. Financial asset is nothing but contractual right to receive the cash. Just remember few examples. You have to remember these line items for sure. Investments are there, trade receivables, loans, others. Okay, all these items are categorized into financial assets. Fine. Financial assets is also completed. Next comes deferred tax assets. Deferred tax assets also we have a detailed standard which is in days 12. But for the time being you have to remember just the few things. I think you all know that as per income tax, accounting treatment is little bit different. As per our books of accounts also, accounting treatment is little bit different. Few examples, very basic if you observe, depreciation as per income tax is totally different and as per your books of accounts is also totally different. Correct? Which means we will prepare profit and loss account as per the depreciation rates which are given in Companies Act. But income tax people will say that whatever you have calculated depreciation as per Companies Act, that is not required for us. We want separate depreciation to be calculated. You will pay tax on the PGBP income as per income tax only, not as per Companies Act. But in your books of accounts, you will prepare income which is as per Companies Act, which means obviously there will be difference between profit as per Companies Act and profit as per income tax. Because of which, see, assume here the profit is 10 lakh rupees. Here the profit is 15 lakh rupees. As per income tax, if you observe, see in your books of accounts, you are saying your profit is 15 lakh, but income tax is saying no, your profit is only 10 lakh, you have to pay tax on this. If you observe, when compared to books of accounts, you are paying less tax now. Correct or not? Now you are paying tax only on this 10 lakh rupees, which means in future you have to pay more tax. So you have to create deferred tax liability. You have to create something which is called as deferred tax liability. Don't worry about this point because this is very comprehensive standard. We have to cover with number of examples, then only you will get complete clarity. Another small example, if you observe, in PGBP, in income tax, there is one section which is called as section 35 AD. Section 35 AD, PGBP. It is nothing but specified business. What they will say is, if you purchase any plant and machinery, if you purchase any building, on those items, even if it is a capital expenditure, what they will say is 100% will be allowed as deduction. 100% they will give us deduction only in the first year only, but Companies Act will not allow that. It will say that no, you have to provide depreciation based on the useful life. But PGBP is saying no, 100% you will get in the first year only, which means obviously there will be a difference in the profit as per income tax and the books of accounts. If you remember, disallowances are there in PGBP chapter, but those disallowances we will never study in Companies Act. Correct? Don't focus much. We will solve very more and more examples we will solve while we discuss this in days 12. But just now try to understand profit as per books of accounts and profit as per income tax, both are different. If these two are different, then obviously tax expense as per books of accounts and income tax is also different. In order to match, we have to create something which is called as either deferred tax asset or deferred tax liability. If it is an asset, it will appear here. If it is an asset, it will appear here. If it is a liability, it will appear in the liabilities section, deferred tax liabilities. Okay, just remember that, more than sufficient. Fine. Deferred tax asset is also completed. And last, if you observe, we have something which is called as other non-current assets. Any asset which is not categorized into above all categories, then it will be classified as other non-current assets. Okay, just remember that part. We have completed this non-current asset section. Then we will quickly move to current assets. Okay, let us just once again revise all these line items, and then we will immediately start with current assets. Okay, fine. One last time. If you do like this, then only you can remember, otherwise you will not. Okay, so tell me, first we have completed non-current assets section. In non-current assets, we have 3 tangibles, 3 intangibles. Next, 1 biological, but not all biological, other than bearer plant. Next, 4 financial assets. Next, deferred tax asset, and last, other non-current assets. Correct? In what are the 3 tangibles which are covered? PP, capital work in progress, investment property. Next, out of these 3 intangibles, if you observe, goodwill is there, others intangibles under development. Biological asset is other than bearer plant. 4 financial assets, if you observe, first we are having investments, trade receivables, loans, and others. Deferred tax, only 1 item. Other non-current assets, okay, something which is not falling under all the above will be categorized as other non-current assets. Okay, first what we have to do is, first online students also please confirm if you have understood till here. If you have understood, let's copy the format first and then we will proceed further. Okay. Okay, meanwhile you can copy this format and then we will start with next part. Okay, you have to copy from here, I think. Have you copied these items? Earlier you have copied. Now also copy once again. Division 2 of, I think you have written once again. ఈ 3 రాశారు కదా. Division 1, Division 2, Division 3 తర్వాత నెక్స్ట్ కాంపోనెంట్స్ ఆఫ్ ఫైనాన్షియల్ స్టేట్మెంట్స్ అని పెట్టి ఈ 5 ఐటమ్స్ రాసేసి ఫార్మాట్ డ్రా చేసుకోండి. ఓకే, ఫైన్. Okay, only 3 members, I think they are fine. What about others? Are you there, sleeping or what? Online students, please respond and copy. Copy this part, components of financial statements, and then format. Okay. Just copy fastly. We have to complete whole balance sheet today only, and we have to start P&L account also. So students who are watching in YouTube also, please confirm if you have understood. Just write this. I will explain about this. Cash flow statement in days 7. Okay, just write. This is SOCIE, statement of changes in equity. Okay. Okay, in that division, first part talks about balance sheet, format of balance sheet.
Beside you can write standard numbers also, just to interlink. PPE Ind AS 16. Investment property Ind AS 40, but this is not there in your syllabus. Okay, but just for knowledge purpose. Goodwill, we have multiple standards. Main Ind AS 103, and some reference will be given to 38 also. Intangibles. Other intangibles Ind AS 38. Biological assets, we have Ind AS 41, which is also not there in your syllabus. Financial assets Ind AS 109, very very big standard, very very important. Okay, copy till this other non-current assets. Balance part we will do after completion of others. Copy till here. Fine. Okay, so let's check. I'll share this PDF later in the group, don't worry, but just remember now. Focus. Non-current assets discussion is completed. Okay, current assets is very simple. Current assets, just to check, we have only 4 current assets. First one, inventories, financial assets, current tax assets, other current assets. That's it. Let us try to remember this part also. See, just compare non-current assets and then easily you can able to write this current assets. In non-current asset, what is the first time which is there? Tangible assets. PPE will never become part of your current asset. Capital work in progress also will never become part of your current asset. Similarly, investment property also. So the tangible item will not come in current assets. Second, if you observe intangibles also, generally goodwill is also never a current asset. Other intangibles also will never become current asset and all those things. But one common item which will be always there in your current assets is inventory. Inventory is there. Next, if you observe if you observe non-current, tangible assets are not a part, intangible assets are also not a part. Next, what is the third item which is there in non-current assets? biological assets is there. Biological assets are also, usually they are long term only, therefore always they will form part of non-current assets, therefore they will also never appear in this current assets. What is the next item which is there? Financial asset. Financial asset will become part of current assets because trade receivables will be there, which will be realized in less than 1 year, therefore that will become current assets. For example, one loan is there, that loan should be repaid in the next 6 months, then that also will become my current asset, like this. So financial assets will become part of current assets. So financial assets will be there. Next, if you observe, deferred tax asset we are having in non-current. If you pay any advance tax, or if any refund is there, it can be either income tax or it can be either GST or any taxes. If any refund is there, that is your asset, correct or not? So if it is current, which means if it is receivable in the next 12 months period, then it will be treated as current tax asset, new item which they have created, which is nothing but current tax asset. Last item is nothing but other current assets. Something which is not categorized under these three will be categorized here. For example, assume you have prepaid expenses. Prepaid expenses is an asset, correct? It is not an inventory. It is not a financial asset because from prepaid expense you will not receive any cash in future, correct? You have already paid. So, but what is the definition of financial asset? In future you should have a contractual right to receive the cash. From this prepaid expense you don't have any right to receive cash in future. Therefore, this prepaid expense is not a financial asset. It is not related to tax also. Therefore, it will categorize in other current asset. Okay, simple. Current assets, only 4 items you have to remember. Inventories, financial assets, current tax assets, other current assets. But breakdown is there only in this financial assets. Whatever 4 financial assets which are there in non-current, same copy paste. Investments is there, trade receivables is there, loans, others. So 4 items are copy paste. Other than this, 2 new items. First one, cash and cash equivalents. Next, bank balance other than which are covered in this. Okay, simple. Very simple. Current assets, only 4 items are there. First one, inventories. Second, financial assets. Third, current tax assets. Last, other current assets. In financial assets, we have breakdown. That breakdown is also not completely new. First 4 items are as it is copy paste in non-current assets. Investments is there, trade receivables is there, loans is there, others are also there. But other than these 4, 2 new items are there, which are nothing but cash and cash equivalents and bank balances, which are covered other than 3 above. Okay, so with this we have totally 6 items. 6 items in this financial assets. Okay, first let us try to remember everything because we should not forget what we have learned. Okay, so first tell me non-current assets. How many tangible assets are there? 3 tangible assets are there. What are those? PPE, capital work in progress, investment property. You have to do multiple revisions, then only this format will be fixed in your mind. Next, we have 3 intangibles. What is the first one? Goodwill, other intangibles, intangibles under development. Next, biological assets other than bearer plant. Next, 4 financial assets. What are the 4 financial assets? Investments will be there, trade receivables will be there, loans will be there, other financial assets. Next one we are having deferred tax assets, and last we are having other non-current assets. Same to same criteria apply for current assets also. See, this tangible will not be there in current assets, intangible also no, biological also no, but apart from all these above, we only have one thing which is called as inventories. Inventory. Financial asset, yes, it will there in current also. Sir, what are the items which are there? Same to same copy paste those 4 items. Loans will be there, trade receivables will be there, investments will be there, others will be there, and 2 new items, cash and cash equivalents, bank balance which are not covered under above. Financial assets also done. Next one we are having current tax asset, and last we are having other current asset. Okay, that's it. You have to revise this number of times. You have to revise this number of times. If you just practice like this 3 to 4 times, this format will be fixed. Okay, fine. So this assets related discussion is completed. Assets, non-current assets we have totally completed. All non-current assets, and even current assets also we have completed. Okay, you can write this little bit later. But let us start the next discussion also, which is nothing but liabilities portion also. Let us try to complete. Okay, just a minute. So be very attentive for the next 20 to 30 minutes because it is very, very important discussion which we don't know earlier. Okay, so check this. AS balance sheet will start with equity and liabilities. In that, the first item which is there is what? Shareholders funds. Shareholders funds. This is AS balance sheet. Okay, division 1. Division 1 schedule 3. AS balance sheet. Okay, check this. Equity and liabilities. First we have shareholders funds. In that, what is the name which they have used? Share capital only. That's it. Either it is equity share capital or either it is preference share capital. Both will appear here only. Correct? Share capital you can either raise from equity shareholders or you can either raise from preference shareholders. Whatever the share capital, both should appear in this only. Correct? If you check Ind AS balance sheet, after completion of assets, second item which will be called as equity and liabilities. Equity and liabilities. What is the first part which is there? Equity. Only equity is there. But here what is there? Shareholders funds is there. First difference. Next, share capital, other equity. Okay, fine. Here, share capital, reserves and surplus. See, this share capital is what? Both equity and preference. But here specifically we have kept only equity, which means which share capital we have to consider here? Only equity share capital you have to consider here. Sir, why we have to only include equity share capital here? That is the first point of discussion. So, be very attentive. Listen. Assume you are a company. You want 10 lakh rupees. 10 lakh is very small. Assume you want 1 crore rupees. You want this 1 crore, so you have multiple options. If you want, you can raise in the form of equity share capital. If you want, you can raise in the form of debentures. Debentures, assume these are redeemable after 5 years. Which means once these 5 years are completed, you have to repay. In the same manner, it is having an option to go for preference share capital also. It have an option to go for preference share capital also. Assume this is also redeemable after 5 years. Okay. These debentures are nothing but 15% debentures. Assume preference share capital also. These are also 15% preference shares. What is this 15% in case of debentures? This is nothing but coupon rate, interest. Okay. What is this 15% in case of preference share capital? Preference dividend. Okay. Forget this equity for the time being. The company is having only two options. If it wants 1 crore, either it can arrange through issue of 15% debentures which are redeemable after 5 years, or 15% preference share capital which are redeemable after 5 years. Assume these two options are there in front of the company. First option, the company have decided to go for this debentures. If this in these debentures, what the company have to do? Every year at the end of first year, it have to repay interest. Correct? In this 1 crore into 15%, if you calculate, you will get how much? 15 lakh. Every year, year 1 to 5, it have to pay 15 lakh. And assume this repayment is done only at the year 5. Complete 1 crore at the year 5 only they will pay. Which means what? In the end of year 5, they have to also make a payment of 1 crore. Just forget about time value, just try to understand the concept. Okay. In the same manner, assume I have issued the preference share capital also. I have to pay every year 15% dividend. Correct or not? Which means every year I have to pay how much? 15 lakh as dividend. 15 lakh I have to pay as dividend. And at the end of 5 years, I have to pay how much? 1 crore rupees. Here I will pay preference dividend. Here I will pay interest. Here I will pay preference share capital. Here I will pay debenture amount, principal amount. If you observe Ind AS, what Ind AS is saying is, either you have issued debentures or preference share capital, my cash flows are not going to change. Either you have issued debentures or either you have issued preference share capital, my cash flows are not going to change. Sir, what is the meaning of cash flows are not going to change? If I issue debentures, I am paying interest. If I am issuing preference shares, I am paying preference dividend. Only names are changing, nature of these cash flows are not changing. Either it is a preference share or a debenture, after completion of 5 years, I have to definitely pay this 1 crore rupees. But if it is an equity, it is not an obligation for me to pay to the equity shareholders. Correct or not? If the company is having funds, it will pay. Otherwise, not required. But if you observe this preference share capital, if it is a redeemable preference share capital, definitely company have to pay after the end of 5 years. Which means what they will say is, even in this case also, see, if you remember the financial asset definition, what is the financial asset which we have understood? Financial asset is nothing but contractual right to receive the cash. Correct? Similarly, I will explain you the definition of financial liability also. If it is contractual right to receive the cash is financial asset, what should be the meaning of financial liability? Contractual obligation to pay the cash. Correct? If the entity is having contractual obligation to pay the cash, it will become financial liability. What ultimately I wanted to say is, either you have issued debentures or preference share capital, nothing is going to make any difference. From Ind AS perspective, if you observe the substance over form, either it is debentures or preference shares, there is no difference. So what they will say is, apply the same accounting treatment for both debentures also and preference share capital also, which is the first fundamental difference as per your old AS. Old accounting standard days, no, preference share capital is also, it is a shareholder. These are also shareholders. Therefore, that amount will be shown in shareholders funds. This amount should be shown in shareholders funds. Old accounting standards perspective. But that is totally wrong if you understand the Ind AS objective. Okay. Here you are paying interest. Here you are paying preference dividend. That's it. Only names change. Nothing will change. Here you are paying principal repayment. Here we are paying redemption of preference share capital. Nothing is going to change. Which means what? Either it is debentures or either it is preference share capital. Both accounts should be exactly same. Both accounting should be exactly same. This complete accounting, how to do the breakup, how to do the accounting of this liability and also this preference share capital, we will clearly understand while we discuss this Ind AS 109 only they will explain. Okay, in Ind AS 109 only, they will explain the accounting of financial assets also and they will explain the accounting of financial liabilities also. Which means what is the conclusion which you have to draw now? Whatever preference share capital which is there now, preference share capital is not an equity, which means it is not a shareholder funds. Sir, now what is preference share capital? It is stated as financial liability. It is stated as financial liability. This is the first fundamental difference which we have to remember. Okay, preference share capital. ఇప్పటి వరకు మీరు ఏదైతే చూసారో ప్రిఫరెన్స్ షేర్ క్యాపిటల్ అనేది షేర్ హోల్డర్స్ ఫండ్స్ నో, ఇట్ ఈస్ టోటలీ రాంగ్. ఫ్రమ్ నౌ ఆన్వర్డ్స్ ప్రిఫరెన్స్ షేర్ క్యాపిటల్ షుడ్ బి ట్రీటెడ్ యాజ్ ఏ ఫైనాన్షియల్ లయబిలిటీ. ఓకే, ఇంకొక పాయింట్ చెప్పి ఈ ప్రిఫరెన్స్ షేర్ క్యాపిటల్ పాయింట్ కంప్లీట్ చేస్తా. సి, హ్యావ్ యూ ఎవర్ హర్డ్ దిస్ టర్మ్ విచ్ ఇస్ కాల్డ్ యాజ్ ఇర్రెడీమబుల్ ప్రిఫరెన్స్ షేర్? At least have you heard this name? Meaning I will explain. At least have you heard? Irredeemable means there is no guarantee of repayment of capital, but you have to pay dividend. But capital, no need to pay. If you compare with equity features, this irredeemable preference shares are having two features. First one, what? Fixed dividend they will get. Preference dividend they will get completely, but they will not get capital. They will not get capital, but they will get a fixed dividend, which means if you observe, it is a combination of It is a combination of financial liability also. It is a combination of equity portion also. Sir, why it is called as equity? Because capital repayment is not guaranteed, which is the common feature in equity share capital. Correct? But here you are getting dividend. Compare this with interest. Both interest and dividend you are getting, which means it is having a component of financial liability. But if you compare capital, it is similar to equity, which means irredeemable preference shares is having both the features. Financial liability also, equity also. Sir, what we have to do, this kind of instruments is called as compound financial instruments. Sir, what is the meaning of compound? Means hybrid instruments. Here we are having both debt also, liability feature is also there, equity feature is also there. Sir, what we have to do, you have to do breakup. You have to break down this financial liability, equity portion, equity accounting, financial liability portion, financial liability accounting. Okay. Just remember like this. Preference share capital is not a share capital. Preference share capital is not a shareholder fund as per Ind AS. In most of the Ind ASs, you will completely learn the logic. Because of logics, many things are going to change. Okay. Preference share capital will be shown as somewhere here around financial liabilities it will appear. That is the first thing which you have to understand. Okay. Equity and liabilities, equity portion, first one share capital, second one other equity. Other equity. These two items are there now. These two figures you have to take from some working which we will do as SOCIE. In SOCIE, which is nothing but statement of changes in equity, it is a kind of reconciliation statement. Whatever the balance as on first day of the year we are having, if you have raised any new share capital additions, if you have buyback, then you have to deduct that amount and finally you will get closing balance. So whatever the balance which you have got in that SOCIE, the same balance will appear here. Let me show you the format for that SOCIE also. See, like this it will have opening balance, closing balance. Middle we have to do few adjustments. We will come back later. Okay. So share capital here only we will have all these items are nothing but other equity. Very, very comprehensive statement of changes in equity we will have. Okay. Share capital also, other equity also. Both figures we will take from statement of changes in equity only. Okay. So fine. Equity portion is also completed. Only thing you have to remember, preference share capital is no longer a share capital. Okay. It should be treated as a debenture only. Just assume it is also equal to debenture only. Okay. Which means it is also a financial liability. Fix that thing in your mind. Complete clarity you will have while we discuss Ind AS 109. Okay. Fine. Next, if you observe, come to liabilities section. Liabilities, we have only two liabilities. First one non-current, second one current liabilities. Liability section is also very, very short. Biggest thing is only non-current assets that we have already completed. So this non-current liability is also very, very simple. Just check that. What is the first one which is having financial liabilities? Second one, provisions, deferred tax liabilities, other non-current liabilities. Only 4 sections of liabilities are there. In financial liabilities only we have breakdown. Okay. How many non-current liabilities are there? Only 4. Financial liabilities, provisions, deferred tax, other non-current liabilities. Let us write this. What are the non-current liabilities which are there? First we have financial liabilities. Next we have provisions. Next we have deferred tax liability, and last we are having others. Correct? Let us slowly try to do the breakdown so that easily we can remember. Check this. In financial liabilities, see, what is the definition of financial asset which I have said? Financial asset is nothing but contractual right to receive the cash. Sir, what is the meaning of financial liability? Contractual obligation to pay the cash. If you have contractual right to receive the cash, that will become your financial asset. If you have an obligation to pay the cash, that will become your financial liability. So same logic you have to apply. Sir, first example they will say borrowings. For example, I have taken a loan from my friend. Now I have to repay that. which means do I have a contractual obligation to pay the cash? Yes, therefore this borrowings will become the first one. Financial liabilities, first one, borrowings. This lease liabilities, let us come. But check third one, trade payables. Sir, till now, trade payables, we have understood that it should come in current liabilities. In your old accounting standard, trade payables, which means creditors, should usually come in current liabilities only, correct or not? But there may be some creditors whose credit period is more than 12 months, whose credit period is more than 15 months or 18 months. Practically speaking, this may not be possible, but for India's perspective, it is okay. Okay, so you have to just check whether your credit period, if it is more than your normal operating cycle, it should be treated as a non-current liability, otherwise current liability. Okay, simple part. This trade payables is not a big thing. But here what we have to do is, you have to provide the bifurcation of the trade payables. How much amount is due to MSME and how much amount is due to other than MSME. MSME, micro, small, medium enterprises, others. It is just a disclosure requirement. Okay, nothing, nothing in depth we will discuss with this point. Just remember, trade payables, we have to give the bifurcation of both MSME and others. Last part, other financial liabilities. Okay. Let us check this part also, which is lease liabilities. Sir, what is the meaning of this lease liabilities? I think in your accounting standard days, we have one standard which is related to AS 19 leases. Correct? If you remember, there we will do present value calculation of all the lease rentals. Present value calculation of all the lease rentals. Whatever the present value which you have calculated, that only will be treated as lease liability. Present value of all the lease rentals. For example, assume I have to pay 1 lakh rupees lease rent. Year 1 end, year 2 end, year 3 end, year 4 end, year 5. 5 years I have to pay 1 lakh, 1 lakh, 1 lakh, 1 lakh at the end of each year. I have to calculate the present value of all these 5 lease rentals. I have to calculate the present value of all these 5 lease rentals, and it will give me lease liability. This lease liability will be appeared as a balance sheet line item in this financial liability section, lease liability. Sir, why it is treated as a financial liability? Simple. In future, you have an obligation to pay the cash of 1 lakh rupees every year, which means it is a financial liability. Okay, so that is the reason why lease liability is treated as a financial liability. Okay, so next, provisions are there. If you have created any provisions, if the entity have created any, for example, provisions for warranties, guarantees, etc., if it have created, then those provisions should be appeared as a non-current liability. Third one, if you observe, deferred tax liability, no discussions. Deferred tax, if it is an asset, non-current asset. If it is a liability, non-current liability. That's it. Last one, other non-current liabilities. Okay, last one, other non-current liabilities. Next one, if you check current liabilities, same exact copy paste, whatever the non-current liabilities are there, same 4 current liabilities will be coming here. No changes. See, first financial liability, provisions. In case of deferred tax, you have to write current tax. That's it. Last we are having other non-current liabilities. Suddenly this have shifted to second. Order have changed. That's it. Okay, items are same. Financial liabilities, other current liabilities, provisions, current tax liabilities. That's it. Balance sheet is completed. Okay, balance sheet is done. So just once again check this. Liabilities portion. First one, we are having non-current liabilities. In that only 4 sections are there. First, financial liabilities, provisions, deferred tax, other non-current liabilities. That's it. In financial liabilities, we have only 4 items: borrowings, lease liabilities, trade payables, and others. That's it. Current liabilities also same to same. First financial liabilities, these 4 items are also same to same. First borrowings, lease liabilities, trade payables, other financial liabilities. But order will change. Then we have other non-current liabilities. Last, it will be shifted to second. Provisions will be there. In case of deferred tax, we have to write current tax liability. I only want you to remember only one thing: preference share capital is not a share capital. It will be treated as a financial liability. Further discussions we will have in Ind AS 109. Okay, fine. One last time, let us try to complete the balance sheet format on our own. If it is done, we will move to statement of profit and loss. Okay, fine. So check this. First, we have to start with assets. In assets, what is the first item we have to start? Non-current assets. Tell me the order. First, we have to write tangible assets. How many tangible assets? 3. What are those? PPE, capital work in progress, investment property. Next one, 3 intangibles. What is the first one? Goodwill, other intangibles. Next, intangibles under development. Next, biological assets other than bearer plant. Next, very good. 4 financial assets. What are those 4 financial assets? Investments, trade receivables, loans, others. Correct. Next, very good. Deferred tax asset. Last, other non-current assets. Our non-current assets part is completed. Next, we have to move to current assets. Current assets, what is the first thing? Inventories. Next, financial assets. Next, current tax assets. Last, other current assets. In financial assets, we have the breakdown. Correct. Sir, what are the breakdown? First 4 assets, copy paste. Investments, trade receivables, loans, others. 2 more items, cash and cash equivalents, bank balances, which are covered under, which are other than above. Correct. Non-current assets done. Okay. Other current assets also is done. Next, equity and liabilities. Equity and liabilities. First, you have to write with equity. In equity, what we are having, this have to be very specific. Equity only you have to write. Don't write shareholders funds. Okay. Preference shareholders are different. Equity shareholders are different. In equity, what are the 2 components which we have to remember? Share capital, other equity. This I have to explain. This is interlinked to SOCIE. Whatever the closing balance as per that, we will exactly copy paste here. Next, if you observe liabilities, first non-current liabilities. What is the first item? Financial liabilities. Next, provisions, deferred tax liability, other non-current liability. Same exactly copy paste current liabilities also, but order is changed. First we will write financial liability, other current liability, current tax liability, provisions. Correct. Current liabilities. Simple. Financial liabilities we have first borrowings, lease liabilities, trade payables, others. Trade payables, others. Okay. That's it. Balance sheet is completed. Very, very in-depth we have studied. Even if you have any little doubts about some points, don't worry anything, because as I have been repeating number of times, we are not completely learning these items here only. These are only part of our syllabus. Sir, why we have to treat preference share capital as a financial liability? Very in-depth discussion is there that we will discuss in Ind AS 109. Okay, some points may be a little bit open to you, but at least you should have a basic understanding of all the items. Plus, you have to definitely remember the format for this balance sheet. Okay, if you are able to remember at least 95% of the content and this format, you have to remember 100%. Sir, why bearer plant? Exactly will be treated as PPE. Full in-depth discussion is there. We will cover in Ind AS 16. But you just have a basic idea. Okay, fine. So this thing I will share a PDF. You can write the notes from there. But what I wanted to do is I also wanted to start with profit and loss account also. Just overall understanding let us try to have. And then we will stop. Okay, next 10 minutes it will take. We will stop then. So check this. First part, statement of balance sheet is completed. Now we have to move to second item, which is called as statement of profit and loss. Profit and loss is very simple. It will be done in 20 to 30 minutes. But you have to remember few items from your old accounting standards days. 99% it is copy paste, 95% it is copy paste, but another 5% completely new, which you don't have any idea. Okay, but first Try to relate with this. Are you able to remember any of the item or not? Let us just check. This is AS, your accounting standard days statement of profit and loss account. First item, revenue from operations, you have to start. Second, other income. These two you have to add, then you will get total revenue. Okay, same point. Same to same point will be there even in Ind AS also. Next, we will start with total expenses. We have 1, 2, 3, 4, 5, 6, 7 items we are having. This is totally one thing. Changes in inventories of finished goods, work in progress and stock in trade. This is one line item only. Other than this, we have first, second, third, fourth, fifth, sixth, seventh. 7 line items we are having in expenses side. Same to same copy paste even in our Ind AS also. Just try to go through. Are you remembering something or not? Cost of materials consumed, purchases of stock in trade, changes in inventories. Changes in inventories is nothing but opening stock minus closing stock. Opening stock minus closing stock. Next, employee benefit expenses. Any salaries, any bonus, commissions, all these items will be shown as employee benefit expenses. Finance cost. What is the meaning of this finance cost? Very good. Interest is there. But as per Ind AS, preference dividend is also a finance cost. As per Ind AS, preference dividend is also finance cost. And one more short thing which I will explain now. Many items which you may not think as a finance cost will be classified as finance cost in Ind AS. Okay? You will never imagine that will become a finance cost. But as per Ind AS, you will understand. Completely logical. Ind AS are nothing illogical, you have to remember. In your accounting standards, some things you will never understand the logic. You will by heart those things. We don't know why we are by hearting also. But those kind of logics will never apply in Ind AS. 100% logical. There are very little dry areas where we have to by heart without any logic. Okay. But those things, though, we will not spend much time. We will quickly move. Theory chapters are there. Those we cannot apply logic. But all these Ind ASs you can definitely apply logic. Okay. Let us try to understand logically only. Even if it takes time, that is totally okay. Because it is worth the time you are preparing. Okay. Fine. Finance cost is done. Depreciation and amortization. That is also okay. And last we are having other expenses. Same to same. These 7 line items will be there in our Ind AS P&L account also. Okay, if you take, you will finally get total expenses. Here we are having total revenue. Here we are having total expenses. Revenue minus expense you will do, you will get profit. Correct? But whatever the profit which you have got now, that profit is nothing but before exceptional items. Here we did not adjust any exceptional items and extraordinary items and tax. Whatever profit we have got, total revenue minus total expenses, that doesn't have any exceptional item, any extraordinary items. That is before tax also. Which means, simply speaking, profit before exceptional and extraordinary and tax. Normally, you will not find exceptional items and extraordinary items in your profit and loss account. Therefore, this will directly become profit before tax. But just for completion of the format, they have given exceptional items also, extraordinary items also. Sir, next what they have to do? They have to make an adjustment for exceptional items. Exceptional items అంటే ఏముండవు. ఒక ఫైర్ యాక్సిడెంట్ అవడం కానీ ఇలాంటివి ఏమైనా జరిగాయి అనుకోండి, దానివల్ల మన ప్రాఫిట్ అండ్ లాస్ 1 ఇయర్లోనే చేంజ్ అవుతుంది. ఇప్పుడు ఇన్వెస్టర్ ఉన్నాడు అనుకోండి, ఫర్ ఎగ్జాంపుల్ మీకు ఏదైనా ఒక ఇయర్లో ఇన్సూరెన్స్ కంపెనీ నుంచి ఒక 40 lakh వచ్చింది అనుకోండి. యాజ్ పర్ అకౌంటింగ్ స్టాండర్డ్స్ యూ హ్యావ్ టు ట్రీట్ దిస్ యాజ్ అన్ ఇన్కమ్. అది మీరు ఒక ఇయర్ P&L అకౌంట్లో ఇన్కమ్ కింద చార్జ్ చేసేసారు. ఇప్పుడు ఇన్వెస్టర్స్ ఏమనుకుంటారు, ఈ పర్సన్కి చాలా ఎక్కువ ఇన్కమ్ వచ్చింది అని చెప్పి వాళ్ళు ఓవర్ వాల్యూ చేసుకుంటారు, which is not correct. Therefore, you have to treat those items separately from the main profit. Investors have to understand, okay, this is an exceptional item, this will not come in every year. Like this, investors have to understand. Okay, so that's why exceptional items also, extraordinary items also have to separately disclosed. If you make adjustments for those 2 items also, finally you will get profit before tax. Profit before tax తర్వాత మనం ఏం చేయాలి, tax adjustment చేయాలి. 2 taxes ఉంటాయి, current tax also, deferred tax also. Both adjustments we have to make. Current tax also we have to make, deferred tax also we have to make. Finally you will get profit or loss for the period from continuing operations. This also we have to give disclosures. This is after tax, profit after tax from continuing operations. If any operation is discontinuing, if you want to discontinue any item, if in your P&L account any profit is related to that, you have to separately disclose to the investors that whatever the profit which is there, that we want to discontinue certain product. So in future, that product will not be appearing in our statements, in our financial statements, is what we have to communicate to investors in advance only we have to do. Okay, so here we will get continuing operations. Again, we have to show discontinuing operations also. Finally, if you add everything, you will get profit or loss for the period, which means it is what both continuing also and discontinuing also. Whatever total profit which we have got, you have to show this. What is the basic earning per share and diluted earning per share? This is also, we have a separate standard which is not there in our syllabus. Ind AS also is not there. I think in AS you have in your corporate account subject EPS, basic EPS, diluted EPS. This is there in your accounting standard days. To conclude, sir, in P&L account, what are the items which I have to remember? 2 revenue items you have to remember. 7 expense items you have to remember. Revenue minus expense, if I do, I will get profit. But that profit is before exceptional items and extraordinary items. Now I have to make adjustment for those 2 items. Tax also I have not adjusted. So profit before exceptional, extraordinary and tax. Here I have made exceptional items. Here I have made adjustment of extraordinary items. So I have got profit before tax. Then I have to make current tax and deferred tax. Then I have to make current tax and deferred tax. And I will finally get profit or loss for the period from the continuing operations I will get. Even from this continuing operations also I have to, other than this also I have to disclose something which is called as discontinuing operations also. How much profit is there and how much tax is also there we have to show. Tax expense also should be shown separately. Finally you will get profit or loss from discontinuing operations after tax. Just add after tax profits of both continuing operations also and discontinuing operations also. Finally, you will get earnings per equity share, basic and diluted. Basic and diluted. This is your AS profit and loss account. This is your AS profit and loss account. Just I will show in AS, I won't explain. So check this. 2 incomes are there. 7 expense same to same. 7 expense same to same. Profit or loss before, what here they have written? Exceptional items and tax. Only what they have written here, exceptional items and tax. But there what we are having, exceptional is also there. Extraordinary is also there. Tax is also there, which means another fundamental difference, they have removed extraordinary items in Ind AS. If you check all Ind ASs, you will not find any item which is called extraordinary items, which means they have combined both. And in AS we are having only exceptional items. Okay. So what we have to do adjustments, only exceptional items we have to do. Extraordinary are not there only, so no adjustments. So before tax you will get, just make tax adjustment. After tax you will get from continuing operations. From discontinued operations also we have to show separately. Discontinued operations also profit, tax. So finally you will get profit or loss for the period. If the profit and loss account ends here only, our discussion will become very, 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 very simple. But out of nowhere they have introduced another concept which is called as other comprehensive income. Other comprehensive income. Sir, why this other comprehensive income is introduced? This is 200% logical. more and more disclosures have to be given to investors. That is the core objective of Ind AS. So that's why what they are thinking is whatever the normal profit and loss account as per AS which is there, that is not sufficient for us. We have to revamp our profit and loss account. We have to add many new items. Okay, so that is the reason why they have introduced the concept of other comprehensive income. I'll share this PDF, whatever I have discussed in class. So what you have to write is you have to copy till this part 2 statement of profit and loss. Whatever before it is there, you have to copy till the balance sheet format. And you have to research on this point. What exactly is this other comprehensive income all about? What is the purpose? Try to make research. Okay, just 5 minutes is more than sufficient. But just practice the balance sheet format like how we have discussed, then only we can easily remember. Okay, fine. So in next class we will complete other comprehensive income completely we will do, and even statement of changes in equity also will be completed. From other next class onwards, from the class after the next day, we will start with Ind AS 16. Okay, we will start with Ind AS. Fine. So that's it. We'll continue in next class. Okay, good morning. In last class, what we have covered? Division to Schedule 3. Full balance sheet we have completed. And I have just given little overview about P&L account. Correct? In today's class, we'll totally complete that P&L account. And SOCIE also we will try to complete. It will be done. Okay, so listen. Before starting, let's quickly revise what we have covered in last class. Only I will revise from this applicability and balance sheet format, and then we will continue. Okay, so check this. If you observe the applicability of Ind AS, we have understood Ind AS is applicable for all listed companies, whether it is already listed or in the process of listing any security in any exchange. Okay, any security means what? Either equity share or debentures or preference shares, anything can be listed. If it is listed company by any chance, for it Ind AS is always applicable. Second one, what they will say, even if you are an unlisted company, you have to calculate something which is called as net worth, and it should be more than or equal to 250 crores. How you will get net worth? Net worth is nothing but what is the formula? Very good. Total assets minus outside liabilities we have to do. Then you will get net worth. That net worth should be more than or equal to 250 crores. This also on which date you have to check? 31st March of the last financial year you have to check. If 31st March of the last financial year net worth is more than 250 crores, then from current financial year onwards, Ind AS are going to be applicable. Okay. So next what we have understood this point, REIT and INVIT notified by SEBI. What is the full form of REIT? REIT? See, that's what I said. You have to revise. Otherwise, మీకు స్టార్ట్ అయినట్టు కూడా తెలీదు, 3 స్టాండర్డ్స్ అయిపోతాయి. ఇవన్నీ చిన్న చిన్న మైన్యూట్ పాయింట్సే. ఓకే, జస్ట్ ఒక 20 minutes స్పెండ్ చేస్తే సరిపోతుంది. అదర్వైజ్ ఓకే 2 స్టాండర్డ్స్ అయిపోతాయి. సో REIT is nothing but Real Estate Investment Trust and INVIT Infrastructure Investment Trust. Last one, central government has the power to apply Ind AS on any body corporates. So next what they will say, if Ind AS is applicable to any one entity, all the entities in the same group, for example, either parent company, subsidiary company, associate company or joint venture, for all those companies, even if they fail to satisfy this criteria, for those also still Ind AS are going to be applicable. Okay, then we have understood one new point, that for banking and insurance companies, Ind AS are not applicable as on today. Okay, as of today, this banking and insurance companies follows accounting standards only. And next, these parts also we have covered. Division 2 of Schedule 3 will gives the format for balance sheet and profit and loss account for Ind AS compliant companies. If it is Division 1 of Schedule 3, it is applicable for AS compliant companies. And last, if you observe Division 3 of Schedule 3, it is applicable for NBFCs. All these things we have covered in detail. So let us just revise only. Now I am just revising. If you observe, this is also done. Then we have started with balance sheet portion. Okay, so here you will write name of the company. For example, if it is X Limited, we will write like this, balance sheet of X Limited as on, we have to write the current year date also we have to give. Along with current year figures, you also have to give previous year figures also, which are nothing but comparatives. You also should give comparatives, financial statements also you have to mention. Okay, so, and then we have understood what is the first item which will be starting with our balance sheet. It is nothing but assets will be starting. In assets also, the first assets will be starting non-current assets. In non-current assets, we have tried to remember all these things also. If you observe, first 3 tangible assets are there, second 3 intangible assets are there, 1 biological asset, 4 financial assets, and last 1 deferred tax asset is also there, and last other non-current asset. If you try to remember this non-current assets perfectly, current assets will become very easy, and liabilities part is also very, very simple. Okay, so if you observe, first 3 tangible assets, if you remember, first one PPE, which will be covered in Ind AS 16. Second one talks about capital work in progress, and third one investment property. It is discussed in Ind AS 40, which is not there in our syllabus, but we have just understood the meaning of investment property. If I am having any property and my intention is to earn either rental income or capital appreciation. Capital appreciation means if the price increases, I will sell the building. Okay, if my intention is only to keep the building for those purposes only, it will be called as investment property. This PPE definition and all we will cover in Ind AS 16. Once this basics chapter is completed, then immediately we will start with Ind AS 16 only. Once these 3 tangibles are completed, next we are having 3 intangibles. What is the first intangible which is there? Goodwill. Second one, other intangibles, and last one, intangibles under development. These 3 intangibles also if completed, next we have started with biological asset. Biological asset other than bearer plant only will be appearing in this line item. Sir, then what happens if it is a biological asset and if it is also a bearer plant also? Then it will appear in PPE. Correct? Reasons and all we will understand while we discuss this PPE Ind AS 16. And next, financial asset, very big standard is there. But we have just understood the meaning of financial asset. What is the meaning of financial asset? It is nothing but contractual right to receive the cash. Once this standard is completed, you will remember everything, but just for overall understanding purpose, the meaning of financial asset is nothing but contractual right to receive the cash. 4 financial assets are there here. First one, investments, trade receivables, loans and others. So these 4 items you just have to remember. Next, what is there? Deferred tax asset is there. Deferred tax also in detail we have one standard which is Ind AS 12, so we will cover there. Last we are having other non-current assets. Okay, balance sheet, non-current assets portion completed. Next we have started with current assets. Current assets we have totally 4 types of current assets. Okay, inventories will be there, 6 types of financial assets. Out of this 6 type of financial assets also, 1, 2, 3, 4 are exactly copy paste. New items are what? Cash and cash equivalents and cash and cash equivalents other than in 3. Okay, so here it is not cash and cash equivalents, it is bank balances. Bank balances other than covered in third part, and then third one we are having current tax assets, and last we are having other current assets. Total assets portion is completed. Next, if we move to equity and liabilities portion, the first thing we have understood in this equity portion is preference share capital. Preference share capital is no longer treated as shareholders funds. Because from Ind AS perspective, we have understood even if you have raised capital in the form of preference share capital or debentures, both will not make any difference. Therefore, accounting also have to be same. Preference shareholders also will be considered as outsiders only as per Ind AS. But in your old accounting standard days, equity share capital plus preference share capital, both will be sitting in shareholders funds only. This is the first thing you have to remember. Preference share capital is never treated as a share capital as per Ind AS. Okay. Sir, why and how to do the accounting we will clear cutly understand in Ind AS 109. Second item, what is there? Other equity. Next we have started with liabilities. We have understood these 2 items will directly come from one item which is SOCIE, statement of changes in equity. From this item directly these amounts will be coming in balance sheet. Next, if you observe non-current liabilities, very simple. First we have financial liability, and then we are having provisions, deferred tax liability, other non-current liability. Only 4 liability section are there. If you observe financial liability, the first one is borrowings, lease liabilities, trade payables, others. If you revise daily, it will become very simple. Otherwise, you will not understand. You will not remember. That's what I'm saying. Financial reporting subject is definitely about understanding. If you don't understand, there is no concept of by hearting all the things. So once you have understood, you also remove the formats also. Therefore, remembering also will plays a very crucial role in financial reporting. Okay, you have to definitely understand the subject, there is no doubt, but once you have understood, later you have to spend more time to remember the formats and all. Okay, so I don't need much time. Currently, I just need 20 minutes. But once big chapters are started, then you have to remember then you have to revise for at least 1 hour. But now 20 minutes is more than sufficient. Okay, you have to daily revise, otherwise it will be difficult. So next, current liabilities also, same to same copy paste, financial liabilities will be there, order will be changed. There the second thing is what? Provisions will be there, but here other current liabilities, and then provisions, and last one, current tax liabilities. Finally, we are having total equity and liabilities. Okay, this portion also we have completed. So now let us quickly start with statement of profit and loss. Okay, so check this. Statement of profit and loss is 90% exact copy paste of what you have studied in AS. Statement of profit and loss. In last class, I have opened the statement in profit and loss of previous accounting standards. If you remember, same 2 line items will be there. First one is revenue from operations and other income. Same to same as per accounting standards also. If you add these 2 items, you will get total income. Next, we have to write expenses. 7 line items of expenses will be there. 7 line items. Just try to remember overall. First one, cost of materials consumed. Second, purchases of stock in trade. Third one, changes in inventory of work in progress, finished goods or raw material. This changes in inventory is nothing but opening stock minus closing stock. And then 4th line item, you are having employee benefit expenses. Fifth one, finance cost. Sixth, depreciation and amortization. And last, we are having other expenses. Let us just try to remember these items also. So, if you observe, statement of profit and loss. Revenue items are also there. Expense items are also there. How many revenue items we are having? 2 revenue items. What is the first one? What is the first one? Revenue from operations. Second one, other income. Other income. If you add these 2 items, you will get total income. If you add these 2 items, you will get total income. Revenue from operations and other income, you just have to do. If you remember these line items, expenses, see, these 3 are very, very simple. If you have data, you will easily understand. Okay, these are not at all complicated. Just let us write last 4 items. Okay. After those 3 items, 1, 2, 3, what is the 4th item which is there? Employee benefit expenses. What is the 5th item? Very good. 5th item is nothing but finance cost. 6th item? Very good. Depreciation and amortization. And last, other expenses. Try to remember these 4 items. These 3 items you will easily remember if you have data. If you have figures, then you can easily copy, you can easily complete these figures, but these 4 items you have to remember. Employee benefit expenses, finance cost. In finance cost, what we will usually write here in finance cost? Interest we will write, correct? But other than interest also, many items will come in this finance cost. That much in detail we are not going enough, because in our syllabus anyways we are going to cover that finance cost. Second one, we are having depreciation and amortization, and last one we are having other expenses. If you add all these 7 items, you will get something which is called as total expenses. Total expenses. Basic thing, how you will get profit? In order to get profit, what you have to do? Total income minus total expense. If you deduct the total expenses from total income, you will get profit. And this profit, what they will call, if you remember, they will be called as profit before exceptional items and tax. Because objective of Ind AS is very simple. You have to give clear-cut picture to the investors. If any extraordinary item is also included somewhere here, investors will think that, okay, that income also will be repeated in future. That kind of conclusion investors should not draw. So if any extraordinary item is there, they have to clearly, separately disclose. So here, here they will only say exceptional items. But in your old AS, if you observe, we have something which is also called as extraordinary items and exceptional items. But what we have understood is, in Ind AS they have removed the word extraordinary items and they have only retained exceptional items. So as per Ind AS, whatever the profit which you have got here, that will be called as profit before exceptional items and tax. If you deduct this total expense from total income, you will get profit before exceptional items and tax. Now what you have to do? You have to make an adjustment for exceptional items. Plus or minus. Either it can be plus or either it can be minus. You have to do exceptional items adjustment. Then what you will get? You will get profit before tax. Then you will get profit before tax. Now what you have to do? You have to do the adjustment for tax. 2 types of taxes will be there. First one, current tax. Second one, deferred tax. If you do these adjustments, you will finally get profit after tax. Profit after tax. And they will give a new name. It is called as profit after tax from continuing operations. Profit after tax from continuing operations. If you check this, profit after tax from continuing operations. But what they will say, if you want to discontinue any operation, or if you have already discontinued any operations, you have to separately disclose that profit or loss also separately, because same logic, if this profit or loss also is included somewhere here, investors will think, okay, this will also repeat in future. That should not be done. Therefore, if any operation is discontinued, you have to show separately. Profit or loss from discontinued operations before tax you have to show, plus any tax adjustment also. Finally, you will get profit from discontinued operations after tax. Then you have to also find profit for, if you just have to add continuing operations and discontinued operations. Whatever the profit you have got, that will be called as profit for the year C plus D. Profit for the year C plus D you have to write. Till here, just to check the format once again. I will just display this for next 1 minute. If you have any doubts, please let me know. Okay. Total income, total expense, then you will get profit before exceptional items and tax. Then we have to make an adjustment for exceptional items. You will get profit before tax, then tax. You will get after tax from continuing. Then we have to add discontinued operations. Okay, just I will keep this format for 1 minute. Just go through this. Just try to remember the line items. That's it. These 3 items you will easily remember if you have figures. Okay, but now just go through this. If you have any doubts, please let me know. Online students also please confirm if you are fine. Then we can get started with the most important part of discussion, which is other comprehensive income. Okay, so please check this. If it is fine, then we will move. Online students also please confirm, then we will proceed. Okay. So till here it should be clear. Okay, I got confirmations. Is it clear for you also? So check this. Now what they are saying is, you just see your AS profit and loss account will end till here. After this profit for the year, we will have something which is called as EPS. Earnings per share we have to disclose. Earnings per share we have 2 EPSs. First one basic EPS, second one diluted EPS. In your old accounting standard, if you have completed your profit for the year, then the next item we will write earnings per share. But in days, suddenly they have introduced something which is not there in your accounting standards. And what is that item? Which is called as other comprehensive income. What is the item? Other comprehensive income. So now try to understand. Just stick to what I am saying, because if you don't understand this other comprehensive income right now, in most of the other Ind ASs, what we will start after, many of the cases they will use this word OCI, OCI, OCI. If you don't understand now, you will not get comfort there. Okay, so now whatever I am explaining, just try to stick to that only. It will give you more than sufficient clarity you will get. So once our profit and loss account is completed, here we have to start OCI. Here just remember 2 things. Sir, what are those 2 things is? What are those 2 things is? First one, there are few items which are not reclassified to PL. Not reclassified or recycled. Anything you can say. Not reclassified or recycled to P&L account. In OCI, we have one item which is called as not reclassified or recycled to P&L account. And we have another items also. We have another set of items also, which are nothing but items which are reclassified or recycled to P&L account. That's it. In OCI, you just have to remember two items. First, we have few items which are not reclassified to P&L account. Second set of items, these are nothing but items which are reclassified to P&L account. If you study whole indices, if you study all indices, you will find only 9 items. You will find only how many items? 9 items. All put together. Not reclassified also, reclassified also. If you put together, you will find only 9 items if you study total indices. No plus or minus to these 9 items. Whatever 9 they have said, you have to definitely disclose in OCI only. No choice for you, because this is clearly given by standards only. Okay, that IASB, if you remember, whatever International Accounting Standards Board which is there, that have clearly defined only these 9 items will come under this OCI, and no plus, no minus. Okay. First, let us try to understand, sir, what exactly is the meaning, why this OCI is required. Let us try to understand. Assume in your books of accounts, there is one asset which is called as building. Okay, building is there. You have purchased that building for 40 lakh rupees. Okay, let us assume you have purchased that building for 30 lakh rupees. 30 lakh rupees you have purchased that building. Can you tell me what is the journal entry which we will pass in our books of accounts? Purchased the building. Tell me. Journal entry. Huh? Very good. Building account debit to cash or bank. How much amount? 30 lakh rupees. Okay. So what I did is, on 31st March of the 2026, assume I have purchased on 1st April 25. On this date, I have observed value of my building have increased to 40 lakh. Value of my building is now how much? 40 lakh rupees. I think in your old accounting standards also, there is something which is called as revaluation. Correct? There is no need for you to keep this asset value as 30 lakh rupees lifelong. If you want, you can revalue this asset and you can book some profit also. That is allowed by the standards also. Okay. So can you tell me what is the entry which I will pass? Earlier building value is how much? 30 lakhs. But now how it is? 40 lakhs, which means my building increased or decreased? Increased. Therefore I have to debit building. Correct? Debit I have to give to building. So I will write building account debit. How much building balance have to be increased? 10 lakhs have to increase. So here I will write 10 lakhs. Credit I have to give to which thing? If you remember accounting standards, we will create something which is called as revaluation reserve. We will not give to P&L account, because if you remember old accounting standard days, there is something which is called as prudence. There is something which is called as prudence or conservatism. Sir, what is the meaning of prudence or conservatism? If you remember, if you know any loss is coming to you, you have to recognize that loss. Don't postpone. But if you are anticipating any incomes or profits, don't recognize that. Correct? If you remember old accounting standards, there are two concepts which are called as prudence and conservatism. What they will say, if you are anticipating any future losses, create provisions. But if you are anticipating any future gains or profits, wait. Don't recognize now only. Wait till you recognize that. Okay. So applying the same concept, this revaluation reserve will not come in your, this is a separate line item. So here you should not write profit and loss account. So now how much I will get? 10 lakh rupees. Correct? 1 year is completed. Next year, what have happened is 31st March 27. I have decided to sell my building. What I have did is I have decided to sold my building. Sir, how much amount you have got? I have got 45 lakh rupees. How much I have got? 45 lakh rupees. Now can you tell me what is the journal entry which I will pass? Bank I will debit. Bank account debit. How much I have received? 48 lakh 45 lakh I have received. To what I have to write? Building should be de-recognized. Correct? So credit I will give to building. How much I will write? Just to check. How much balance is there? 30 lakh debit plus 10 lakh debit, which means what is the balance of building? 40 lakh is only the balance. So to building I will write 40. Ledger is not closed. Journal entry. Debit and credit should match. Correct? Debit I am having 45. Building I am having only 40. So difference I have to transfer to P&L account. Because now I have sold the building. Correct or not? Now I have sold the building. Therefore I can recognize the profit to P&L account directly. So here the entry which I will pass is to P&L account. How much I will write? 5 lakh. Just to try to understand this entry. Bank account debit 45 I have received. In my books of accounts, 30 lakh earlier it is there. 10 lakhs because of which my building value is increased. So I have recognized 10 lakhs also. So total balance of building is how much? 40 lakh. But now I have sold for 45. Which means 5 lakh is nothing but profit on sale of building. That profit on sale of building will be transferred to P&L account. If you check, building account is removed from the books of accounts. Correct or not? Earlier 30 lakh is there, 10 lakh, which means total 40 lakh. What I have did, I have totally credited entire 40 lakhs here. And I have also recognized profit and loss account balance of 5 lakh rupees also. Sir, but now what have happened? This revaluation reserve is still there in my books of accounts. This revaluation reserve is still there in my books of accounts. Correct or not? Sir, where it will be there? It will be there in other equity. It will be there in other equity. Building is gone, but building related OCI, building related revaluation reserve is still there in my P&L account. Have you understood? Building is totally gone, but building related OCI is there. It should not be like that. If your building itself is gone, then you also have to remove this revaluation reserve also. Correct or not? If building itself is gone, I also have to remove this revaluation reserve also. Sir, therefore, what they will say is, so first try to understand, if you check the P&L account, statement of profit and loss account, our profit and loss is completed. We have got total income. Okay, total income for the year ended we have got. Then we will start with other comprehensive income. Then we will start with other comprehensive income. For example, let us try to present this item. We are preparing financials for 31st March 2026. In that profit and loss account, what I will do is, because of the upward revaluation of building 10 lakh rupees, in my revaluation reserve, I am having a balance of how much? 10 lakh rupees. This 10 lakh rupees is nothing but an increase. It is my profit. Sir, how you will present in this profit and loss account is, I will not present this profit and loss account in this, which means here I will not present those items. Sir, why you will not present those items? If I present that item somewhere here, for example, profit on revaluation. If I present like this, assume here I have written 5 lakh rupees. Investors will think that my business itself is to sell these buildings. If this okay, so listen. If I show this 5 lakh rupees in the main profit and loss account only, investors will think like this. My objective is to sell this building and to earn the profits. Investors will feel confused. If I show this amount directly here, Investors will think that my main business itself is to show these items here only, which is not allowed by the Ind AS. What Ind AS are saying is, okay, if your main business is not to earn the profit on revaluing the buildings, don't show it in the main P&L account. Sir, but if I don't show in the P&L account, my double entry system will not match. Therefore, they have introduced a new item which is called as other comprehensive income. So if investors check this point, they will clearly understand, okay, my main business is different. This is not my main business, but because I am holding the building, I am booking some profit which I have not sold till. If I have sold, then this balance will come in P&L account. But here I am not selling the building. Since I am having the building, I am earning a profit of 10 lakh rupees. In order to match the double entry, what they are saying is, okay, you have to show this amount as a separate line item, here. And here you will say items which are not reclassified to P&L account. First item we can write, this item is there in that list also, that profit on revaluation of tangible assets. This is the first item which we have to remember. If you got any revaluation surplus on revaluation of any tangible assets or intangibles also, that is the first item which is not reclassified in P&L account. So here I will write 5 lakh rupees. But Ind AS is also warning the companies to disclose one additional fact also. Sir, what is that additional fact? Try to understand. Here what you are saying is, okay, because of that revaluation, I have got a profit of how much? 5 lakh rupees. Ind AS are saying, if you are disclosing that you will be getting a profit of 5 lakh rupees, which indirectly says that in future, if you sell the asset, you also have to pay tax on this 5 lakh rupees also. Correct or not? In future, if you sell this asset, you have to pay capital gains tax. Correct? If any capital asset is sold, you have to pay capital gain tax also. So what Ind AS is saying is, here you are only disclosing that you are getting a profit of 5 lakhs. If you want to disclose, please disclose completely. Otherwise, don't disclose only. But if you want to disclose the effect of this profit only 5 lakh without disclosing the tax effect, investors are not getting a correct picture. Investors are not getting true and fair view picture. Therefore, what they are saying is, okay, this is fine. Now what you have to do is, please disclose tax effect also. For example, 30% assume, which means 5 lakh into 30%, if you calculate 1,50,000 also you have to show. If any investor seeing the profit and loss account, they will understand this is a separate line item which is not my main business. That also they will understand. Not only my value is increased by 5 lakh, I will also understand, okay, in future the company can also have to pay 1,50,000 as tax also, which means what is the net benefit here if you calculate? Net benefit here is nothing but 3,50,000. This is the only benefit which investor have to understand from the P&L account. From the P&L account, on seeing the face of the P&L account, he will understand, okay, this revaluation is not my main business. That is also separately disclosed. Along with that, the tax effect on that revaluation also is separately disclosed. Now if you observe, because of this, my double entry balance sheet and P&L account are going to match. Now what you have to do is, come back to the previous example what we have discussed. We have sold the building completely, but still we are having something which is called as revaluation reserve, which is related to that building. Correct or not? What we have thought is, we have to eliminate this balance revaluation reserve. So see, revaluation reserve, we have credit balance. In order to remove this, what we have to do with this revaluation reserve, this should be debited. Correct? So the entry which I will be passing is this one. Revaluation reserve account debited. How much? 10 lakh is there. This 10 lakh should be eliminated. two options are there. First option you can here write to P&L account. This is one option. Second option here I can write to retained earnings or other equity. Try to understand what I have written. Revaluation reserve I have written how much? 10 lakh rupees. I have two options to cancel this. First option is I can directly send this amount to profit and loss account. Second option is I can transfer this amount to retained earnings or other equity. Just to try to understand now what I am saying. If the item is reclassified to P&L account, if an item is reclassified to P&L account, I have to pass this entry. Now what have happened? From here the amount is transferred to profit and loss account. From again it will come to other equity only. What will happen with the closing balance here? See, if you find out this total comprehensive income, it will again come in balance sheet only na. Ultimately it will come to other equity only, but this is a kind of presentation. If it is an item which should be reclassified to P&L account, I will write this entry. But sir, what if it is an item which is not reclassified to P&L account? Then don't write P&L account here. If it is an item which is not reclassified to P&L account, don't write the word P&L account here. So then here what I have to write? You have to write something which is called as retained earnings. What you have to write? You have to write retained earnings or other equity. Net effect is both are same only. But the thing is, we are having asset specified OCI, which means assume it is like this: building related OCI account debit, building revaluation reserve account. Like that we are having a separate line item. But from that you have to transfer that item to retained earnings or other equity. Remember only these two items. If the item is reclassified to P&L account, if you sell that item later, that balance should be transferred to P&L account. But sir, what if the item is non-reclassifiable item? If the item is non-reclassifiable item, then you have to transfer that item to retained earnings or other equity. Okay. So now what I have said is, these examples, everything I have written there only. Come to this part. This is nothing but OCI, only 9 items we are having. Here they will say, sir, what items will be reclassified to PL? What items will not be reclassified to PL? That is clearly explained in all the standards. If you study all those standards, you will identify these 9 items. Okay. Sir, if you don't understand these 9 items right now, later while we start discussing while we're discussing those standards, this item will be coming number of times: OCI, OCI, OCI. You will not understand if you don't understand now. Another thing also I am saying right now only, you will not get 100% clarity right now itself. You will not get 100% clarity because this item, in order to understand this, you have to study Ind AS 16. Then you may ask like this, sir, why don't you start with Ind AS 16 only? If I start Ind AS 16 also, then you don't know this OCI. Then again I have to explain profit and loss account. Again I have to explain balance sheet. Again I have to explain OCI. Lot of interconnecting or interlinking is there. Okay, if you want to understand OCI, you have to understand these standards also. If you want to understand these standards without having a brief understanding of OCI, it is impossible for you to understand this. So, sir, what we have to do is, whatever I am saying, just try to have that brief understanding. 100% clarity you will get only after completion of that respective standard. But right now, what I am saying, just try to stick that. How many items which are not reclassified to P&L account which are there? 5 items are there which should not be reclassified to P&L. If it should not be reclassified to P&L account, sir, what will be the entry which I am writing? OCI account debit. If it is not a reclassifiable item, here I will write retained earnings. Sir, always it is not necessary in OCI credit balance only will be there. It is not like that. Sometimes debit balance also will be there. If debit balance is there in OCI, in order to cancel that, what I have to do? I will write to OCI account. Debit what I have to give. If it is an item which is not reclassified, I will write retained earnings account debit to OCI account. Both are fine. This is you will write when item is not reclassified to P&L account. Sir, what if it is an item reclassified to P&L account? Then what I will write? I will write OCI account debited to P&L account I will write. Sir, if in OCI earlier I am having debit balance, then in order to cancel I will credit OCI and debit I will write P&L account. Just remember this part. Now let us try to understand these items. 5 items of not reclassified items are there and 4 items of reclassified items are there. Sir, what is the first item of reclassified item is just now we have understood that is revaluation reserve of PPE or intangibles. Revaluation reserve of PPE or intangibles. See, this item is given in items which are not reclassified to P&L account. Which means what should be the entry which I have to pass? Do I have to pass this entry or do I have to pass this entry? You have to write retained earnings because it is not reclassified item, which means, so that is the reason here revaluation reserve account debit. If it is a non-reclassifiable item, credit I have to give to retained earnings. Revaluation reserve, one second. Here you can write revaluation reserve or OCI, anything is fine. That revaluation reserve balance will be coming in OCI. So this balance will be transferred to retained earnings. How much? 10 lakh. How much? 10 lakhs. Okay. So try to understand this. Revaluation reserve of PPE or intangibles is one item which will be sitting in non-reclassifiable items. Next example, let us try to understand. Okay. So check this. Assume I am doing one business. From that business, I have got a profit of 1 crore. From that profit, from that business, I have got a profit of 1 crore rupees. Now what I have did is, I have another partnership firm also. I have another partnership firm also along with this business. Sir, what I have did is, I have contributed 50% capital in that. 50% capital I have contributed. Assume my profit sharing ratio is also 1:1. That partnership firm also have earned 20 lakh rupees from that business. Partnership firm has earned how much? 20 lakh rupees from that business. Can you tell me what is my share in that 20 lakhs? Huh? What is that? What is my share in this 20 lakhs? How much? 10 lakhs. Correct. Very good. So here I will write 10 lakhs. If someone asks you, what is my total profit? If someone asks you, what is my total profit? How much I have to take? Can I tell only this 1 crore or do I have to say this 1 crore 10 lakhs? My total profit is 1 crore 10 lakhs. Because this is my own business and this 10 lakh I have invested separately and I have got my profit. This is also my share only now. So total value is how much? Total profit 1 crore 10 lakhs. Total profit is 1 crore 10 lakhs. Correct. Second, let us apply this example to companies. Try to understand. Assume one company A Limited which is there. A Limited have made an investment in AA Limited. A Limited have made an investment in AA Limited. Sir, how much investment it have made? 30% it have made. During the year, this A Limited have made a business and it have earned an income of 60 lakh rupees. It have earned an income of how much? 60 lakh rupees. A Limited is also having a separate business. A Limited also have earned 20 lakh rupees profit. A Limited have earned how much profit? 20 lakhs profit. Now, if someone asks me what is the total income of this A Limited which it have earned during the year? What is the total income which this A Limited have earned during the year? How much? How much? 66 you're saying. Have you got 60 lakhs it have earned on its own? Is this 20 lakh belongs to A Limited, or only 30% of this 20 lakhs belongs to A Limited? 30% only belongs to A Limited. Therefore, plus 6 lakhs I have to add, which means how much I will get? 66 lakhs. How much? 66 lakhs. The same thing whatever I have explained here, this you will understand in, we have another chapter also. If you remember, it is nothing but consolidated financial statements. See, is this A Limited subsidiary of this A Limited? Check, is this A Limited subsidiary of A Limited? No, because subsidiary means what? It should have how much holding? More than 50% of holding it should have. But here it is holding only how much? 30% shareholding only, which means it is not a subsidiary of A Limited. So then what is it is associate of A Limited. In this chapter, what they will say is, they will say how to do the consolidation of associate. Whatever we have did here, the same thing they will again say. Nicely they will say. They will use some fancy words, fancy presentation they will say, and they will say the same thing only. What is the total profit of this A Limited means how much? 60 lakh is there, plus 30% of 20 lakh we have to add. That's it. So how much is the total profit? 66 lakh is the total profit. Now I will improve this example. You have to tell me the correct figure. Same A Limited is there. In this A Limited, assume it is an Ind AS company. In this Ind AS, what is there is? In this Ind AS company, what is there is, it is having profit for the year. Some items not reclassified to PL. Some items reclassified to PL. It is invested in A Limited. Same example, let us continue. A Limited, sir, how much, sir? 30% it have invested. A Limited also, same 3 items are there. Sir, what are those 3 items? First one, profit for the year is also there. Second, non-reclassifiable also there. Third, reclassifiable items are also there. Just listen very carefully and try to tell the answers. Sir, first A Limited. Profit for the year it is having 50 lakh rupees. Items not reclassified to PL it is having 5 lakh rupees. Items reclassified to PL it is having 3 lakh rupees. Just examples. Don't think how these figures have got. Okay, these are only examples. I'm taking as my wish. A Limited is also earning some profit. Sir, it is also preparing P&L account as per Ind AS only. So the first item, profit for the year is 10 lakhs. Items which are not reclassified to P&L account is 2 lakh. Items which are reclassified to P&L account is 1 lakh. That's it. Now you have to tell me, what is the total profit which is earned by A Limited during the year? Okay. What is the total profit which is earned by A Limited during the year? Let us write like this. First, profit for the year. How much profit A Limited itself have earned? How much it have earned? 50 lakhs it have earned. So here how much I will write? 50 lakh. Plus how much A Limited have earned? 10 lakh it have earned. But do the total 10 lakh profit belongs to me or only 30% belongs to me? 30% only belongs to me. So here I will write 10 lakh into 30%. Can you tell me this figure? 53 lakhs. Okay. Second item, not reclassified to P&L account. This A Limited is having its own items also which are not reclassified to P&L account. Associate is also having some items which are not reclassified to P&L account. Check this. How much items are not reclassified to P&L account as per this A Limited? 5 lakh. But A Limited is also having some items. How many items? Sorry, how much is the amount? 2 lakhs. Do this entire 2 lakhs belongs to A Limited? No. How much? 30% only belongs. So can you tell me the total? 5 lakh plus 30% of 2 lakh. 5 lakh plus 2 lakh into 30%. So how much? 5 lakh 60,000. Last items classified to P&L account. A Limited is also having some items. A Limited is also having some items. A Limited, how much it is there? 3 lakhs. A Limited 1 lakh. Sir, is this total 1 lakh belong to A Limited or only 30%? 30%. So can you tell me the total amount? 3 lakh plus 1 lakh into 30%. So how much? 3 lakh 30,000. That's it. It is very simple. Sir, from the last 10 minutes, what we are trying to understand is, if the item is, listen very carefully, if the item is non-reclassifiable for the associate, the same item will be non-reclassifiable even for this A Limited also. Very simple. If the item is reclassifiable for the associate, same item is reclassified to the A Limited also. That's it, you have to remember. If one item is there, if that item is reclassified to the associate, same item will become reclassified even to the A Limited also. Same logic, not reclassified also. If one item is not reclassified for associate, same item have to appear in items which are not reclassified for this A Limited. Okay? Just check this list. So check this. Share of OCI in associates or joint ventures which can't be reclassified to P&L account. If it is not reclassified to P&L account, same amount will be here also. It will come in not to be reclassified to P&L account only. Here check that point. Share of OCI in associates or joint ventures which can be reclassified to P&L account. If in your associate, if it is a reclassified item, here also it will become reclassified item. Logic is simple. Associate ki ganaka not reclassified item aithe, ikkada kuda same not to reclassified. Associate ki ganaka reclassified item aithe, here also same it will come as reclassified item. Okay. So here we have covered this part. This part also we have covered. This also we have covered. E point chudandi. Gain or loss due to remeasurement of present value of defined benefit obligations. Gain or loss due to remeasurement of present value of defined benefit obligation. This is already there in your CMA Inter corporate accounts, one standard which is called as employee benefit expenses. Employee benefit expenses, if you remember, what is the standard number? Can anyone tell me? Ind AS 19 is there, which is related to employee benefit expenses. That is not there in your syllabus, so don't worry. Okay, Ind AS 19 is not there in your syllabus. But this point I will come at the end of the discussion. Okay, this is not there in your syllabus, so not at all required, but still we will complete this point, don't worry. Now the important point which I want is this one. Fair value of equity instruments change classified as FVTOCI. Again I am saying now only, this is the first time you are hearing to this OCI. You will not get complete understanding, don't worry. Just try to interlink the examples, whatever I am trying to say. First we have understood this revaluation example, correct? If OCI balance is there, later if you have sold that asset, that OCI balance should not be there in your balance sheet. Sir, if it is a reclassified item, it should be transferred to P&L account. If it is a not reclassified item, it should be transferred to retained earnings. That point if you understand, that point if you remember, more than sufficient. Second point what we have understood, associate and joint venture example we have understood. If associate, the item is not reclassified, for you also that item is not reclassified. If for associate the item is reclassified, for you also the item will be reclassified item only. Okay. Now the next part, this one. fair value of equity instruments change classified as FAT OCI. So this is a little bit important. I want your attention. So check this. Investment in equity shares. Assume I have purchased Geo Limited's equity shares. Geo Limited's equity shares I have purchased. Geo Limited's equity shares of, I have purchased 1 lakh equity shares, assume. Each share value 60 rupees. Each share value 60 rupees. I have purchased investment in equity shares of Geo Limited 1 lakh rupees. Each share value 60 rupees. Can you tell me what is the journal entry which I will pass? This I have purchased on 1st April 2025. Tell me the journal entry which I will pass. I have purchased investments. Tell me, think. Correct only, it is very basic. Is this asset or not? Tell me first of all. Investment in Geo Limited. Is it asset or not? No. Then what will be the entry? That's it. What will be the entry? Investment in Geo Limited or investment in equity shares of Geo Limited. Anything we can write to bank account. How much? 1 lakh into 60. How much? 60 lakhs. Correct? 1 lakh into 60, 60 lakhs. Now, we all know that listed companies' share price will fluctuate. If I purchase at 60, does it mean that lifetime the value of Geo Limited share will only become 60 rupees? No, it will keep on continuously changing. So what have happened is 31st March 26 have come. On this date, listed company share price, Geo Limited share price have become 65 rupees, assume. Value of each share in Geo Limited is how much? 65 rupees. Can anyone tell me what is the value of investment which I am holding right now? 65 is the share price. How many shares I am having? 1 lakh shares. So what is the value of investment which I am having? 65 lakhs. Correct? What is the value of investment which I am having? 65 lakhs. But in my balance sheet, what is the value which is appearing? 60 lakh is only there. Ind AS are saying, Ind AS love this word which is called as fair value. Fair value, fair value, fair value. Whatever the value it is, you have to disclose. That is Ind AS. In earlier accounting standard days, these words are there. What are those? Prudence, conservatism, like this, these are there. But Ind AS are saying, we don't care about prudence or conservatism. We only want true and fair presentation. That's it. Which means if it is a profit also, please disclose. If it is a loss also, then also please disclose. In your old accounting standard days, those prudence and conservatism concepts are correct only. But Ind AS want true and accurate picture. Whether it is not conservatism also, it is totally fine. If someone asks you, what is the value of investment which you are having? Will you say 65 lakhs or will you say 60 lakhs? 65 only you will say. Therefore, in your financial statements also the same value should be there. In your financial statements also same value should be there. So here what should be the entry which I have to pass? Earlier my asset balance is how much? 60 lakhs. Now it is increased to 65 lakhs. So how much is the increase? 5 lakh is the increase. So what will be the entry which I have to pass? Investments in Geo Limited. This balance have to increase. How much it should be increased? 5 lakhs it should be increased. Credit what I have to give? 2. This is the important. Do I have to give? Two options are there. Same options, P&L account or OCI. This is the thing. Ind AS Ind AS 109 will says that this classification they will give. Ind AS. Again, I will interlink with Ind AS 109. That is the reason I am saying a lot of interlinking will be there. Sir, so what exactly we have to remember? I will explain, just listen. Ind AS 109 will says that sometimes you have to classify investment in equity shares as FVTPL. This is very, very important word. Try to understand. FVTPL. Second option is you can classify the investment as FVTOCI. What is the first option? FVTPL. What is the second option? FVTOCI. Try to understand. FVTPL is nothing but fair value through profit and loss account. FVTOCI is nothing but fair value through other comprehensive income. What is the full form of FVTPL? Fair value through P&L account. FVTOCI means fair value through other comprehensive income. So here what they will say is, if any item is classified as this FVTPL, in this name only you are saying, your investments should be appear at fair value. If any difference is there, that difference should be transferred in P&L account. Again I am repeating. If any investment you have classified as FVTPL, the name is only saying your investment should appear at which value? Fair value. If any difference is there, that difference should be transferred to profit and loss account. If you observe this FVTOCI, here also what they will say, your investments should appear at which value? Fair value only. Sir, but what if any difference comes? That difference should be transferred in other comprehensive income. That difference should be transferred in other comprehensive income. Sir, how we will understand this classification? You have to study Ind AS 109. If it is an item which is designated as this FVTPL, discussion itself is closed. No problem. Always the difference will appear in which account? P&L account. Which means, will that balance comes in OCI? No. Always it will come in main P&L account only. But the problem is, sir, if the instrument is designated as FVTOCI, here I have got some difference. So that difference I have to transfer to where? OCI. How much amount is there? Tell me. 5 lakh is there. How much amount is there? 5 lakh is there. I have classified this investment as FVTOCI. Sir, what is the cost of investments which you have purchased? 60 lakh is the cost of investments. But now what is the fair value? 65 lakh is the fair value. Sir, but you have purchased for 60 lakhs. Is there any difference? Yes. How much difference is there? 5 lakh. So that difference should be transferred to which account? OCI account. That difference should be transferred to which account? OCI account. Now, example is completed. Now what have happened is, last date have come, 31st March 27. I have decided to sell all those shares. I have decided to sell all those shares. The price have again increased. It have reached 70 rupees. Can anyone tell me what should be the journal entry which I will pass? I will write bank account debit. How many shares are there? 1 lakh into 70. Total shares I have sold, assume. How much I will get? 70 lakh rupees. To what I have to write? Investment in Jio Limited, correct? So to I will write investment in Jio Limited. How much value is there in my books of accounts? Tell me. Is it 60 or is it 65 or is it 70? 65 is only the balance. So here credit I will write how much? 65 lakhs. I have sold all the assets. If you have sold, you can transfer that amount to P&L account. But here what is there? I am not sold. I am not selling the asset. I am just holding the asset. Therefore, if any fair value difference is there, that will be transferred to OCI account. But here what I am doing, I am actually selling the asset. If you are actually selling, if you got any profit or loss, that will be straight away transferred to P&L account. So here tell me the account first. How much? What is the closing balance? 5 lakh is there. This entry is done. But now what is the problem is, OCI is the problem. Investment in Geo is there. I have closed that investment in Geo. Total 65 lakh is credited. But asset itself is gone, but that asset related OCI is still there in the P&L account. Asset is gone, but that asset is there in the P&L account. Now what I have to do, I have to transfer this balance. I have to remove this balance. Here what we are having credit balance. Therefore what I have to do, I have to cancel. So what will be the entry which I have to write? Tell me. OCI account debit. How much? 5 lakhs. 2 I have to write. This is the main thing. Sir, can I write P&L account or other equity or retained earnings? Retained earnings or other equity, anything we can write. Let me write like that. To P&L account should we write or retained earnings? Same logic. If it is an item which is reclassified to P&L account, we can write P&L account. If it is an item which is not reclassified to P&L account, we can write retained earnings or other equity. Okay, sir, this, in order to understand this, you have to come back here. Check this third point. Fair value of equity instruments classified as FAT OCI. Here what they have said, this item is there in non-reclassified item, which means in this entry what I have to write, should I write P&L account or do I have to write retained earnings? Retained earnings I have to write. So here OCI account debited to retained earnings account. How much is the balance? 5 lakh is the balance. How much is the balance? 5 lakh is the balance. If you again check this part, 5 items are there. Out of these 5 items, this also we have completed. Again I will repeat, don't worry. This also we have completed. Same thing will be there here. Just read this item. Fair value change of debt instrument classified as FVT OCI. Here what is there? Fair value of equity instruments. Here it is debt instruments. If it is debt instruments, it is reclassified item. But if it is equity instrument, it is not reclassified item. Sir, how you are saying it is FVT OCI? For that, you have to understand Ind AS 109. They have given you an option. If you are having investments, you have to value that at fair value. That is sure. But either you are choosing this FVTPL or this FVT OCI will be explained in that respective standard. It will give some criteria. If that criteria is satisfied, you can choose this FVT OCI. Otherwise, you can choose this FVTPL. Okay. To conclude what we have discussed, I know that today what we have discussed has a little bit hectic or heavy because this OCI is completely new. But that is totally fine. If you skip this OCI today, in all other standards, it will come number of times. Okay. I will again repeat some few important pointers next day also. There is no problem for me. Tomorrow also I will repeat this point. But if you don't revise it right now, you will land into trouble, because again I am saying Ind AS 16 also this point will be repeated. This will be covered in Ind AS 109 also, this will be repeated. This will be there in Ind AS 110. There also again it will be repeated. This also Ind AS 109. Again all these points are going to repeat number of times. Okay. So what you have to do is, our old P&L account will end here. Just I am concluding whatever we have discussed in today's class. So listen very, very carefully. Our old P&L account will stop till here only. So next what we have to start? We have to start something which is called as other comprehensive income. The purpose of other comprehensive income is very simple: to give more disclosures to the public. Just to show that this is not at all related to my core business, we have separated another line items in the profit and loss account. OCI, you have 2 items. First items are items will not be reclassified to PL. Second items are items will be reclassified to PL account. But both you have to give after tax effect, which means item also you have to show, tax on that item also you have to show. Okay. So, sir, whether that item is a reclassified item or a non-reclassified item, how you will understand is you have to, that is clearly given in the standard only. 5 items are there which are not reclassified items. 4 items are there which are reclassified items. Just understand this part. Sir, if any item is not reclassified to P&L account, what is the journal entry which we have to write? Assume OCI is having credit balance. What is the entry which I will write? OCI account debit. If it is not reclassifiable, then what I have to write? Retained earnings account. That's it. Sir, assume if it is having debit balance, then what is the entry which I have to write? Retained earnings account debit to OCI account. Ultimate objective, OCI should not be there. OCI related itself, if it is, if the asset itself is gone, such OCI also should be gone. 2 ways are there. If it is a reclassifiable item, then what is the entry which I have to pass? Assume I am having credit balance. So OCI account debit to what I have to write? P&L account. So assume if I am having credit balance there, if I am having debit balance there, then what is the entry which I will pass? P&L account debit to OCI account. Just remember those accounts and whatever the points which we have discussed. First one, revaluation reserve of PPE or intangible. Sir, is this a reclassifiable item or not a reclassifiable item? Not reclassifiable item. Therefore, if any OCI balance is there, what we have to do? We have to transfer that balance to retained earnings. Okay, so this point we have not covered. This we have covered. Fair value of equity instruments change classified as FVT OCI. If it is an equity instrument, it is not a reclassifiable item. Therefore, if any OCI balance is there, that will be transferred to retained earnings. Okay. This point also we have covered. Share of OCI in associates or joint ventures which cannot be reclassified to P&L account. Okay. And then here only this point we have covered and last point we have covered. We have 3 more points which are left. Okay, so those points, no problem, we will cover in tomorrow's class. Again, I will revise in tomorrow's class also, don't worry. But the thing is, if you don't revise today what we have discussed, okay, definitely you will not understand next class. Tomorrow itself, we will complete other 2 items also. And a little bit SOCIE discussion also will be there. That also will be done and we will start with Ind AS 16 also tomorrow only. Okay, so this notes I have already shared in the this PDF is already shared in the group. So just copy paste this P&L account format also you have to copy. Okay. Just try to copy this statement of changes in equity also. You don't understand, but tomorrow I will explain, but you can copy this or else you can keep this pending also, your wish. But go through these examples. OCI related examples, whatever we have discussed in class, same example I have given. Okay, same type of example I have given. So check, even with journal entries also I have given that part. If you remember, if you go through that, we will understand. This part also I have explained. Company, associate, consolidated figure. Again in the tomorrow's class I will refer these examples once again, but you can copy this part. Investment in equity shares example also, everything I have explained in the notes only, for just a copy paste. So this is not required. Okay, so whatever is there in your notes, just copy paste that part. Balance part we will continue in the next class. But if you don't remember, but if you don't revise today, trust me, I will only agree, you will not get 100% clarity because lot of interlinking is there. It is not possible for me to explain that completely while we discuss Ind AS only. That is also not possible. So here we have tried to understand whatever it is required. Tomorrow also I will explain, don't worry. Okay. What is your objective is, before coming to tomorrow's class, you also definitely have to remember balance sheet format. That is the core thing which you should not forget. P&L account format also try to remember. This OCI also, whatever we have discussed, just go through all those points. Okay, tomorrow you will get complete clarity and we will wind up tomorrow this basics part and we will start with Ind AS also. Okay, fine. Revise చేసారా లాస్ట్ క్లాస్ చేసారా? ఓకే.
20 minutes చాలు, ఎక్కువ అవసరం లేదు. Okay, fine. So check this. In last class we have introduced with OCI. 90% of useful content is already completed. We will try to quickly once again, I will try to once again explain that OCI concept so that it will be fixed. But again I am saying 100% clarity you will get only after completion of respective standard. But right now if you understand, more than sufficient. So let's quickly check from balance sheet. And then today only we will complete with SOCIE portion also. Basics will be done and we will start with Ind AS. First Ind AS we will start. Okay, fine. So if you observe, for Ind AS compliant companies, balance sheet is given in which, where it is given in balance sheet, I mean division 2 of schedule 3 they have given the balance sheet of Ind AS compliant companies. In that part 1 they have said. If you observe, first part will be starting with assets. In that also, first we will write non-current assets. Okay, we have understood the breakdown of non-current assets. Like if you remember, 3 tangible items will be there. Correct, 3 tangible items will be there. What are those 3 tangible items? Property, plant and equipment, capital work in progress, and third one, investment property. So these 3 tangibles will be there. After that, we are having 3 intangibles also. What is the first one? Goodwill we are having, other intangibles, intangibles under development. 3 tangibles done, 3 intangibles also done. Next we are having 1 biological asset. But not all biological assets except bearer plants. Where these bearer plants are covered? Bearer plants are covered in PPE. We will try to cover this part from Ind AS 16 also by today only. It will be completed. Next, financial assets we have understood. 4 financial assets will be there. What is the definition of financial asset which we have understood? Contractual right to receive the cash. 4 what are 4 we are having? Investments, trade receivables, loans and others. After these 4 financial assets are completed, next we are having 1 deferred tax asset. And last we are having other non-current assets. Okay, non-current assets portion is completed. Next, current assets. Current assets what we are having? Inventories, financial assets, 6 financial assets are there. 4 financial assets are copy paste from non-current assets. What are the new 2 assets which are having? Cash and cash equivalents, bank balances other than 3. Next, current tax assets we are having, and last we are having other current assets. Okay, this portion is completed. Assets portion is completed. For first 20 minutes you may not understand, but after that, after starting Ind AS you will understand. Okay. Next, we have completed profit and loss account format also we have completed. So let's quickly complete that. Statement of profit and loss. 2 income items we are having, correct? What is the first item? Revenue from operations, other incomes. If you add up these 2 items, you will get a total income. 7 expense items we are having. If you deduct those 7 expense items, then what you will get? Profit before exceptional items and tax. Extraordinary items are deleted from Ind AS. Olden days we are having extraordinary items, but if you study all Ind AS, you will find they have completely removed the word extraordinary items. Here we are getting profit before exceptional items and tax. Next we have to make an adjustment for exceptional items, plus or minus we have to do. Then you will get profit before tax. Tax adjustment also we have to do. Two types of taxes, current tax, deferred tax. Then you will get profit after tax, but what operations? Continuing operations. Then we have to also separately present to the investors if any discontinued operations are there. If you are having any profit or loss from those operations, we have to separately disclose to the investors, because we have to give a clear picture to the investor that whatever the profit or loss from these operations which are there, that will not continue in future, so that investors are not misled. Next, tax also we have to show. Finally, you will get profit from discontinued operations also after tax you will get. Add these two items. This from continuing operations, this from discontinued operations. Then you will finally get what? Profit for the year. Till here, everything is fine. Just your old profit and loss account only, you just have to check. But now what have happened? Suddenly these Indians have introduced another concept which is called as other comprehensive income. Okay, just stick to what I am saying right now. In these other comprehensive income, we are having two items. Some items are what? Not reclassified to P&L account. Not reclassified to P&L account means never these items will come into P&L account. Okay. Next, what we are having? Some items which are reclassified as profit and reclassified to profit and loss account. How many items are there totally? OCI items? 9 items we are having totally. Not reclassified, how many items are there? 5 items are there. Reclassified, how many items are there? 4 items are there. Just to try to understand. If any item, okay, if you remember, what is the first non-reclassifiable item which we are having? Revaluation of PPE or intangibles. Just let us try to remember one example. See, since this is not reclassified, whatever balance is there in your OCI account, if the asset is already transferred, then what we have to do, that OCI balance also should not be there in your balance sheet, correct? So what we have to do, we have to remove that OCI balance. For example, assume in your OCI, you are having a credit balance of 2 lakhs. Credit balance of 2 lakh is there in your OCI account. Now that asset is already transferred. Still you are having some balance in OCI. So what you have to do, you have to cancel this balance. If you want to cancel this balance, what is the entry which I have to pass? OCI account will be debited. Since it is having credit balance, it should be debited to cancel. Credit what we have to give, that is the question. Since this is an item which is not reclassified to P&L, I cannot write P&L account. So what is the option which I am having? I have to write retained earnings or other equity. If you remember this, more than sufficient. Just try to remember what are the items which are not reclassified to P&L and what are the items which are reclassified to P&L. Complete logic we will understand while we are discussing respective standard. Okay, fine. Other examples also we have seen, but after tax items we have to give. Whatever items which are not reclassified, that also we have to disclose along with tax effect also. Because in this, what they are saying, if you want to disclose, please disclose that fully. If you are only saying that you are having a revaluation gain, that is not correct. You also have to invest, you also have to show to investors, in future I also have to pay tax on that also. So if you want to disclose fully. Next, what they are saying, items that will be reclassified also we have to show tax on above. Finally, you will get total comprehensive income. How I will get this total comprehensive income? This also we have to add profit for the year plus these two items we have to add. Finally, you will get total comprehensive income. This total comprehensive income will come in your statement of changes in equity. This I will explain today. Okay, fine. Let us try to complete balance part also of OCI. If you check these examples, see, check the first one. PPE is revalued by 5 lakh rupees upwards. PPE is revalued by what? 5 lakh rupees upwards. What is the earlier value of PPE? 45 lakh. Now the entry what I have to pass is, check this, PPE account debit. See, how much PPE have to be increased? 5 lakh it have to be increased. So here what I will write, PPE account debit 5 lakh I have to write. Since it is an OCI item, I have to give the credit to OCI. But I will not give entire 5 lakh rupees, because in future I have to pay some tax of how much? 30%. So what I did, this 5 lakh into 30%, 1,50,000 I will transfer to deferred tax liability account. Balance amount only I will transfer to revaluation reserve. See, this OCI and revaluation reserve both are same. The name is revaluation reserve only, but it will appear in OCI account. Okay, complete details. This entries I will, number of times we will practice in Ind AS 16. Okay, but just you have to remember like this. Asset is increased, therefore PPE should be debited. Normally credit I have to give to revaluation reserve. In your old accounting standards, you will do this only. PPE account debit 5 lakh, to OCI 5 lakh you will write. I mean to revaluation reserve you will write 5 lakh rupees, totally you will write. But now what they are saying, don't disclose only 5 lakh. You have to also show to the investors that you are having a liability of 1,50,000 also. Because in future, if you sell that asset, you also have to pay the tax on this 5 lakh into 30%. That also you have to show to the public. Okay, fine. Next, see, check this part. If any equity instrument is there, assume I have invested in Geo Limited. That is my investment, correct? Every year end, what I have to do, I have to measure that at fair value. If I have to measure that at fair value, I have two options basically. If you remember that example, investment in Geo Limited, I am having two options. What is the first option? FVTOCI. Second option is what? FVTPL. Again, I am saying this 100% clarity you will get only in Ind AS 109. But just try to remember. What is the full form of FVTOCI? Fair value through other comprehensive income. Full value of this, full form of this FVTPL is fair value through profit and loss account. If you are following this approach, if there is any difference between fair value and your cost, that difference will be transferred to which account? OCI account. Here you are only saying your investments have to be valued at fair value. If any difference is there, the difference will be transferred to OCI account. But here what is the case? If there is any difference, the difference will be transferred to profit and loss account. I will try to repeat that example once again, so be very careful. I have purchased investment for 10 lakh rupees. Year end have come. I have valued the fair value and fair value come to 12 lakh rupees. Now what happened to my investment? Is the value increased or is the value decreased? Increased. So what will be the entry which I will pass? There is no doubt I will debit investments, because it is my asset. Assets balance is increased, so I will debit. How much I will debit? 2 lakhs I will debit. Credit what I have to give. Sir, do I have to give to P&L account or do you have to give to OCI account is the question. That you will understand, sir, how to do the classification, whether I have to classify that as FVT OCI or whether I have to classify that as FVTPL, you will understand it in days 109. There they will prescribe some conditions. If you satisfy those conditions, FVT OCI will be applicable. Otherwise, FVTPL will be applicable. For example, assume they have given FVT OCI. Then credit I have to give to what? Credit I will give to OCI account. How much amount I have to pass? 2 lakhs. Sir, how to do the classification? Just hold on. You will understand in 109. But right now, if they have classified that asset as FVTPL, assume same difference is there. Now what will be the entry which I will pass? Investments account debit 2 lakhs. To credit what I have to give? P&L account, because it is FVTPL. Now what they are saying, later if I sold this investment will be cancelled from my books of accounts. But what is still there? OCI. What is still there? OCI. Here what they are saying, okay, if you are having any fair value of equity instruments classified as FVT OCI, which item it is? Is it a non-reclassifiable item or is it a reclassified item? Non-reclassifiable item. Therefore that OCI should be cancelled. That OCI should be cancelled. To which account it have to be cancelled? Retained earnings, because it is not reclassified item. Okay, that much if you understand, more than sufficient. Check this part finally. Fair value change of debt instruments. Now what I have did, I have not invested in equity shares. Assume I have invested in bonds or assume I have invested in debentures. Same concept. But what they will say is that is a reclassifiable item.
That is a reclassifiable item. If it is reclassified item, if I want to cancel, what account I have to write? P&L account I have to write. Sir, why it is treated as reclassifiable? Why it is not treated as reclassifiable? We will understand only in Ind AS 109. Okay. Right now, even if I explain also, it will be duplication. Now also I have to explain, there also I have to explain. Okay. So we will not do that. We will not cover that part here. Last part only I have to cover is this one. If you remember this example, company is there, associate is also there. While preparing total profit, sir, what is the meaning of consolidation? Just for now, you can remember like this, it is nothing but total profit. Okay. Total profit of the company is 5 lakh rupees. Associate have earned 2 lakh rupees. What is the total profit which it have earned? This total 5 lakh belongs to the company only. Plus this entire 2 lakh is not belongs to company. How much is belongs? Only 40% is only belongs. If you calculate 2 lakh into 40%, you will get 80,000. But 5 lakh is the company's profit alone itself. So what is the total profit? 5 lakh 80,000. That associate is also having few items. Some item is not reclassified to P&L. If your associate is also having any item which is not reclassified, for you also that item should be appeared in non-reclassifiable only. Remember that much, more than sufficient. If your OCI is having some items which are reclassified, whatever share we are having in that share also will be sitting in reclassifiable items only. Okay, fine. So we have completed this other comprehensive income part. So finally, if you calculate this total comprehensive income, last we just have to find out earnings per share. How you will get this earnings per share? Tell me. Very simple. Whatever the total comprehensive income which you have calculated, you have to take that figure divided by what we have to do, number of shares. Number of shares we have to do. We are having, if you remember, 2 EPSs will be there, basic EPS and diluted EPS in your accounting standards. But here what we have to present is continuing operations and discontinued operations. How much EPS is relating to continuing operations? How much EPS is related to discontinued operations we have to present. Okay. If you understand till here, more than sufficient. Okay. If you are fine, let us move to next thing which is called as SOCIE. Okay. Just try to, other items are there now, some 2 to 3 items are there. See, this is not there in your syllabus only. Present value of defined benefit obligation. This is Ind AS 19, which is there in your CMA Inter. So they will never ask any question from this. So no problem, we can leave this point. Okay, Ind AS 19, this is not there. Other points, if you observe, I have not covered this point. Fair value changes of financial liability. This is impossible for you to understand now. So we will cover this in Ind AS 109 only. Here also, this point is there, cash flow hedge. This also will be covered in Ind AS 109. Exchange difference on translation of foreign operations. If you check this part, this also we are having separate standard Ind AS 21. Foreign exchange standard is there. If you remember in your accounting standards also, there is one standard which will talks about foreign exchange. What is that standard? Accounting standards. 21 Ind AS. Accounting standards I am asking. Inter. AS 11 if you remember, foreign branches. There is one question which is there in branch accounting, plus it have interlinking with this foreign exchange. Okay, don't worry if you don't remember also. Similar type of question is there here also. So we will solve that question. So we will easily remember. Don't worry. Okay, so this we are having, we will cover in Ind AS 21. Whatever we have covered, just try to stick to those examples only. Overall understanding you will get. AS 11, very good, fine. So check this, we are done. Now let us move to statement of changes in equity. Okay, check this part. This statement of changes in equity is nothing but, from this statement of changes in equity, we will take 2 figures. Sir, what are those two figures which we will take? We will take equity share capital also from here, and second item is other equity. Equity share capital and other equity. Only these two items will be directly taken from this statement of changes in equity. If you remember, what happens to preference share capital? Will it still comes in shareholders funds, or it will be classified as liability? It will be classified as liability, that we have already discussed. Sir, how it will be classified and all we will study later. Okay, now try to understand. Here only two items will be coming. What is the first item? Equity share capital, other equity. So check this first. This is nothing but reconciliation statement, that's it. Reconciliation statement means what is the balance as the beginning of the reporting period. Opening balance, this is nothing but opening balance. Assume 5 crore I am having as opening balance. 5 crore is the opening balance which is there. Sir, what I have did is I have issued a new share capital in the current year. Assume I have issued share capital worth 1 crore in the current year. Now can you tell me what is the closing balance? 5 crore is opening plus new capital 1 crore they have issued. So what happens to the closing balance? 6 crore. Correct. In meanwhile, what have happened is, assume this is one case, and in meanwhile what have happened is it have issued 1 crore during the current year, and some 20 lakhs it have buyback. From 20 lakhs during the year it have bought back. Can you tell me the total? What is the total closing balance? 5 crore, 1 crore, 20 lakhs. 5 crore, 80 lakhs. Huh? 2 lakhs కాదు కదా, 20 lakhs. మర్చిపోయినట్టున్నారు నెంబర్స్, ఒకసారి క్యాలిక్యులేటర్ ఓపెన్ చేసి చూడండి. నెంబర్స్ మర్చిపోయినట్టున్నారు, ఒకసారి ఓపెన్ చేయండి క్యాలిక్యులేటర్స్. సార్ జీరోస్ తీసేయండి అయితే. 500, 100, 20, 580. Okay. So that's it. Equity share capital, that much discussion is more than sufficient. Opening share capital we have to write. Additions if there are any. If any buyback is there, after making all adjustments, finally you will get the balance as the end of reporting period. This is the first item. Equity share capital completed. Now this. So check this, other equity. First only I am explaining, this much big it will not be there. Any two items only they will test if they want in your exam. Only two items they will test. But since this is the total format, it is given like this. You will not even see the figures also. Okay, words are also very small, but only let us try to check important points only. So whatever I am explaining, stick to that. Whatever useful for the exam, I will explain all those points. First, other equity. First we have to write the balance at the beginning of the reporting period, which is nothing but opening balance we will write. First we will write opening balance. Next, what have happened? If in your previous balance, if there is any adjustment which have to happen. In your previous year, there are some errors which are there. So now what you have to do, you have to rectify those errors. In your previous year, assume there is any accounting policy which is changed. If you remember, starting I have asked you to remember the Ind AS names. If you observe, what is the name of this Ind AS 8? Tell me. Ind AS 8. One sec. Ind AS 8, that's what I am saying. If you don't revise, you will not understand that we have started only. Till that time we will complete 4 Ind ASs. So daily you have to revise. Otherwise, 4 Ind ASs will be completed. Okay, so check this. Ind AS 8, what they will say is, if any accounting policy is changed, if any accounting estimate is changed, how we have to do the accounting, that will be explained in the standard. I have not explained that standard. That is there in our syllabus. Just I have asked you to remember the names. That's it. Okay. So if there is any misstatement in your opening balance, we have to make an adjustment in that opening balance. Then finally you will get restated balance, or here we can write revised balance. Revised opening balance you will get. For that revised opening balance, what we have to do is, whatever the total comprehensive income which we have got, From the profit and loss account, we have got the last figure, correct? What is that? If you add OCI items, finally you will get total comprehensive income. Okay, this total comprehensive income figure will be added to this. In the current year, it may be possible that they will declare any dividend. Assume the company have got 1 crore profit. It have decided to issue 20%, for 20% of profits, which means 20 lakh it have issued dividend. Sir, assume it have transferred some 10 lakh rupees to retained earnings. Can you tell me what is the closing balance? Balance at the end of reporting period is how much? 70 lakhs. Okay, I think that this is also a kind of reconciliation only, just we have to do. So first we will start with opening balance. First we will start with opening balance. If there is any accounting policy, if there is any error, if there is any prior period error, if there is any change in accounting policy, we have to do the adjustment. Finally, you will get revised opening balance you will get. Then we have to add total comprehensive income. What we have to add? Total comprehensive income. If any dividend is declared, you have to make an adjustment. If any retained earnings is transferred also, we have to make an adjustment, and finally you will get balance at the end of the reporting period. Now try to understand small things. Check this part, reserves and surplus. Reserves and surplus. If you remember, accounting standard days, 2 items will be there in this share capital. What is the first one? Shareholders funds will be there. And the second one we are having reserves and surplus. These reserves may contain different items. If you remember, capital reserve will be there. Securities premium reserve will be there. Sir, when we will get this securities premium? Check this. Face value of the shares is 100 rupees only. But you have issued the shares at 120. You have issued the shares at 120, which means you have issued the shares for premium we have issued. How much amount is more than face value? Tell me. 20 rupees. Assume you have issued 1 lakh shares. So 20 into 1 lakh, 20 lakh will be transferred to securities premium account. Okay, that's it. So here they have given 3 reserves: capital reserve, securities premium reserve, other reserves. For example, you will find something called as capital redemption reserve. In your bonus shares you will find this. Okay, just any other reserve for that matter. And last we are having, what is this? Retained earnings. Here we have to write current year figure. Current year comprehensive income figure we have to add to the retained earnings. Okay, that you have to remember. Reserves and surplus balance, what we are having? Capital reserve we are having. Securities premium reserve we are having. Other reserves is also there. Finally, retained earnings we have to add. So, this balance is there. Whatever items which are there here, whatever the items which are there here, these are nothing but OCI items. Just try to understand what I am saying. You no need to by heart all these things. Okay, whatever important, we will understand that only. Check this part. What is the first one? Equity instruments through other comprehensive income. You don't understand anything, just go with these words. That's it. What is this second item? Effective portion of cash flow hedges. Cash flow hedges. Third one, revaluation surplus. Fourth one, exchange differences on translating the financial statements of a foreign operation. Last, we are having other items of comprehensive income. Whatever items we have discussed here, just open your notes wherever we have written. Just open that part. Okay, in your notes, just open these items. Okay, now check whatever I have written here, including this also. Debt instruments through other comprehensive income. Check where we have written this. Is it non-reclassifiable item or reclassifiable item? Reclassifiable item. Check investment in debt equity debt instruments classified as FVT OCI we have written. Correct? Reclassifiable items. Check this part. Equity instruments through other comprehensive income. Where we have written this? Is it an item reclassifiable or not reclassifiable? Not reclassifiable item. Third one, effective portion of cash flow hedges. Reclassifiable. Revaluation surplus. First item check, non-reclassifiable item. Check this part. Exchange differences on translating the financial statements of a foreign operation. Reclassifiable item. Other items. It can be either reclassifiable or not reclassifiable, which means if you observe, all these items are OCI items. I'm just explaining the format. This much they will not give in your exam. Any two columns they may give, that's it. For example, revaluation surplus they will give, or equity instruments, that's it. Any 2 points they will give, that's it. Okay. So I have tried to explain from the schedule 3 itself, for exam perspective, what we have to remember. For that, we can stick to whatever we have written in our notes. Okay, so check this. Here what we will do is SOCIE, statement of changes in equity. For equity, share capital and other equity, we will prepare only one working note. Here only the first column I will write equity, share capital. So what are the other columns which we are having? If you check, share application money, pending allotment. No money will come in this, but in the format just they will be having. Okay. If any shares you have paid any application money, but still shares are not allotted to you. Till the time shares are allotted, you have to disclose that amount in a separate line item that is called as share application money pending allotment. Don't worry about this. Ignore this part also. Read this. Capital reserve, securities premium, others, retained earnings. These are nothing but P&L account items. These will be routed from P&L account. And last, if you observe, OCI items we are having. In question, whatever OCI items they have given, we will open those columns for that. That's it. If 2 items are there, we will open only 2 columns. Share warrants is also there. Here also, generally, we will not write any amount. So don't worry about this from exam perspective. Finally, you will take the total. Okay. If you check these examples, opening balance, prior period errors we will write. Then you will get restated opening balance. Then what we have to add, total comprehensive income. This you will take from profit and loss. This we will take from profit and loss. Then finally, if you have declared any dividend, you have to make an adjustment. If any amount is transferred to retained earnings, that also will be adjusted. Any other changes, for example, if amount is transferred from securities premium to others, if from retained earnings, if you have transferred to capital reserve, like this, if we have to, this retained earnings balance will decrease, this balance will increase. Like this, we have to just post adjustments. That's it. This is also a kind of reconciliation statement. Finally, you will get closing balance. Whatever the closing balance which we have got here, this will be transferred to balance sheet, equity, share capital and other equity. Okay, if you remember this part. Share capital and other equity. These 2 figures will be directly coming from SOCIE. Okay, so whatever you have written in the notes, just to stick to that format. Just for 2, I will give 3 minutes time. You have to check. 3 minutes time I will give. You have to check balance sheet format once again quickly. Balance sheet format once again quickly you have to check. Next we have to check profit and loss account also. In that OCI discussion, whatever the items which I have explained, just try to remember those which are not reclassified, which are reclassified. Both, whatever items which I have explained, just to stick to those items. And last but not the least, SOCIE also. How much I have explained, just check all those points. I am only saying 100% clarity you will not get, but at least a basic idea. Have you got or not? Please check for 3 minutes. Once you have got some clarity, then we will start next chapter. Okay, basics are completed. So please check balance sheet, profit and loss and OCI, SOCIE also for 3 minutes, then we will get started. try to remember the format also. Okay, at least 90% you have to remember. 90%. Right now 100% you have to remember. But after 2 to 3 chapters, at least 90% you have to remember. Online students, if you are done, please comment, then we will start with next topic. All the 3 we have to check. At least you should get a basic understanding. Okay. Profit and loss account, the format, where discontinued operations will come, where to do after tax adjustments, where to do the tax adjustments. Okay, fine. So one student is asking about this point, gain or loss due to remeasurement of present value of defined benefit obligation. Let us try to understand this. If you observe, this gratuity, in income tax we will find one formula to calculate the exemption amount, 15 by 26 into last drawn salary. Some calculation will be there for this gratuity part. So what they will say is, assume if you are a company, total number of employees which we are having is 20,000 employees. For all those employees, of course, if they have satisfied certain criteria, for all those companies you have to pay gratuity. Sir, how much amount of gratuity we have to pay? That is clearly defined in the Gratuity Act, which means we are having an obligation to pay the gratuity which is already defined. which is already defined. So what they will say is, assume one new employee have joined, assume it is a new company. From the first year only it have started its operations. Then 20,000 employees have joined in the company. Company have to make estimate of how many employees will be continued in the future, for how many employees we have to pay the gratuity, and all those kind of calculations the company have to do on the starting day itself. It is not that much easy. It have to make number of estimates. It have to estimate how many employees will continue, for how many years they will continue. All those estimates are not that much simple. There are some experts who are called as actuaries. If you remember this, you can later search in Google. These actuaries are nothing but these are valuation experts. What they will do is they are experts in predicting how many employees will continue in the future, for how many years they will continue, and all they will prescribe. So what they will do is, if any employee have retired after 20 years, at that time only company will not make the payment. From now onwards it will start investing, because on that time itself, assume all these 20,000 employees have retired after 10 years, assume. Then on a single time it have to pay huge amounts of money. That much money they cannot afford. So what they will do is, every month or every year they will invest some amounts. Sir, how much amount they have to invest? How much amount they have to contribute? All this will be calculated by this actuaries only. So in days 19 what they will say is, you will calculate the present value of defined benefit obligation. For example, think like this. Assume they have calculated some 30 crore rupees which we have to pay after 20 years. But they will calculate the present value of the 30 crores. Assume it have come to some 10 crores or something. If it invested for 25 years, if it is invested for 25 years, this 10 crore will become 30 crores. Okay, you have to calculate the present value. Assume if you have got some amount, you will invest that amount right now. After 20 years, that amount will become 30 crores. Now what I will do, I will pay this 30 crores to those employees. How much amount I have to invest, that also will be calculated by these persons only, which are called as actuaries. Assume, see, this amount will keep on changing because it is an estimate. Okay, how much employees will be there? Assume, starting I have assumed 15,000 employees are going to continue in the organization. Next year estimate got changed. I have changed this to 12,000. Next year again the estimate will be changed 13,000. Like this estimate will keep on changing. If this number of employees got changed, obviously the present value also will be changed. Obviously the present value of that amount also, because if number of employees will change, the amount of gratuity which I have to pay also will change. If it changes, obviously my present value also will change. If your present value changes, now this only they will say gain, you will get some gain or loss. Okay, assume I have calculated the present value and I have got some 10 crore rupees. Next year I have calculated again the present value and I have got 12 crore rupees. Initially I have estimated my liability will be only 10 crores. But now my liability got changed. Now the liability is how much? 12 crores. Which means I have got some loss. I have got some loss. What they are saying is this loss is also an OCI item. This loss is also an OCI item. This is the part which they will say. So whatever the, sometimes you will get gain also. Initially you have estimated 10 crores, but later it have changed only to 8 crores. Now you have got gain. Whatever gain or loss which you have got because of remeasurement of defined benefit obligation, that is which item? Non-reclassifiable item. Okay. This is not there in your syllabus, so don't worry. Some students have asked it, so only for that only I have explained this part. This is not there in your syllabus. This Ind AS 19 itself is not there in your syllabus. Okay, fine. Okay, done. So now basics chapter is completed. Basics chapter is completed. So let us check this. If you remember this, This is the sheet which I have opened. Is it blurry or what? Okay, so check this. This is the sheet which I have opened in the first class. Okay, so basics part is completed. Now let us start with main part. Even if you don't listen to earlier classes also, still it is no problem. From now you will understand. Okay, fine. You can watch that. You can watch those classes in YouTube. All the earlier classes are already uploaded there. So please check that. But from now onwards, there is no interlinking with what we have covered in last classes. Okay, so listen carefully. If you check, we are having how many specific accounting standards in our syllabus? Count and tell me how many standards are there. I have already explained in first class. How many are there? 12 specific indices are there. Okay. In those 12 specific indices, I will do some classification just to try to understand what I am trying to do. This PP is there now. Property, plant and equipment. We will start first this standard only. Ind AS 16, this is an asset based standard. This is an asset based standard. Second type of asset based standard is this intangible assets. This is also completely related to assets only. So Ind AS 38 is also asset based standard. Completely they will talk only about assets. If you check this borrowing cost, in your accounting standards, we are having a similar standard which is AS 16. Same to same concept will be there. 90% the content will be same. This borrowing cost also is an indirect standard which is linked to assets only. Because if you remember, see all these standards, even if you don't remember anything also, I have to discuss from very basics only. So don't worry, even if you don't remember anything. Okay, still we will discuss from the very basics itself. No need to worry about it. Similar standard in your accounting standard AS 16 is there, but in Ind AS we will learn Ind AS 23. That is also an asset based standard. Here also discussion will be there only with respect to assets. If you just remember, in your AS 16 we are having one asset which is called as a qualifying asset. Just if you remember, fine. No need to remember the meaning. Just if you remember the word qualifying asset, fine. Otherwise, even if you don't remember also. Okay, so this Ind AS 23 is also an asset based standard, and last we are having this Ind AS 36 also. 36 is related to impairment of assets. This is not there in your old accounting standards. This is completely new standard. Okay, impairment, very, very interesting and very, very important from exam perspective. We will discuss that from very basics onwards. Don't worry. This is also an asset based standard. So if you ask me to write, I will write Ind AS 16 will be there. PP. Next, Ind AS 38 intangibles. Ind AS 23 borrowing cost. Ind AS 36 impairment. Just a minute. Okay, so listen. Ind AS 16 PP, Ind AS 38 intangibles, 23 borrowing cost, and 36 impairment. Sir, remote the okay. Apart from these four, we are having another standard which is Ind AS 116. Ind AS 116 also we are having, that is with respect to leases. Leases. This is also very comprehensive standard. We have to cover this also. So all these are nothing but asset based standards. All these are nothing but asset based standards. How many assets are there? How many standards are there? 5 standards we are having. Ind AS 16 PP, 38 intangibles, 23 borrowing cost, 36 impairment, and last Ind AS 116 leases. These are only there in our syllabus. But apart from these, we are having other 3 Ind ASs also which are there. Other 3 asset based standards also we are having. Sir, what are those 3 asset based standards? If you remember, Ind AS 2 we are having, which is talks about inventories. Ind AS 2 which talks about inventories. And next Ind AS 40 also we are having, which talks about investment properties. Ind AS 40 we are having, which talks about investment properties. And last Ind AS 41, which is nothing but biological assets. Ind AS 41 is nothing but biological assets. Okay. 40 investment properties, 41 biological assets. Okay, just to try to remember these Ind AS names once again. These 3 are not there in our syllabus. But why I have written these also I will explain. Not there in syllabus. Okay. (41) biological assets, 40 investment properties, Ind AS 2 inventories. Sir, why we have written these 3 parts is, in your last exam, which is December 2025, what they have given is, suddenly they have asked an MCQ from this Ind AS 2, which is not there in your syllabus. They have asked an MCQ, but that is not very difficult. You already know that inventories are valued at cost or NRV, whichever is lower. This point only they have asked. That's it. They have not asked any big thing, but that is not there in our syllabus. Like this, they will not do in all attempts. Only 1 out of 5 attempts or 1 out of 6 attempts. They may give only 1 MCQ which is out of syllabus. That's it. All others are from your syllabus only they have given. Okay. So just to try to remember all these standard names: 16, 38, 23, 36, 116, 2, 40, 41. Okay. Fine. Now, if you check the paper pattern, other than this December 2025, check all other attempts. All other attempts, I have already explained in the starting only that 2A, 2B, 3A. These 3 questions they will ask from specific Ind ASs. Correct? Check all the last 5 attempts. Just for the timing, exclude this. If you check all these attempts, you will find all 2 questions they are asking from these asset based standards only. Check this: 16 asset based, 36 asset based, again 16 asset based, 36, 116, 36, 38, 116, 36. Asset based standards only, they are asking 2 questions out of 3. Which means asset based standards are very, 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 very important from exam perspective. In the last attempt, they have given a twist, total twist. They have not even asked any one asset based, which means in our next attempt, in June 2026, definitely 2 questions are going to come from this asset based standards. There is no doubt about it. Okay, so we cannot take choice on any of the asset based standard. All those 5 asset based standards are very, very important. That is the first thing which I want you to understand. Okay, so out of these 5 indices, without this 36, if you check, without this 36, there is no question paper in the last 4 attempts. But suddenly in the last attempt they have not given, which means in the next attempt 90% they are going to repeat this index 36. Whether they repeat or not, that is not our matter. We will cover all the points, but the thing is we have to understand the importance of exam also. We have to understand the importance from exam perspective also. Okay, all those asset based 5 indices, if your luck is fine, in the next attempt definitely 2 questions are going to come from those 5 standards only. Otherwise, even if your luck is worst also, 1 question they are going to definitely ask. If they have not asked descriptive question from these standards, I mean from this 2A, 2B, definitely they will cover in MCQs. 2 to 3 MCQs they will ask only from these asset based points only they are going to ask. Okay, fine. So with this background, what we will do is, let us start with index 16. Okay, keep heading. New chapter, asset based standard. We will start with easiest standard first, Ind AS 16. Just basic points only we will complete. Okay, so check this. Ind AS 16. The name of the standard is property, plant and equipment. Property, plant and equipment, the name of the standard. In your accounting standard, what is the similar standard to this Ind AS 16? Tell me. PPE we are having. What is that accounting standard? AS 10. Very good. AS 10. It is similar standard in your accounting standards. But one thing I want to tell right now only. If you have learned this AS 10 nicely, Ind AS 16 will be exactly copy paste. Frankly speaking, this AS 10 itself they have copied in order to make equal with Ind AS 16. So majority of the content, 90 to 95% of the content will be exactly same as your AS 10. Whatever you have studied there, that is exactly same as in Ind AS 16 also. But my assumption is you have not remembered anything. So I will discuss from the very basics itself. So don't worry about that. Okay, fine. So property, plant and equipment. First let us write the objective of this standard. Objective of the standard. Every standard before studying, you have to understand in this standard what we are going to learn. Okay. PPE, with respect to PPE, what we are going to learn in this standard is, first part we will understand the recognition of PPE. Recognition of PPE. Recognition is nothing but bringing into our books of accounts. When you have to bring one PPE into your books of accounts, when to record an asset. It is very simple. If you purchase any asset, what is the entry which we have to pass? Tell me. Assume we have purchased through paying cash. Then what will be the entry which we will pass? PPE account debit to cash or bank. This entry itself is called as recognition. Simple. Whatever the entry which we are passing, that is nothing but recognition. So when we have to record an asset, how we have to record an asset. Second point what they will focus is measurement. Second point what they have focus is measurement, which means at what value you have to measure your asset. At what value you have to measure your asset. It is very simple. For example, you have purchased an asset. You have purchased an asset. While purchasing an asset, they will give you one invoice. Correct? They will give you one invoice. In that invoice, if you observe, you will find taxable value. You will find CGST, SGST in case of intrastate, or IGST in case of interstate also you will find. Finally, you will get invoice value. Sometimes they will give discounts also. Sometimes they will give discounts also. So in our invoice, all these items will be there. At what value do we have to record the PPE? Measurement. It will explain in this measurement part of the standard. Do we have to record only at taxable value, or do we have to add GSTs also, or do I have to include these discounts also? Very nicely it will be explained in that standard. At what value you have to measure the PPE will be explained in this measurement part. Okay. Third part, presentation. Third part, presentation. How to present in our financial statements. Okay, what is the mode of presentation, what is the manner of presentation, and all will be explained in this presentation aspect. Last point, it is nothing but derecognition. Last point is nothing but derecognition. Fourth point, derecognition. And finally, fifth one, disclosures. Fifth one, disclosures. Okay. These 5 points only we are going to learn in this standard. That's it. Standard is little bit small only. So maximum in 4 to 5 classes we can complete this standard, but very, very important from exam perspective. So try to understand what is the first part which they will discuss in this standard. Recognition part they will discuss. When to record, how to recognize, and all they will explain in this recognition aspect. What is the second thing? Measurement. At what value you have to record. In your invoice, if you observe, taxable value will also be there. Discounts also will be there. GST portion also will be there. All these items will be there. So at what value you have to record. Third one, they will focus on presentation aspects. And fourth one, derecognition. See, recognition mean what? Recognition means what? Bringing the asset into our books of accounts. Derecognition means what? Removing the asset. If any asset is sold. If any asset is sold, how to do the accounting? That part also will be explained in this standard only. Last but not the least, disclosures. What are the disclosures which we have to make? Okay, fine. So in this standard only, let us write the second point also, and then we will stop. Second point is nothing but scope of this standard. Scope. Second part is nothing but scope of the standard. Scope of the standard also, it is very important for you to understand. What all items are covered in this Ind AS 16. And if any item is not covered under this Ind AS 16, you have to understand those items before getting into the standard. Before only we have to identify if any item is excluded from the scope of Ind AS 16, we have to understand right now only. Sir, what are the items which are excluded? Let us try to understand. First item we have already know that. See, Ind AS 16 applies to all PP. Ind AS 16 applies to all PP except First item we have already know this, so I will summarize. So listen, biological assets, in brackets other than bearer plant. Biological assets other than bearer plant. From the starting onwards, I have been explaining this point. Biological asset, if you are having, it can be two types. First one, bearer plants. Second one, other than bearer plants. We will have a detailed discussion, probably that we will do in the next class, but here, whatever is relevant, let us try to complete that part. Biological assets, if it is a bearer plant, it is covered in Ind AS 16 only. If it is a bearer plant, it is covered in Ind AS 16 only. But if it is other than bearer plant, that is not covered in Ind AS 16. These biological assets are excluded from the scope of PPE. Sir, why these are excluded from the scope of PPE? Because the reason is very simple. They are covered in another Ind AS. They are covered in another Ind AS. Sir, where they have covered? Now only I have explained. We are having another standard which is called as Ind AS 41. Ind AS 41, that is a separate standard for which items? Biological assets other than bearer plants. Since we are having a separate standard, those are not covered under Ind AS 16. Okay. Copy this. Now, the point is, sir, why we are having a separate standard for these biological assets? Let us try to understand. In next class, I will explain the meaning of biological assets. Correct meaning we will try to understand then. But now I will give few examples. Cows, buffaloes, if you observe, those are also assets only. Those are also assets only. These type of items are not there in your accounting standard. That is the reason it is a complete new item in our Ind AS balance sheet. If you look at Amul balance sheet, Amul cooperative society for milk and all, if you observe, then you will identify these cows or buffaloes also are part of assets. Correct? So then if you observe, if you check this Ind AS 16, here I think you guys are all aware of the word which is called as depreciation. Correct or not? Depreciation will be calculated on useful life. Based on useful life, we have to calculate this depreciation. Correct? Another thing is there which is nothing but residual value also. All these points we will discuss. These kind of calculations we will do for normal PPE. Normal tangible assets, we have to do these kind of calculations. These kind of treatment is given in Ind AS 16. But we cannot calculate depreciation for these items. Cows or buffaloes, we cannot estimate useful life, we cannot estimate residual value, like that it is not possible because the nature itself is very different. Nature of PPE is totally different. Nature of these items are totally different. So what they have did is they have designed one separate standard for these biological assets which are other than bearer plants. If it is a bearer plant, it is covered in which standard? Ind AS 16. Why it is covered also, we will cover in tomorrow's class. Okay. One last point we will add and then we will stop. Second, non-current assets held for sale. Non-current assets held for sale. Non-current assets in brackets, write PPE only. Non-current assets held for sale. Try to understand. In my balance sheet, I have purchased one machinery. That machinery I wanted to use in my business. That machinery I wanted to use in my business to produce some goods or either to give some services. Okay. For these purposes, I have purchased one asset and that asset will be there in PPE. That asset will be shown as that item will be shown as an asset in my balance sheet. If my intention is to use the asset in my business, I can show that as PPE. But if my intention is not to use, my intention is what? Sell the asset. If your intention is to sell that asset, then that asset should not be treated as PPE. Now your intention is not to use, your intention is not to derive the benefits, your intention is not to produce the goods, your intention is not to provide the services. But what is your intention right now? Your intention is to sell that asset. If your intention is sell, no longer you can continue in Ind AS 16. For you also another standard is there. If your intention is to use in business, it can be called as Ind AS 16 only, it can be called as property, plant and equipment. But now what, your intention is changed. Now your intention is not to use that asset. What is your intention? Your intention is to sell that asset. If your intention is to sell that asset, then for you another standard they have already created, and what they will say is that standard is Ind AS 105. Ind AS 105. These two items are not there in your syllabus, so don't worry. Okay, these two items are not there in your syllabus, don't worry. Ind AS 16, we have understood it applies to all PPE except first items are biological assets which should be other than bearer plants. If it is a bearer plants, they are always covered in Ind AS 16. Second point, what they will say, non-current assets held for sale. I will explain the definition of PPE in the next class. Then you will understand why it is not covered in Ind AS 16. Okay. If you want to say any item as PPE, your intention should be either to use that asset to produce the goods, or to provide services, or to use for administrative purposes. Example, I am having one office building. I won't produce goods directly from that building. I won't provide directly services from that building. That I am using only for my administrative purposes. Here also this can be classified as PPE. But the thing is, it should not be held for sale. If it is held for sale, we are having a separate standard for that. Okay, fine. So we will stop our today's discussion till here. Tomorrow we will continue the balance part of the standard. But today whatever we have discussed, please check those formats once again. Whatever balance sheet format we have covered, profit and loss, OCI, SOCIE. Please try to cover those. We will start afresh from tomorrow in days 16. Okay. Other than these, you have to remember applicability of Ind AS also. At least these points you have to remember. Applicability of Ind AS and even AS also. Just to check. No need to by heart, but just go through once or twice. You will easily remember applicability of Ind AS, and these parts you have to remember at least. Okay. Fine. So that's it for today. We'll continue in next class. In last class, we have completed basics portion and we have started with Ind AS 16. Okay, fine. If you remember this, totally 5 asset-based standards are there in our syllabus. So let's quickly check all those things and then we will continue. Ind AS 16 is the first standard which will talks about PPE, and Ind AS 38 will talks about intangibles. What does Ind AS 23 talks about? Borrowing cost. Ind AS 36 will cover impairment of assets. This is completely new standard. We have to cover in detail. And next we are having Ind AS 116. 116 talks about leases. Other 3 assets are also there. These 3 also asset-based standards only, but are not there in our syllabus. What is the first one? Ind AS 2. Next, Ind AS 40 we are having, which is investment properties. And Ind AS 41 we are having biological assets. Okay. Then we have started with Ind AS 16 we have started. What is the standard name? Property, plant and equipment. We already have similar standard in our accounting standards. What is that standard? AS 10 we are having. Okay, most of the standard is 95% copy paste only, subject to few exceptions. We will cover all those things. First they will say about objective. What is the objective which they will say? How to recognize the property, plant and equipment. Recognition is nothing but bringing the asset into our books of accounts. Okay, when we have to bring the asset into our books of accounts, that will explain in this part. Second, what they will say, at what value you have to measure the PPE, which means what? Once recognition is done, you have to find out what should be the value for which PPE should be recognized. In other words, if you purchase the asset, we will pass this journal entry, correct? PPE account debit to bank. What value you have to write here? Okay, if you check the invoice, it will contain many items. For example, taxable value, it will be there. After that, GST amounts also will be there. Do we have to take that GST also in this or not? Will be explained in this measurement part. Next, they will cover presentation, de-recognition, and last disclosures they will say. And then we have started scope of Ind AS 16. Here what they will say, Ind AS 16 will be applicable to all property, plant and equipment except, what is the first exception which is there? Biological assets. But if it is bearer plant, it is covered in Ind AS 16. Okay, if it is bearer plant, it is covered in Ind AS 16. But if it is other than bearer plant, all those things are covered in Ind AS 41. So now we will understand what exactly is the meaning of this biological asset and what is the meaning of bearer plant, we will understand. Okay. And second item what we have covered, if any non-current asset which is there, if it is held for sale, if you are using that asset in your business, then that is still continued to be as PPE and Ind AS 16 will be applicable. But now your intention is not to use that asset. What is your intention now? Your intention is to sell such asset. If your intention is to sell, then which standard is applicable? Ind AS 105 will be applicable. Okay. So next two exceptions are also there. Please copy these 2 points also. Mineral rights and mineral reserves. And next point, exploration and evaluation assets. Write these 2 points also, I will explain. Mineral rights and mineral reserves, exploration and evaluation assets. Okay. So check this. If you have purchased any plant and machinery to do mining of any minerals or those rights related, and if you are purchased any property, plant and equipment to do mineral reserves. If you look at seas or oceans, big machineries will be installed just to extract the petroleum and oils, correct? If you are purchasing that PPE, we are having another standard. Okay, but this another standard is not there in our syllabus. So that is also excluded from PPE because they have only for those industry only they have designed a separate standard. Okay, for that separate standard, since it is already there, it is also not covered in Ind AS 16. So these points are not that much important from exam perspective, but just you have to remember exploration and evaluation assets also similar to that minerals point only. So these two items are excluded from Ind AS 16. You just have to remember these two items from exam perspective. If any PPE is held for sale, sorry, I think, if any PPE is held for sale, any non-current asset is held for sale, Ind AS 105 will be applicable. Or if it is any biological asset other than bearer plant, for that also Ind AS 41 will be applicable. Okay. Now let us understand the meaning of biological asset. Okay, so keep the heading meaning of biological asset. Okay. If you observe, biological asset consists of two parts. We are having something which is called as living plants. Living plants are also treated as biological assets. And not only living plants, another set is nothing but animals are also treated as biological assets. Okay. If you remember, in old accounting standards, we don't have a separate line item for this biological assets. Correct. If you remember your old accounting standard, we only have which is called as non-current assets. In that, investments will be there, PPE will be there, intangibles will be there, other non-current assets. Only few items only will be there. Biological assets, it is not at all there in our old accounting standards. So this is the new line item which is there in Ind AS. What they are trying to say is, if you look at Amul Cooperative Limited, which is very big company, okay, the primary business of that business, the primary business of that entity is basically milk production and milk distribution, correct? So if you observe, they will not be having big machineries as their assets. Machineries will be there, but not as much. So for them, what are the assets which we have to understand? Cows and buffaloes are only their assets. So Ind AS is saying, okay, these animals also have to be treated as assets only. But you cannot treat them as normal property, plant and equipment. If you treat these items also under Ind AS 16, you have to provide something which is called as depreciation. You have to do something which is called as revaluation. All these items we have to do. Okay, which doesn't make any sense. So what these people have did is, okay, if it is animal or even if it is a living plant also, we will create one new asset which is called as biological asset. And if you remember, Ind AS 41 is there, which explains the treatment for this biological assets. How to do the accounting and all will be explained in Ind AS 41. But that is not there in our syllabus. We will try to understand, but still, these living plants are also classified as two parts. Okay. So first item is bearer plant. Because of this bearer plant discussion only, I am explaining this part. Second, we are having other than bearer plant. It can be either a bearer plant or it can be other than bearer plant. From the starting onwards, I am saying bearer plant is always covered under Ind AS 16 only. Bearer plant is always covered in Ind AS 16 only. But if it is other than bearer plant or if it is animals, these two are covered in Ind AS 41. Ind AS 41. Okay. Next, we have to understand the meaning of bearer plant. So keep the heading meaning of bearer plant. Meaning of bearer plant. See, first let us understand one example of this bearer plant, then we will exactly try to understand the definition which is given in the standard. Okay, see, assume there is one big mango tree which is there. This example already I have repeated in the basics, so now also I am repeating, try to understand. This mango tree is full of mangoes. Okay, once these mangoes are fully grown, will you take only these mangoes? I mean, will you pluck only these mangoes, or you will cut the entire tree? You will take only the mangoes, or will you cut the entire tree? What you will do? We will only take the mangoes. What happens in next season? In next season again new mangoes will be grown. Correct? If you just observe the definition of PP, PP also, if you observe, you have purchased one PP. Through that PP, you will produce different goods. For example, in the first year, assume you have purchased 10,000 units. Normally, this machine is having the capacity to produce 1 lakh units, assume. In first year, I have only produced how many units? 10,000 units. Do I sell only these units, or do I have to sell this property, plant and equipment also at the end of first year? Still it is having the capacity to produce how many units? 90,000 units still it can produce. So if after the end of first year, I will only sell these goods, I will not sell the entire property, plant and equipment. Correct? In the same manner, here also if you observe, once these mangoes are fully grown, what I will do is I only take these mangoes. I will not cut this entire mango plant, which is very similar to this property, plant and equipment. If you compare these two items, here also I am only taking the mangoes and I am selling this. Here also I am selling only the goods which are produced with the help of machinery. I am not selling this property, plant and equipment. Here I am not selling this mango tree. Therefore, what these standards are saying is, whatever property, plant and equipment which we have studied, that and whatever the bearer plant which we have discussed right now, both are going to be same. If the nature of these two items are same, we will give the same accounting treatment for these two items. So therefore what they have did, if it is a biological asset, but if it is a bearer plant, you don't go to Ind AS 41 because you are very similar to property, plant and equipment only. Therefore what they have said is, okay, we can follow Ind AS 16 is what they have said. Okay. Another example. Instead of mangoes, assume oranges are there. So same example if you observe, once these oranges are fully grown, what you will do? Will you take only those oranges, or will you sell that entire orange tree? We will sell only those, we will take only those oranges only, which means these orange trees are also an example of bearer plant. These orange trees are also an example of bearer plant. So this bearer plant also is covered in which standard? Ind AS 16 only it is covered. Let us take another example. If you check sugarcane, plantations, if the sugarcane is completely grown, we will entirely cut the sugarcane plant. Correct? We will not just take that and we will not keep that plant like that only. We will entirely take that plantation, and next time while we are doing, we will entirely plant from the very beginning itself, which means this sugarcane is also a biological asset. It is also a living plant only, but it is not a bearer plant. Sugarcane is also biological asset only because what? It is also a living plant, but it is not a bearer plant, which means it is other than bearer plant. If it is other than bearer plant, it is not a PPE. If it is not a PPE, it is not covered in Ind AS 16. Then where it is covered? It is covered in Ind AS 41. For animals, there is no discussion only. For animals, there is no discussion. No need for you to calculate whether it is a bearer animal or like that. This classification itself is not there. Okay, all animals are covered in Ind AS 41 only. But if it is a plant, you have to check whether it is a bearer plant or whether it is other than bearer plant. If it is bearer plant, it is again covered in Ind AS 16 only. But if it is other than bearer plant, then it is covered in Ind AS 41. Okay. Now we have understood the example of this bearer plant. Now let us try to understand the definition given by the standard. Okay. Let us write that part. Bearer plant is a living plant Bearer plant is a living plant. Bearer plant is a living plant that is used in the production of agricultural produce. That is used in the production of agricultural produce. Mangoes, oranges, all those are nothing but examples of agricultural produces only. Okay. Second, expected to produce for more than one accounting period. More than one accounting period, which means for more than 1 year it have to produce the goods. Mangoes, if you observe, current year also they will give mangoes, next year also they will give, next year also they will give. Okay, so it should expect it to produce for more than one accounting period. Third point, plant itself is not intended to be sold. Plant itself is not intended to be sold. Our objective is not to sell that plant. Okay, our objective is only to sell the product of the plant. Okay, but in brackets you can add one more point, that except in case of scrap. Except in case of scrap. Except in case of scrap. Scrap means what? The mango tree itself have become totally useless. Okay, it have already given the mangoes, assume for 20 to 25 years. Now the plant itself have become useless. Now what you have to do? You have no option. You have to sell that plant. This is okay. But normally you should not sell the plant. Except exceptional situations, you can sell in case of this scrap. But normally we should not sell. Okay. Just check this part. Bearer plant is nothing but it is a living plant that is used in the production of an agricultural produce. But what is the main item? It is expected to produce for more than one accounting period. Produce should be given for more than one accounting period. Last point they will say, plant itself is not intended to be sold. Our intention is not to sell the plant, but in exceptional situations, incidental, if you do this kind of scrap sales and all, it is fine. But normally your intention should not be to sell the plant. Okay, we can add examples also. Mango trees, apple orchards, etc. Okay. Write one note point. Annual crops like wheat, maize, etc. Wheat, maize, etc. These are not bearer plants. These are not bearer plants. Okay. Which means these items will not give you produce for more than one accounting year. Every year we have to grow separately. Every year we have to go fresh. Therefore, these items are not a bearer plants. If these are not a bearer plants, these are covered in Ind AS 41. Okay, that's it. You have to remember. This bearer plans discussion is completed. Okay, fine. Next, important definition which we have to understand, definition of PPE. Definition of PPE. Okay, we will discuss from very basics itself. What is the definition of PPE, how to do the accounting and all. Complete basics we will cover. Okay, now you have to tell me what is the definition of PPE. In your accounting standards also they have discussed this. Now you have to tell me what is the definition of PPE. What you have remembered you have to tell. Whether any examples or any definition, anything is fine. You have to tell me. Online students also have to tell what is the definition of PPE. Tell me. What's better? Any definition or examples at least. PPE examples. Plant and machinery. Inka goodwill వస్తుందా property plant and equipment లో goodwill. Will goodwill come under this PPE? Answer is no. Why goodwill will not come under this PPE? Because it is an intangible asset. So the first item what you have to remember is PPE covers all tangible items. Okay, don't write, first listen. PPE covers all tangible items. Sir, but if it is an intangible item, assume it is an intangible item, then it is covered in which standard, tell me? Intangible assets, what is the standard which is there? 33 year. 38 we are having intangibles. Okay, that's what I'm asking. Diary revise. Start అయినట్టు తెలీదు, తెలిసేలోపు 2 standards అయిపోతాయి. 20 minutes చాలు, ఎక్కువద్దు. Okay, so check this. If it is intangible item, it is covered in Ind AS 38. But some students are saying long-term assets used in operations. Very good. Some are saying for more than one accounting year we have to give the benefits. And another student is saying long-term tangible assets are called as PPE. Okay, fine. These all are definitions which are given by you. But standard also have given some definition. Okay, our definitions are also correct only, but they are not complete. Some other thing also should be added to that. But standard setters, what they will do? They will give one complete definition. Okay, so check this. What they will say is, if you are having any tangible item, what you have to do is you have to use that tangible item in the production of goods. If any tangible item you have purchased, what is your objective? Your objective is to use that tangible item especially in the production of goods. For example, any plant and machinery, big machineries, any furnitures, if you observe, their objective is what? To use that plant and machinery or furniture kind of a thing to produce their goods. If you have purchased any item to do the production of that goods, then okay, it satisfies the definition of PPE. Therefore, it will be treated as PPE as per Ind AS 16. They will say one more point also. It's okay. You have purchased one tangible item only, but your objective is not to use that for production of goods. You are not a manufacturing company. You are a service-based company. You are a service-based company. Therefore, what they will say is, if you have purchased any tangible item and you are using that tangible item for the purpose of rendering of services, it's okay. This is also an example of PPE. This also you can do. Either you can use for production of goods or either you can use for rendering of services. Third item what they will say is, your objective is to get any income. Okay, any income you can get. Either you will get either by production of goods or by rendering of services. Third, what they will say is giving rental to others. Giving rental to others. You are having one tangible item. What you are doing is you are getting some income by giving that item as rental to others. It's okay. They will say that this is also an example of PPE. Okay. Last what they will say is, See, assume one company is there. Company have purchased a head office building. One building it is purchased. It is mainly using that building only for its employee purpose, internal purposes. For example, employees related payroll and finance team, HR team will be there in that building. Now my question is, from that building I will not produce any goods. From that building itself I will not directly render the service, because sales team is not present in this building. Through sales team only I can generate the sales, correct? In this building, who are there? HR team will be there, and employees related payroll etc will be processing, and then finance team are there. Sales team are not present in this building. So through this building I am not directly generating, I am not directly rendering the services also. I have not given this building as rental to any others also. But still, this head office building, we all know that this will be treated as PPE only. The reason is they have added one more point also, and the last point is nothing but, okay, if you are having any PPE and if you are using that for administrative purposes, it is not giving you any goods. You are not using that for any services, you are not giving that as rental to others, but you are using that for administrative purposes. It's okay. Out of these 4 purposes, any purpose if it is satisfied, then it will be called as property, plant and equipment. If it is a property, plant and equipment, then only it is covered in Ind AS 16. Okay, just to cover once again, property, plant and equipment is nothing but tangible item. It should be used either for the production of goods, either for the rendering of services, or giving as rental to others, and last, administrative purposes. Okay, we will write this point nicely, but before that I am having few doubts. Here what I have written, tell me, rental to others, rental to others. Now I will ask one question, you have to tell me. I am having one building, I have given that building as rent to another person. I am having one building, I have given that building as rent to another person. Now you have to tell me, will this building become PPE or not? My question is, will this become PPE and is it covered in Ind AS 16 or not? You have to tell me. Online students also have to respond. Here they are saying tangible item. Yes, building is a tangible item. I am giving that building as rent to others. So my question is this building treated as a property, plant and equipment, and is it covered in this Ind AS 16 or not? You have to tell me. Related to business kaadu. Rental ichadu. This business related avvalsina avasaram ledu. Subsidiary kuda vadu ivvachu. Okay, think. This same example I have already discussed while discussing balance sheet format. Just to try to remember. If you remember balance sheet format, you will understand this. I am having one building which I have given on rent. You have to tell me, is it treated as a PPE and covered in Ind AS 16 or no? Think. If you are revising, then you can remember. Otherwise, no use. Think. In balance sheet only I have said. Just to revise, what are the tangible items which are there? PPE will be there. Next, capital work in progress is there. What is the third item? Investment property. In that investment property, what are the items which are covered? Land or building, if you are having, and your objective is what? To earn 2 incomes. First one, rental income. Second one, capital appreciation. So what they are saying is, very good. If you are having any building and if you have given that building as rent, for you, Ind AS 16 is not applicable. You are not treated as a PPE, sir. Then what I am called as? I am called as investment property. If it is an investment property, then which standard is applicable? Ind AS 40 is applicable. If it is an investment property, what is applicable? Ind AS 40 is applicable. But still, they have used this word in PPE definition only. Which means, sir, how we have to interpret this point is, if any tangible item is there, if you are using that for rental to others, if it is building, it is covered in Ind AS 40. But other than building, if you observe, other than building, if you are having, that is covered in Ind AS 16. That is covered in Ind AS 16. I have one vehicle which is there, one car which is there. So what I have decided is I have given that car as a rent to some other persons and they are using that for their official purposes or whatever purposes which they have want. I have given my car to one company. What that company will do is it will transport its employees from office to home and home to office. Like that they will do. And the company will pay me rent. The company will pay me rent. Here, car is a tangible item. I am not using that car for the production of goods, not for rendering of services. What I have did is I have given that car as a rent to others. Car is not a building also. Therefore, Ind AS 40 is not applicable. Then what is applicable? Ind AS 16 will be applicable. Okay. To conclude, tangible items, all tangible items which are used in the production of goods, it will become your PPE. If you are using that in the rendering of services, it will become your PPE. Okay. For example, our objective is to teach, correct? So what we have done is we have purchased one tablet, we have purchased one laptop, this projector is there, this camera is there. We are not using that for production of goods, correct? For what we are doing for rendering of services. So all these items will be called as, property, plant and equipment, tangible items used for rendering of services. Or you can give that property, plant and equipment as rental to others. But if it is land or building, it is not covered in Ind AS 16. If it is land or building, then it is covered in which standard? It is covered in Ind AS 40. But all other assets, if you are giving that for rent, it is covered in Ind AS 16. Last but not the least, they will also cover administrative purposes also. If you have given any building as administrative purposes, that is also covered in Ind AS 16 only. It is also an example of PPE. Okay, fine. So let us write all these points. Okay, so start copying. Tangible assets, PPE is nothing but tangible assets. Tangible assets used in first item. What is the first item which they will say? Tangible items you have to use for which purposes? First one, production of goods. Production of goods. Production of goods. Second, very good, rendering of services. Rendering of services. I'll come to that part, Vignesh, a little later. I'll come to that part. Don't worry. Okay. Fine. Third point is what they will sell. Rendering of services is also done. What is the third point? Rental to others. Rental to others. Here only let us add one point, except land and building. Except land and building. And last point, administrative purposes. Okay. Any four purposes you have to use, it is or. Any four purposes. The main point is plus. All these items are fine, but the main thing is expected to be expected to be used for more than one accounting period. Expected to be used for more than one accounting period. Okay. C. Expected to be used for more than one accounting period. Okay. What you have to do is just to check the definition of this bearer plant. Just to check the definition, just check the definition of this biological asset, bearer plant, and also the definition of PPE for 1 minute. Then we will get continued. Okay. Then we will get started. Mostly as per AS 10 and Ind AS 16, the definition of PP is same. That's what I have said. Whatever AS you have studied, then they have changed it 95% of the content, same to same content. They have already copy pasted in your AS 10. Okay, so most of the content you will find same only. Okay, yes, this also we have understood. If it is a tangible item, then only it will become PPE. If it is an intangible item, that is covered in Ind AS 38. Okay, fine, that is also fine. So Hrudayeshwar, even if there is any capital appreciation for car, since car is not covered under investment property, even though if there is any capital appreciation, still it should be covered in Ind AS 16 only. Okay, capital appreciation is not the criteria. It should be specially land and building for rental purposes, then only it is covered in Ind AS 40. Otherwise, Ind AS 16 only will be applicable. Okay, fine. Now, please go through the definition of PPE, biological asset, and bearer plant. Okay, so next part and last part, we will stop with this point. It is nothing but only one liner only. Recognition criteria. Recognition criteria. Okay, see, if it is a PPE, there is no doubt it is covered in Ind AS 16. But the question is, sir, when exactly do we have to recognize the PPE? We will not recognize all PPE. even though if it is a PPE, even though if it is covered in Ind AS 16, you have to wait till they will specify some conditions in this recognition criteria. You have to wait till these conditions are satisfied. If these conditions are satisfied, then there is no problem. You can recognize that asset. Okay, sir, what are the conditions? These conditions you are already know that. Let us copy paste that point here. PPE will be recognized. PPE will be recognized only when the first point it is probable that future economic benefits I think you know this term, future economic benefits will flow to the entity and future economic benefits will flow to the entity, and second point they will say cost should be measured reliably. Cost should be measured reliably. Okay, these points we have to check. This is very common points. If you remember in your accounting standard, same to same wordings will be there. Okay, two conditions you have to check. If these two conditions are satisfied, then only we can recognize property, plant and equipment. Sir, what are those two conditions? First one is what? It is probable that future economic benefits have to flow to the entity. Sir, what is the meaning of future economic benefits? Future economic benefits are nothing but cash flows. If you sell the goods, you will get some cash flow, correct? If you render the services, you will get some cash flows. Even if you have given the property as rental to others, you will still get cash flow. Administrative purposes, you will not get directly, but indirectly you will get some cash flows even for that administrative purposes also. Okay, so future economic benefits will flow to the entity, and second part is nothing but cost should be measured reliably. Okay, second part is nothing but cost should be measured reliably. If these two conditions are satisfied, then only we will recognize the property, plant and equipment. Okay, fine. We will stop for now. We will continue the next part in tomorrow's class. Okay, fine. Thank you.
Okay, so check this. In last class, we have started with Ind AS 16. Okay, what is the name of the standard? Property, plant and equipment. In that, we have understood first the scope of the standard. Scope is nothing but Ind AS 16 is applicable to all property, plant and equipment except what is the first one? Biological assets other than bearer plants. We have already understood what is the meaning of biological assets. What is the meaning of bearer plant also we have understood. Okay. So first let us come back to there. So biological assets is nothing but it is a living plant. Either living plant is also treated as a biological asset, along with that animals are also treated as biological assets. Living plants are further classified into first type is bearer plants, second type is other than bearer plant. If it is bearer plant, it is covered in Ind AS 16. But what if it is other than bearer plant? It is covered in separate standard which is only designed for biological assets. Okay, other than bearer plants, all plants are covered in Ind AS 41 only. Next what they will say, but if it is animals, there is no chance that they will be covered in Ind AS 16. So all animals will be covered in one standard which is Ind AS 41. Next we have understood the definition what it is given in Ind AS 16. What is the meaning of bearer plant also they have explained. Bearer plant is nothing but first it should be a living plant. Next it should be used in the production of agricultural produce. Second, what we have understood, definitely it should be expected to produce for more than one accounting period, which means what it have the capability to generate for more than 1 year. Accounting period will be generally considered as 1 year. Okay, for more than 1 year, if it can produce outputs, then only it can be called as property, plant and equipment. So sorry, then only it is called as bearer plant. Last point, what they will say, plant itself is not intended to be sold. We are not selling directly the plant. We are only selling the output or produce which is derived from that plant. But in exceptional situations, for example, assume if the plant have become useless, then the plant will not produce any products, correct? Therefore, then it can be directly sold as scrap. This is exception. Otherwise, you should not sell that as normal. Normal sale you cannot do. So next, very important, the definition of property, plant and equipment also we have understood. Okay. PPE covers all tangible assets. If it is intangible, we are having a separate standard. Correct? What is the standard number which is for intangible assets? Intangible assets, it is covered in Ind AS 38. Okay. Only tangible assets will be called as PPE. That also, it have to be further used in production of goods. Either for production of goods, you have to use that property, plant and equipment, or it can be used for rendering of services. Third point, what they will say, rental to others. You can give that PPE as rental to any others, but except land and building. Which means what are covered here? For example, you are having one machinery, you are having one vehicle. These items, if you given on rent, that will be still called as PPE. But if you are having any land or building, and you have decided to give this land and building on rent, then that is not called as PPE. That is called as investment property. Okay, they are covered in another standard which is Ind AS 40, not there in our syllabus. But other than land and building, if you have given them as rental to others, then that is covered in Ind AS 16. Last point, what they will say, administrative purposes. Administrative purposes means, for example, any office buildings, head office buildings, if you observe, they will not directly produce any goods. From that head office itself, directly you will not render any services also. Head office building, you will not generally give as rental to others also. Even if you are using any item, any tangible asset for the purpose of administration, still it is also categorized under property, plant and equipment only. Okay. And then last point we have covered is nothing but recognition criteria. We have to wait till this recognition criteria is satisfied. All PPE will not be recognized in our books. Only those PPE which will satisfy these two conditions, then only we will recognize PPE in our books of accounts. What is the first condition which they will say? It is probable that future economic benefits will flow to the entity. Future economic benefits means you should get some cash flows. Cash flows, there are number of ways you can get. If you sell the goods, you will get cash flows. If you provide the services, you will again get the cash flows. If you give that as rent, again you will get cash flows. Which means indirectly it is saying future economic benefit should be. Definitely you have to check. Then only we can recognize that as PPE. If any plant have become useless, then we will not keep that in our books of accounts, because future economic benefits will not be generated. Correct? At the time of initial recognition also we have to check this part, whether future economic benefits are coming or not. Afterwards also we have to check. Okay. That point we will discuss later in derecognition aspect. That point is also there in the standard. If you remember the objective, recognition is there, measurement, presentation, and fourth point, derecognition is also there. Derecognition means you have to remove the asset from our books. There also they will say few conditions. So if those conditions are satisfied, we have to remove the asset from the books. Okay. So next, what is the second condition which we have to check? It is nothing but cost should be measured reliably. These both conditions have to be satisfied. Only after satisfying these two conditions, we can recognize property, plant, and equipment. Okay. Fine. Now write the next point. It is nothing but treatment of spare parts, accessories, treatment of spare parts and accessories and standby equipments. Spare parts, accessories, and standby equipments. Okay. See, this definition of spare parts is nothing but we are having one extra part also. For example, if you check this camera, if suddenly any issues have happened, we will maintain some spare camera also, so that if any issue comes, we will obviously replace that part. Okay. So that our things should not stop. Even if you observe big industries and big companies also, big manufacturing industries, if you observe, they will do huge amounts of production. Correct? Some production, for example, if you insert this raw material, in order to convert this into finished good, some processes will take more than 1 day or 2 days also. So what will happen is, suddenly if there is any problem in any one machine or any one component, if there is any problem, they will not wait till it is resolved. They will obviously maintain something which is called as spare also. Spare items also they will maintain. If any problem suddenly comes, what they will do? Immediately they will change that part, because it should not affect their production. Correct? So if that spare part is there, do we have to classify this spare part also as Ind AS 16? Or do we have to treat this item as inventory? Will be explained in this part. So another example, if you check, this machinery part is also done. Another example is, if you check any hospitals, okay, assume an emergency operation is taking place. Suddenly to any one machine there is some problem. Correct? We cannot stop the operation. If it happens, obviously the patient will be dead. So what they will happen? What they will do? They will keep any spare parts, or even if you observe suddenly during this emergency operation, assume there is any power cut which has happened. Okay, then it is very serious issue. Correct? So what these hospitals will do is they will install generators. So power interruption should not be there. So for that purpose, what they will do is they will insert something which is called as standby equipments also. Okay, so this standard also provides guidance. See, this PPE always will be recognized if these conditions are satisfied. Additionally, they will provide some guidance also if any spare part is maintained, or standby equipments, or even this accessories also. Accessories also you can take number of examples. For example, if you check this remote, batteries are there. These batteries are nothing but accessories. Correct? If you check any hotel industry or something, if you check out at any new places, what they will do is they will provide toiletry kits, They will provide towels, etc. Those are nothing but accessories. Okay, so this standard provides the guidance for all these items. Spare parts also it will provide, accessories also it will provide, and standby equipments also it will provide. Okay, so what we have to check here is, even for this spare parts, etc. also we have to check if the definition of PPE, if the definition of PPE and recognition criteria are met, they will be classified as PPE. Okay, you can write along with me. They will be classified as PPE. They will be classified as PPE. Otherwise, we have to classify them as inventory. Okay. Inventory means Ind AS 2 will be applicable. We already know that for Ind AS 2, if for inventories, we just have to check only two items. We have to check cost or NRV, whichever is lower, we have to value our inventories. Okay. This standard is not there in our syllabus. Ind AS 2 is not there in our syllabus, but I have already said that in December 2025, they have asked one MCQ with respect to that. But that is also not impossible. Only on this aspect only they have checked what is that cost or NRV, whichever is lower. They have given cost of inventory also, they have given NRV also. You just have to find out whichever is lower and you have to find the closing value of stock. Okay, MCQs we will discuss at later part. But here this point is says whether it is a spare part or accessory or standby equipments, you have to check whether that spare part satisfies the definition of PPE and recognition criteria. If you check the extra camera which we are having, extra recording camera, if you check the definition of PPE, it is also a tangible asset. We are using that spare camera for the purpose of rendering of services. Obviously, that spare camera will be expected to be used for more than one accounting period, which means it have satisfied the definition of PPE. Correct. Even if you check the recognition criteria also, from that spare camera, it is probable that future economic benefits will flow to the entity, and obviously I can measure the cost of that spare camera also, which means what? PPE definition is also satisfied, recognition criteria is also satisfied. Therefore, how I have to treat that spare camera? That spare camera also will be treated as per PPE. For example, if you check batteries of this remote, batteries, they are also tangible assets. They are also, I will use in the production of my rendering of services, but it is not expected to be used for more than one accounting period. Correct. Of course, in less than one accounting period only, these batteries will be completed, which means it fails to satisfy the definition of PPE. If it fails to satisfy the definition of PPE, that will not be called as property, plant and equipment. What it will be called as? It will be called as inventory. If it is called as inventory, what standard is applicable? Ind AS 2 will be applicable. Okay. Let us write few examples also. Generators. Standby equipments are nothing but generators. Spare cameras. These items will be called as PPE. Next, any batteries. extra remotes, etc. will not be satisfying the definition of PPE, therefore they will be called as inventory. Okay. Just write one last note point here. First let us write, then I will explain. Okay. Individually, insignificant items in brackets, you can write screws, tools, molds, etc. Screws, tools, molds, etc. may be aggregated for recognition purposes. May be aggregated for recognition purposes. Okay, simple point. Here they will say individually insignificant items. For example, assume in manufacturing industries there is one big toolkit which is there. In that toolkit they are having some 10,000 screws. Okay, some 1 lakh nuts and bolts are there. And if you observe, tools of cutting, pliers, etc. are there. Others they are having something which is called as molds, etc. Individually, if you check, the value of one screw is not that much material, correct? So there is no need for you to check for each screw whether PPA definition is satisfied or not. It is not necessary. For these items which are individually insignificant, what you can do is you can combine all these items. You can combine all these items and you can check whether it is satisfying the recognition criteria. Okay, recognition criteria means what? Again, those 2 points you have to remember. These 2 points will be used in number of places, so you have to remember these 2 points. What is the first one? It should be probable that future economic benefits. I will use this FEB. Shortly I will use as FEB. So it is probable that FEB will flow to the entity. And second, what we have to do, cost should be measured reliably. Because I think you already know this term which is called as materiality, correct? We have to check the materiality also. In a balance sheet of a company which is having thousands of crores as turnover, we cannot write this screws, nuts and all separately in that balance sheet, correct? It will not make any sense. Because of materiality also, what we can do is, if any item which is individually insignificant, what the standard is suggesting is, it may be aggregated for your recognition purposes. It is completely judgment of the entity, but obviously most of the companies will do that, because there is another concept which is materiality also, which you have already understood in audit, correct? At that time also, what auditors will suggest is, we have to aggregate all those items for the recognition purposes. Then also again the same thing, you have to check the recognition criteria. If that is satisfied, fine. Otherwise, we have to treat that as inventory only. Okay, fine. So next point. Next point, assets. Assets acquired for environmental or safety purposes. Assets acquired for environmental or safety purposes. Okay. So check this point. If there is any asset, which is acquired for environmental or safety purposes, what the standard is saying is, let us try to understand an example. Assume one big factory is there. Okay. So what these factories will generally do is, they will obviously release some harmful chemicals directly into the atmosphere or directly into the water. Correct. Because of which, if you observe, many industrial laws and many environmental laws, what they will suggest is, you have to definitely, it is the responsibility of the factory only to properly dispose these waste chemicals. If they are directly released into atmosphere, obviously it will pollute and it will create too many situations. So what many laws will suggest is, directly like this, we cannot release those harmful chemicals into the environment. So what those laws will suggest is, it is the responsibility of the factory only to properly dispose the waste. So what they will suggest is, I think you have heard this term which is called as chimneys. Correct. So what those laws will suggest is, you have to install something which is called as chimneys near your factory. Through those factories only, after properly disposing that waste, process will be done, that waste will be converted into lesser harmful waste, and through these chimneys it will be directly released into the atmosphere. If you compare earlier, if this processing is not done and these chimneys are not installed, obviously the effect of those harmful gases will be very more. Correct. But because of these laws and all, factories have installed something which is called as this chimneys also, and because of which now the harm which is produced by these chemicals, etc., will be greatly reduced. This is imposed by the laws only. Sir, what if the factories don't install these chimneys? There are many penalties and all which these companies have to pay. Okay, but that is secondary thing. Now my question is, assume I am having one property, plant and equipment. That property, one machinery is there. This machinery is the primary machinery of my company. So this machinery is having the capability of producing 10 lakh units per month. Now what I have did is, I have installed one chimney. My question is, if you install this chimney, because we have to check the, now this point will talks about whether we have to treat these chimneys as property, plant and equipment or not. This is the question. Any asset you have to check. What we have to check? We have to check the definition of PPE, we have to check. Next, if it satisfies the definition of PPE, then what we have to check? We have to check for recognition criteria. Now you have to tell me whether this chimneys what we have installed, is it satisfies the definition of PPE, plus you have to tell me, is it satisfies the recognition criteria also. If it satisfies both, then how we have to treat these chimneys? These chimneys also will become property, plant and equipment. Otherwise, we cannot categorize that as property, plant and equipment. Otherwise, what it will be categorized? It will be categorized as inventory. Okay. So this chimneys, we have to check whether the definition of PPE is satisfied or whether the recognition criteria is satisfied or not. Both we have to check. Okay. Online students also have to tell me whether this chimneys satisfies the definition of PPE or recognition criteria. Think the definition of PPE. PPE definition is there in front of you, and in the notes also you have written, and you have to check this recognition criteria also whether it is satisfied or not. Okay. Think for 1 minute and you have to tell me. Online students also have to respond whether this chimney satisfies the definition of PPE as well as recognition criteria. Please check that part. Definition of PPE is right in front of you. You have also written in your notes also, plus recognition criteria is also there. You just have to check and think whether this chimneys will satisfy the definition of PPE as well as recognition criteria. No. Why? Very good. First of all, is it a tangible item or not? Yes, the chimney is also a tangible item. But is that chimney directly used in the production of goods? No. Which means even the chimney is not there, still we can produce how many goods? 10 lakh. 10 lakh units of goods still you can produce. But after installation of that chimney also, still you can produce how many goods? 10 lakh units only. Which means because of that chimney, directly you will not generate production of goods. Correct? Therefore, the first definition itself is failed to satisfy. The first definition itself is failed to satisfy. But what the standard is saying is, they have used one term which is called as enabler assets. So the definition of this enabler assets is, there are some assets which will not directly help in production of goods. Directly we will not, directly the chimney or any asset will not be directly engaged in production of goods. But what they will do is, they will indirectly help main plant and machinery to produce more goods. Sir, how this will happen? Try to understand. Assume there is one company. Assume there are two factories which are there basically. Okay. First factory, what it is doing is, both these factories are producing same goods. Okay. They are using same raw materials. Everything is same. Same technology they are using. Both are producing same level of output only. But one factory is very good. So what it have done is, this company have installed chimneys, and it is doing properly. It is disposing the waste and all, and everything is fine. It is also producing the same level of output. Another company is there. That company will not install any chimneys. No chimneys, nothing. They will not take care of the waste also properly. Nothing will you do. This also provides same output. If you are a customer, will you produce goods from this factory, or this factory will you produce? Obviously, any customer will think, okay, this factory or this company is this company is caring that much for public and that much for environment. So obviously, they will give more preference to their product only. But this factory is also able to produce 10 lakh units per month. And even if you observe, this factory is also able to produce 10 lakh units per month. But still, high chances are there that customers will select this factory only. Which means, whatever the chimney which is there, or this type of assets are called as enabler assets. So whatever the enabler assets which are there, they will not directly increase your sales. But because of that, customers or public will think of this opinion. Public will be of the opinion, okay, the factory is taking care of the public. The factories are taking care of the environment so much. So we can also contribute by purchasing these items. Which means, these enabler assets also will indirectly help the PPE, it will help the PPE to produce future economic benefits. Okay, so directly it is not a PPE, but this is called as enabler asset. What the standard is doing is, this standard have provided the accounting treatment for this enabler assets also. Okay, so these chimneys and all will be called as assets acquired for environmental or safety purposes. Okay, let us write that point. So check this, assets acquired for environmental or safety purposes. These are also called as enabler assets. Enabler assets. These assets may not directly help in production of goods, production of goods or rendering of services, etc., etc. But these are necessary, indirectly to derive the benefits from other assets. From other assets. You can write that example also. Chimneys installed in factory premises. Chimneys installed in factory premises. Okay. See all these indices, if you observe, they are not completely theoretical, they are not completely practical also. Without this background, without whatever we have discussed, without knowing what is the definition of PPE, what is the recognition criteria, and what is the treatment of spare parts, etc., if you directly start solving the problems we can solve, but some small doubts will be still there in your mind. So the correct approach of learning these standards are, we should not discuss complete theory at once and later we solve problems, then also it is totally useless. Or directly if we start solving problems and theory if you check later, that also is not the correct approach. So what we'll be doing is, starting we will be building the base which is necessary to solve the problems, and once that base is proper, then we can immediately start with problems. Okay, so all indices, not only this, if you check impairment also, all indices, intangibles, leases, everything if you check, theory is also there, problems are also there. Okay, we can't do anything because that is how the nature of this indices will be. So in this index 16, first we have understood the definition of property, plant and equipment, and then we have checked whether this recognition criteria should be satisfied or not. Okay, while solving all the problems later also, these points should be there in your mind so that you will get proper comfort. Okay, so we have to revise daily also all these points, then only it will be useful. Okay, so if you check the definition of PPE once again, now we will start with practical aspect. At what value you have to recognize. Okay, that practical aspect will be discussed now, but before that also, I just have to make one thing clear, that you have to definitely revise all these cumulative things. Okay, because whatever we have discussed today, that point will be useful maybe in tomorrow or day after tomorrow. So if you don't do constant revisions unnecessarily, we will be wasting too much of time. Okay, so whatever till now you have to remember is the definition you have to remember, and also the recognition criteria, and next spare parts, etc., treatment also you have to remember. Okay, so we will move into next part, which is nothing but the most important numerical aspect, initial recognition of PPE. Initial recognition of property, plant and equipment. Okay, see. First don't write, first listen, then I will give time to copy. Initial recognition of PPE means there are multiple ways to acquire this property, plant and equipment. Correct.
What is the normal way? Normal way, if you observe, if you want to acquire any property, plant and equipment, the most common way is what? It is nothing but purchase. So if you want any property, plant and equipment, what you can directly do, you can directly go to the shops or you can directly go to the manufacturing locations. You can directly purchase one property, plant and equipment from that person. That is the first option, usual option. Mostly people will do this only. So we have to understand at what value you have to recognize the asset if it is purchased asset. Second option is what we are having, and another option also, we don't want to purchase the asset. For example, if you check any buildings and all, some people will directly purchase the buildings. What other peoples will do, they only will construct, correct? They only will construct on their own. So second type of assets what we have to check is self-constructed or self-generated assets. So we have to understand, assume I am constructing one building on my own. So if you are constructing building on your own, at what value you have to recognize that building? Depending upon whether you have purchased or whether you have self-constructed or self-generated, the value at which you have to record will change. Okay, because it is very basic. If it is purchased asset, obviously there will be something which is called as purchase price. Very basic. Even if I don't explain the standard, this is very basic point which everyone knows. If you purchased any asset, what is the value for which you record in your books of accounts? Obviously the purchase price. But for self-constructed or self-generated assets, there would not be any purchase price. Correct? Self-constructed, you have not purchased directly. Therefore, there will not be any purchase price. So, at what value do I have to recognize this self-constructed or self-generated assets? That we have to understand. Third type of acquisition is basically, which is nothing but government grant. Some assets, the government is only providing you free of cost. The government is directly giving you as a grant. So, if any asset have acquired by way of government grant, at what value do I have to record? That point will be explained in this third section. Okay, simple. Multiple ways are there. Here I am only discussing what are the ways through which we can acquire the PPE. Everything we will discuss in detail. But just we are having now an overall view. Okay, first what is the common way? Common way is what? You can directly purchase the asset. What is the second way? Second way is nothing but self-constructed or self-generated. If you self-construct or self-generated, at what value you have to record, that will be explained in this part. Third part is what? If you have acquired any asset by way of government grant, what is the value which we have to record? Another type is also there, which is nothing but exchange. Standard is a very comprehensive. It should cover all possibilities. Some possibilities we can easily identify, and some possibilities we have to understand only from the standard. Okay, exchange is also there. Exchange means what? I am having one building in Hyderabad. Another person is there, he is having one building in Mumbai. Now, I will not go to Mumbai and again I will purchase. It is not necessary, because again to construct another new building in Mumbai is very difficult task. So what I will do is, that person want a building in Hyderabad and I want a building in Mumbai. So both will exchange our property, plant and equipment. In this case also, if you observe, there is no purchase price. Correct? Because depending on the mode of acquisition, the value at which you have to record the assets will be different. Another type of acquisition is also there, which is nothing but, last one, deferred credit. Deferred credit is nothing but, I think you already know this, purchase by way of installments, EMIs. This option is also there. Correct? No need for you to pay the entire price right now only. They will provide you the option. You can select this EMI option also, which means what? You can pay in, for example, 24 to 36 months we have to pay. Any option will be there. So all these are nothing but different modes of acquisitions. We have to understand all these 5 modes of acquisitions. At which value you have to record the assets and all, we have to understand very in depth. What is the first mode of acquisition which we have to learn? Purchase. If you purchased any asset, what is the value which we have to write? Purchase price we can say.
That is very simple. But if you check invoice, I have been already repeating this example number of times. In that invoice, taxable value also will be there. GST portion will also be there. Sometimes they will give discount also. In discount, I think you already know this, there are two types of discounts, which are trade discount and cash discounts also will be there. Correct? Next, installation charges. Installation, next, insurance, any if there is incurred, what we have to do with all these things and all will be explained in this part. What is the second mode of acquisition? Second mode of acquisition is nothing but self-constructed or self-generated. What is the third mode? Government grant. You are not purchasing, you are not self-constructing. Government itself is directly giving you grant. What is the fourth mode? Exchange. You are not purchasing, you are not self-generating. Government is also not giving. You are exchanging with other party. And last but not the least, deferred credit. Okay, this is very interesting, deferred credit. You will know many things which are not there in your old accounting standards. Okay, so this deferred credit we will learn in detail. But it's okay. You have to remember that there are totally 5 modes of acquisition. Okay, no need to write now. We will discuss one by one so that we will copy then. But you have to remember in your mind. What are the 5 modes of acquisition? Tell me. Purchase, self-constructed or self-generated, government grants, exchanges, and last, deferred credit scheme. Okay. First one, let us start in case of purchased assets. So keep the heading. In case of purchased assets. In case of purchased assets. In case of purchased assets, recorded at purchase price, including import duties, plus non-refundable taxes, and duties, minus trade discounts or rebates. Minus trade discounts or rebates. Okay, check the first one. In case of purchased assets, we have to record those purchased assets. At what value you have to recognize? Purchase price. But if any import duties are there, that will be included. Import duties will be included, plus what we have to add further? Non-refundable taxes and duties. If there is any tax, assume it is GST or anything, if the tax is non-refundable, then only we have to add. Non-refundable taxes and duties, they will say, minus what we have to deduct? Trade discounts and rebates. What we have to deduct? Trade discounts and rebates. Okay. Let us understand with the help of an example, because this is very, very important. Most of the problems we will repeat this. So try to understand the logic. Assume you have purchased 1 lakh units. 1 lakh units at 100 rupees each. Now, what is the total purchase price? Tell me. 1 lakh rupees into 100. Open calculators. From today onwards, we will start practical aspects also. Okay, calculators. 1 lakh into 100. How much? 1 crore or 100 lakh. Now, what they are saying is, assume it is not imported one.
If it is not imported, this import duties will not be there. Correct? Import duties, generally if we import from any other country, then only this import duties will be there. So this machinery, or assume whatever the goods which I have purchased, assume that I have purchased in India only. Therefore, import duties are not there. But since it is supply of good, what will come into picture? GST will come into picture. Forget about CGST, SGST, IGST. Assume there is only one GST. Okay, only for accounting purpose, I will write GST at the rate 18%. So, which means how much? 18 lakh will be the GST portion. Can you tell me the total amount? Total amount is 1 crore 18 lakh. Correct. My question is, how much the customer have to pay to the supplier? Will he pay only this 1 crore or will he pay 1 crore 18 lakhs to the supplier? How much he will pay? He will pay total 1 crore 18 lakhs. That is the concept of indirect tax. Correct. Indirect taxes are collected and paid. Correct. These are collected from the customer and paid to the government. So now, but here what they have used the term, they have not directly given GST. They are not saying add all GSTs. What they are saying only non-refundable taxes and duties. This is the term which they have been given in the standard. Let us try to understand what exactly this is meaning. I think you already know that. In GST, one concept is there. Assume he is the supplier. This person, assume the sales of this persons are 5 crore rupees. Okay, 5 crore into 18%. Just calculate and tell me the GST amount. 5 crore into 18%. Assume there is no CGST, SGST, only one GST, 90 lakhs. So 5 crore into 80%, 90 lakhs. Now, this 90 lakhs, whatever the tax which this person have to pay on the goods, this is also called as output tax liability. So the output tax liability of the person is how much? 90 lakhs. This supplier also may have purchased few goods. Correct. Assume these goods only he have purchased. How many goods he have purchased? 1 lakh units at each, 100 each. At the time of purchase also he have paid some GST. How much amount he have paid? 18 lakhs he have paid. So this 18 lakh will be called as the tax which he have paid on inputs. Correct. See, these goods are nothing but inputs of this person. So this person will purchase and he will make further processing and he will directly sell this output. He have purchased for 1 crore, some productions here and there he will do, and finally he is selling those 1 lakh units at 500 rupees each, which means 5 crore is the selling price, total sales value. Now what have happened? Whatever the 18 lakh which he have purchased, this is nothing but tax on inputs. So it is called as input tax. Now what GST will say is, this person will be eligible to take the credit on tax which he is paid on inputs. Whatever the tax which he is paid on inputs, this person is eligible to take the credit of such taxes. Taking the credit is nothing but, first of all, this will be called as input tax credit. How much amount he have paid? 18 lakh rupees he have paid. Now what the GST department will say is, now because of the sales which you are making, you have to pay 90 lakh rupees to the government, is what the GST department is saying. But this person will say, okay, I will agree that I have to pay 90 lakhs, but already at the time of purchase, I have paid how much? 18 lakhs. Already at the time of purchase, how much he have paid? 18 lakhs he have paid. So now what this person will say is, I will not pay this entire 90 lakhs. I will adjust this 18 lakh which I have paid earlier. Which means if I deduct 18 lakhs here, what is the balance amount which he have to pay? 72 lakhs only he have to pay to the government. Which means indirectly this 18 lakhs refund is available to this person. Correct or not? If this refund is not available, how much amount he have to pay? 90 lakhs he have to pay. But on this GST, he is eligible to take the credit. He is eligible to take the credit, which means for this 18 lakhs, that person is getting the refund. For this 18 lakhs, that person is getting the refund. If you check this part carefully, What item we have to add? Whether we have to add refundable taxes or non-refundable taxes. Non-refundable taxes we have to add, which means any tax if I got credit, any tax if I got credit, will I add this 18 lakhs to the cost? Answer is no, because this you have already got the credit, correct? So this 18 lakhs will not be added in the cost of acquisition or cost. 18 lakhs will not be added in the cost. This is the first point we have to remember. Okay, fine. Because another logic is also there. Whatever the supplier is there, this person is having two options he is having. First option is take ITC. If you take ITC, you will get one benefit. Correct or not? If you take ITC, you will adjust this ITC and adjust against output tax liability. This is the first alternative which is there with the supplier. Second option what he is having, if you don't want ITC, don't take ITC. If you don't take ITC, you will not pay 72 lakhs. How much you will pay? You will pay 90 lakhs. If you don't take ITC, then the option which they will give is add to the cost. If you don't take ITC, then what you will do? You will add to the cost. If I add to cost, I will get something which is called as depreciation. Assume this 18 lakh is not added. If this 18 lakh is not added, if this 18 lakh is not taken as input tax credit, what will be the cost of my asset? Tell me. My cost will be 1 crore 18 lakhs. 1 crore 18 lakhs includes GST of 18 lakhs also. Now, while charging depreciation, I will not charge GST only on this amount. I will also charge GST on this GST portion. Sorry, I will also charge depreciation on this GST portion also. This is also a benefit, because as per income tax, depreciation is a tax deductible item. Correct or not? Depreciation is a tax deductible item. If depreciation is more, obviously our profit will be less, which means that is also a benefit. Correct? So as a supplier, you are having two options. What is the first option? First option is if you want, take ITC. If you take ITC, don't again add that in your cost. If you take ITC also, and if you are adding in cost also, that is dual benefit, not allowed. Only one benefit you have to take. Either take ITC and adjust against output tax liability. If you are doing this, don't add in the cost. If you don't add in the cost, what will be your cost? Tell me. Your cost will be only 1 crore only. This 18 lakhs will not be added because you have already taken ITC. Sir, what is the second option? Second option, don't take ITC. If you don't take ITC, which means you are not getting one benefit. Correct? You are not getting this benefit. Therefore, you can add that to the cost. If you add to the cost, you will get one benefit. What is that benefit? That benefit is depreciation. Either depreciation or input tax credit. Not both. Okay? Not both. Either this or this. If you remember, in your GST, there is another concept which is called as blocked credits. Correct? Have you remembered this in GST? Inter, there is one concept which is called as blocked credits. Any one example for this blocked credits? Anyone? That is not blocked. Blocked. If you remember, motor car, if you purchased, credit on that car will not be available for all persons. Some they will say passenger capacity more than 13 and all. Those are another points. But normally if you purchase car, you cannot take credit on that item, which means it is a blocked credit. So you have to tell me in this case what will be my cost of acquisition. I have purchased one car for 50 lakhs. GST portion is also there. Assume GST is 28%. Can you tell me GST amount? 50 lakh into 28%. 14, huh? So 14, so what will be the total cost? 64 lakh. Now you have to tell me at which value I will record this item in my books of accounts. Will I record at 50 lakhs or will I record at 64 lakhs? 50 or 64? Simple, you have to check whether you are getting the credit or not.
Here, this is a blocked item. If this is a blocked credit, you will not get any credit, which means this ITC I cannot use. So I don't have first option. So I can take second option. What is the second option? Add this item. Add this 14 lakhs in your cost. If you add, then what will be your total cost? Your cost will be 64 lakhs. Correct. If your cost will be 64 lakhs, which means what? You are not taking the credit, but you are adding this to your cost. And therefore, you will get a depreciation on this 64 lakhs, which means you are taking one benefit. That's it. Either any one benefit you have to take. Okay. What is the first benefit? Take ITC and adjust against output tax liability. What is the second item? Don't take ITC. If you don't take ITC, that will be added to the cost. If it is added to the cost, on that you will get depreciation. Correct? So this is the first point. You have to check whether for any tax or duties will you get any credit or not. If you get any credit, don't add that item. Don't add that item. If you don't get any credit, then we can add. If you don't get any credit, which means what? It is a non-refundable item. If it is a non-refundable item, you can add that in your cost. Okay. So here, purchase price including import duties. This import duties I will come little later. Plus non-refundable taxes and duties. Here only we can add that word or taxes for which credit is not available. These taxes also we have to add. Taxes for which credit is not available. Okay, these taxes only we have to add. Correct. Next, this import duties we will discuss little later. This is very normal thing. Come to here. Come to this point. What they are saying? Trade discounts or rebates. Here what discount they have only given? They have only given trade discounts only. Okay. Now you have to tell me what is the difference between trade discount and cash discount. Trade discount, cash discount. Even if you don't remember, have you at least able to identify that there are two types of discounts, trade discount and cash discount? Okay. No problem. I will take one example, then it will become easy. Here in our example only, how many units the customer have purchased? Tell me. 1 lakh units. Each item is how much? 100. Normally, if any person is there who is purchasing only 500 units, assume there is one other person who is purchasing 10,000 units, another person who is purchasing 1 lakh units. Now my question is, will the supplier quote the same price per unit for all these customers? If any person is purchasing 500 units, obviously per unit price will be different. If any person is purchasing 10,000 units, for him the per unit price will be different. If any person is purchasing bulk, huge quantity, for example 1 lakh units he is purchasing, per unit price will be different. For example, assume if any person is purchasing only 500 units, he will collect 100 rupees per unit. There is another person who is purchasing 10,000 units, so this person will obviously expect some discount. So this person have asked, I will only pay you 98 rupees per unit. Total will anyways change because there is huge difference in number of units, but I am talking about per unit value. Another person is there, he said that I want 1 lakh units. This person is said, okay, I will give you, but I will not pay 98 rupees, I will pay only 95. These type of discounts will arise because of the volume. First person is purchasing only 500, so there is no discount, he have to pay 100 rupees. Second person, he will purchase 10,000, but he will only pay 98 rupees. But there is third person, which he will purchase at 95, but how many units he will purchase? 1 lakh units he will purchase. Now, assume our person is purchasing these many units. Now you have to tell me. In invoice, if you observe, in invoice, like this it will be given 1 lakh units into 100. Normally he have to pay 100 lakh minus discount they will give.
How much discount they will give? 1 lakh into 5 rupees discount they will give. If you check, 95 is the purchase price, which means what? Sorry, 95 per unit it is. If it is 95 per unit, what is the discount which they will be giving? They will be giving 5 rupees per unit. So how much is the total discount? 5 lakh. In the invoice only they will mention this part. 5 lakh will be the value of discount. Then what is the total value? Tell me. 1 crore minus 5 lakh. So how much amount the customer will have to pay? 95 lakh that customer will have to pay. Now, here what they will again charge? They will again charge GST. They will again charge GST also. In your GST also you will learn that there is one chapter which is value of supply. In value of supply you will understand that this kind of trade discounts will be adjusted in calculating this value of supply. So same concept you will learn there also. Okay. So the purchase price is how much? 1 crore, but 5 lakh is discount. So net amount how much the customer have to pay? 95 lakh only. So supplier also, please don't pay GST on this entire 1 crore. The customer will only pay you 95 lakh for goods. So please collect GST also on this 95 lakh. Assume add the GST amount also plus 18%. Tell the GST. 95 lakh into 18%. 17 lakh. 10,000. So what is the total? 1 crore. 1 crore, 12 lakh. 10,000. Now, the customer will pay you how much? 1 crore, 12 lakh, 10,000. Okay, fine. So what we have understood now, okay, let's keep this very simple. Assume there is no GST also. Assume there is no GST also. What is the purchase price net of discount? I mean, what is the normal purchase price? Normal purchase price is 1 crore, 100 per unit. Discount value is how much? 5 lakh. Now you have to tell me what will be the entry which I have to pass. Assume this is not units. Assume this is PP. Assume this is PP. This is a normal discount. Normal discount, or you can write like this also, trade discount. Now you have to tell me what will be the journal entry which I will pass in my books of accounts. Along with amount also you have to tell me. Assume I have purchased in cash only. Assume in cash I have also made the payment also. Now you have to tell me what will be the amount, what will be the journal entry which I will write along with amounts. Tell me. PP account debit to bank or cash. What is the amount which I will write? That is very clear, because this 5 lakh will be excluded from the cost. Correct? So what will be the amount? 95 lakh I will pass. Assume if it is a credit purchase, then instead of bank, what I will write? I will write creditor or vendor, etc. Correct? So this is the treatment of trade discount. If any trade discount is there, what they will say is those trade discounts will not be included in the cost. Second type of discount will be there, and that discount is called as cash discount. Try to understand this also. Second type of discount is what? Cash discount. Sir, these cash discounts are generally given in order to encourage prompt payments. They will give like this normally. Whatever this 95 lakh is there, normally this person have to pay 95 lakhs to the purchase of that machine. But that supplier will say, in order to make that customer make the payments promptly means fastly, what they will do is, if you pay within 15 days, extra 2% also will be given. If you pay within 15 days, 2% will be given. Think like this. 2% discount will be given. If you pay more than 15 days, which means after 15 days, if you are paying, no discount. This is an example of cash discounts. whatever the cash discount which you will get, only based on your payment history only it will decide. If you pay within 15 days, you will get 2% extra discount. But if you pay more than 15 days, then for you no discount will be given. These kind of discounts will be called as cash discounts. Normally, what will be the amount which the customer have to pay? Ignore this cash discount. What will be the amount which the customer have to pay? 95 lakhs he have to pay. But assume the customer have made the payment after 10 days only. Plus 10 days the customer have made the payment. Now you have to calculate and tell me how much amount the customer will pay. How much amount the customer will pay? Will he pay entire 95 lakh or 2% discount he will get? 2% discount he will get. Now can you tell me what is the total amount? Have you got that? 95 lakh minus 2%. How much? 93 lakh 10,000. Another option is also there. You can directly write 95 lakh into 98%. Anything you can write. 2% discount he will get. Correct. Assume the person have made the payment 20 days after. 20 days after if he made the payment, how much payment he have to make? He have to make total 95 lakhs. No choice. This cash discounts will only be given only to encourage early payments. That's it. No more logics. So here what they will say is, if you write the journal entry, then you will understand. At the time of initial recognition, you don't know whether you will make the payment 20 days after or 15 days after or 10 days before or 5 days before. You don't know at the time of purchase. So what this standard is saying is, at the time of initial recognition, this cash discount should not be adjusted, because that cash discount is not directly related to this purchase. Whether you will get that cash discount or not will be decided only if you make the payment or not. So that cash discount is related to payment and not related to asset. So what they are saying is, even, okay, assume this is not the case. You have paid in the 10 days only, which means how much amount you have to pay? 93 lakh 10,000 you have to pay. Still this also, what you have to record is, first entry we will pass this only. There is no change in the amount, which means cash discount will not be adjusted. So what is the value which we have to record? 95 lakh. Sir, but why you have written 95 only? Why not we written at 1 crore? Because what is this 5 lakh which is there? Trade discount. If it is trade discount, it will be excluded. Correct. So I will pass the same entry. Assume if it is a credit purchase. So to creditor I will write. Now I am making the payment in the next 10 days only. So what will be the journal entry which I will pass? Tell me. Now I am making cash payment to the creditor. So what will be the entry which I have to pass? Tell me. PP. Yeah. PP is already there. Correct. Creditor is there, which is having credit balance. Now I have to cancel that creditor. I am making payments. So creditor account debit to bank I will write, or cash. How much amount I will pay? Tell me. How much amount I will pay? 93 ento rasaru kada indaka. 93 lakh 10,000 only I will pay. But my entire balance of 95 lakhs will be cancelled, because I will not pay in future to the creditor. Correct? So I will debit how much? 95 lakhs I will debit. 95 lakh I will debit. But bank, how much I am making payment? Will I make entire 95 lakhs? No. How much I will make? Only 93 10,000. But journal entry is not matching. What I have to write? To discount received. How much? 1,90,000 is the discount. Sir, where this discount will go? This discount will go in P&L account. Ultimately, at the end of year, all incomes will be transferred to P&L account. Okay, that is the treatment. If it is trade discount, it will be adjusted in the cost. But if it is a cash discount, it will not be adjusted in the cost. It will not be adjusted in the cost. What you will do? It will be charged to P&L account. It will be recognized as an income in P&L account. Okay, so any cash discounts, what is the cash discount treatment? Cash discount treatment, will it be adjusted in the cost? No.
Cash discounts, will it be adjusted in the cost or it will be treated as income in P&L account? It will be treated as income in P&L account, but it is trade discount, it will be adjusted. Okay. Here we can add another point also where we have written trade discounts. Cash discounts will not be adjusted in the purchase price. Cash discounts will not be adjusted in the purchase price. It will be treated as income in P&L account. It will be treated as income in P&L account. Okay. So first aspect we have understood. This is the biggest point. Other points are very, very small. If you purchase any asset, what is the value for which we have to record? We have to record that purchase price. But that purchase price should include import duties plus non-refundable taxes and duties will be added. If any tax is refundable, that will not be added. If for any taxes you will take input tax credit, that also will not be added. Minus what I will deduct? I will deduct trade discounts. I will only deduct trade discounts. What will not be deducted? Cash discounts will not be adjusted in purchase price. It will be treated as income in profit and loss account. Okay. See, these import duties are very simple. If you are purchasing from any country, what you will pay? You will pay import duties. Only remember one thing, import duties are always non-refundable. You will get refund of import duties also in your customs. You will understand there are many concepts like duty drawback, etc. These kind of concepts will be there. But if the question specifies that the person will get the refund of import duty, take. Otherwise, don't consider that point. Normally what we will assume, import duties are non-refundable. So if in the question they have given the word only import duties, what we will assume? We will assume this as a non-refundable. If it is non-refundable, then it will be added. If it is a non-refundable, then it will be added. But in the question they have specifically mentioned it is a refundable import duty, then don't consider that also. Okay, if they don't say anything, then what we will assume? We will assume import duties are non-refundable. If it is non-refundable, then only please consider that import duty in your cost. But if it is refundable, don't take this part. Okay, just go through this first point, whether we have understood this or not. We have two more points we will write now, but we will explain in tomorrow's class. Okay, purchased asset, it will be recorded at purchase price, including import duties, plus non-refundable taxes and duties or taxes for which credit is not available, minus what we have to do, we have to deduct trade discounts or rebates. Okay. Example no need to write, we will solve number of problems. But basic idea you have to remember. Why trade discounts will be adjusted? Why cash discounts will not be adjusted? Okay. I will try to repeat that point once again, so listen very carefully. Why these trade discounts are excluded is, we will not collect GST on this entire 1 crore. On what amount you will collect GST? You will collect GST also on this 95 lakh only. Another reason is this 5 lakh will be directly given in the invoice. If it is directly given in the invoice only, so why include? Don't include that part. But this cash discounts will not be given in the invoice. Because at the time of issuing the invoice, I don't know whether I will make payment within 15 days or after 15 days. Therefore, those cash discounts will not be given in invoice. That is the first reason. Second reason, you have to pay GST on this entire 95 lakh. Later, you cannot say to the department that I will pay only GST on this 93 lakh 10,000. That is not correct. In your value of supply also you will understand only trade discounts will be adjusted in value of supply calculation. Cash discounts will not be adjusted. This point will also be learned in your GST also. Okay. So same logic we will apply here also. Here also this point is, because of this reason also on this cash discount,
will not be adjusted in the cost of the asset. Okay. And these duties also, sir, why we have to adjust, why we have to take only non-refundable taxes is simple. You have only two benefits. First benefit is what? Take ITC and adjust against output tax liability. Second option is what? Don't take ITC. If you don't take ITC, that will be added to the cost of asset. If you are adding to the cost of asset, then what is the benefit which you are getting? You will get depreciation on that amount. Correct? So two benefits, either depreciation or input tax credit. Both you will not get. Okay? This is the basic understanding which we have to have. So we can write this as first point. A you can write. A point you can write purchase price including import duties and all. So second point also we will write, which is nothing but B. B we can write, we will discuss in tomorrow's class, but first we can write all directly attributable costs, all directly attributable costs which are necessary to bring the asset, to the condition and location intended by the management. This term you have to remember like this only. All directly attributable costs which are necessary to bring the asset to the condition and location intended by the management. C point also we will write now, but we will discuss in tomorrow's class. C we can write present value or estimate of decommissioning. You can write in tomorrow's class, we will understand. Decommissioning or restoration or other liabilities. Okay, so that's it. Only these three items will be adjusted in the assets if you have purchased. What is the first item? Purchase price. But what will be included? Import duties will be included. Other than import duties, non-refundable taxes and duties or taxes for which credit is not available. Only in the question they have given the word import duties. What we will assume? Whether we will assume them as non-refundable or refundable? Non-refundable we will assume. Next, if any trade discount is given in the question, will it be deducted or not deducted? Deducted. Trade discounts will be adjusted, which means it will be deducted. In the question they have given cash discounts. Will it be adjusted in the purchase price? It will not be adjusted. So what is the treatment for the cash discount? Cash discount will be treated as income in profit and loss account. After this purchase price, what is the second item which we have to add? All directly attributable costs which are necessary to bring the asset to the condition and location intended by the management. Same to same copy paste point will be there even in your AS10 also, if you remember. Same wordings will be there. All directly attributable costs which are necessary to bring the asset into the location and condition intended by the management. Plus, this is new point. Present value or estimate of decommissioning, restoration or other liabilities. This is very, very interesting. Completely new point. In your, I think in your financial management subject and even SFM also, you know how to calculate the present values, how to calculate the future values, how to calculate the present value of annuities, future values of annuities. I think you have understood, you have already know this basic points. But in accounting, I think in your intermediate AS 19 leases, other than this, I think nowhere we have used this, which is called as present value calculations. Correct? Nowhere in our books of accounts we will calculate the present values and we will calculate the future values, annuities and all. We will not do in our accounting. In your FM we will do, SFM also we will do. But suddenly this Ind AS love this word which is called as fair value or present value. These words are very favorite to Ind AS. Number of times we will see this which is called as present value and even fair value. These items will be repeated number of times. Okay. So in tomorrow's class we will understand how exactly to do the present value calculation and all. But what you have to do is, in case if you are having any difficulty in calculating the present values and all, please do at least some basic practice. Okay. I will not need even for annuities also. Very basic amounts I need. Single payment will be there. Period they will mention. Discount rate also they will mention. You just have to calculate the present value. That's it. If you are fine with that, obviously we can easily will understand, because explaining that how to calculate the present value is not possible. I think you already have understood in financial management also we have did, in SFM also we have did, but I will give the basic idea. Okay. So fine. So that's it for today. In next class we will continue how to calculate the present value and all, and what will be the accounting will be explained in tomorrow's class. Okay. So that's it for today. We'll continue in next class.